right? Now, I looked at all the constituents of the Nifty IT index, 10 stocks, and all 10 were higher, and the rally was anything between 3 and 7%. Honestly and frankly, I was scratching my head and wondering, well, what is going on? Because if you look at it, earnings estimates have changed only between 2, 3, 4%. That's it. I mean, there has been no large-scale big earnings revision. You heard the commentary from the TCS management, and that remains largely unchanged. I mean, they've said that FY25 will be better for FY24. They've said that for the last 2 or 3 quarters. And of course, they've also kind of maintained that, clients are focusing on high return on investment projects and kind of pushing back on discretionary projects. I mean, that also remains the same. But markets are markets. I mean, they tend to look at different things differently in different points of time. I think the big rally essentially is on the back of 3 things. One is under ownership in IT stocks. People are, of course, on the hunt for new ideas, which are, the list of those newer ideas is lesser and lesser as everything is done very, very well. IT is one sector which is not. The other one is, of course, is US rates. US rates is also a very big factor. And of course, I mean, there is hope that there will be some sort of, earnings turnaround, real business turnaround later this year. And I think that remains a hope, which is fine. But I think at the margin, the bigger underlying driver seems to be, the above 2 at this point in time. Just one other interesting bit, which sort of I found, that stocks of other global IT services companies, not listed here, but listed in the US, EPAM, Globant, Cognizant, they all rallied between 5 and 7%, 5-6% last week, right? I mean, over the last 1 month, they're all up between 10-12%. So this is, what we saw, of course, post the TCS earnings is perhaps also a rub-off on what's happening globally. I'll come straight to US data because, US rates, if they're a big influence, we've got to look at the data. Data has been supportive. I mean, jobs number, the CPI number, and you look at the PPI numbers on Friday. That's a core producer price index, and the Michigan inflation expectations both actually were softish. And that supports a sign, and that kind of is the market betting on the fact that Fed cuts are certainly coming. Of course, there is the July FOMC meeting, but we're looking at the September one where perhaps we'll see the first one. NASDAQ was up 0.6%. The 10-year yield was down 3 basis points. The dollar index was down about 1/3% as well. This is the change on Friday. U.S. markets have done very, very well. And of course, the setup across the board on dollar, etc., is positive here. We will hear, there's an interview which Fed Chair Powell will sit down for later tonight at about 10 o'clock tonight, Monday evening. And I think headlines from there will be watched in terms of especially the imminent July FOMC, depends on how much he wants to comment. Earnings in the US will also kick off, and there's about 8% of the S&P market cap which will be reporting. Just to circle back and finish this off in terms of levels, Nifty broke above the previous high of 24,461. For a while, we've kind of maintained that, you basically are looking at a higher equality level, which is 25,500. We'll see if you're on track for that. But you're essentially in blue skies, uncharted territory. Bank Nifty, it gave up the entirety of its intraday gains on Friday, which isn't a good look, which isn't great news in terms of sort of tracking this day on day. On the downside, the Bank Nifty should not break below 51,750. That's the first level. And of course, on the upside, a break above the high of 53,357 will confirm further upsides. And I'll just leave you with this data point on the India inflation. June inflation number, which came out Friday evening, shows essentially the need for a hawkish RBI and why the RBI governor in our interview as well essentially said that, we're not near the comfort zone and perhaps rate cuts, etc. needs to be. It'll happen, but of course, no timeline as such. Of course, along with that, you also had the IP, the industrial production numbers, which confirms that the economy remains in pretty healthy shape. Give Nifty up on your screen. It'll give you an indication about 84, 85 points higher is what the start is looking like. Sonia.
Oh, absolutely. And, this is a big, big week for the market, right? You mentioned that it is a truncated week, but there's so many cues to watch out for. So our eyes are going to be on that. Of course, this is the last trading week before the union budget on the 22nd of July. So that is going to be the big focal area for the market. But apart from that, this week we kickstart with a lot of Nifty companies reporting their earnings. There's Bajaj Auto that comes out with earnings tomorrow. There's Infosys on the 18th. There is Reliance that wraps it up on the 19th, which is on Friday, and then followed by the union budget on Monday. So it's a big, big week for the market. A lot of stocks in focus this morning as well. There's IRDA, which could really lead from the front after seeing a very strong AUM growth of 34% in Q1. And then you have large caps like HCL Tech as well as Avenue Supermarts that came out with their numbers. HCL Tech maintained its FY25 revenue guidance of 3 to 5%. So no major positive news, but no negative surprise either. And that's something that the street may definitely like. And Avenue Supermarts saw a good improvement in its gross margins, both year on year and quarter on quarter. So these are a couple of heavyweights that will be in focus. But for the markets, right, the Sensex and the Nifty are now up for the 6th straight week. So we have big gains under our belt. And there was large buying from FIIs on Friday as well. I mean, FIIs bought over 4,000 crores. We're getting additional support from the global markets as well. You have the Dow that hit a fresh all-time high on Friday, above 40,000 on the Dow now. Huge milestones hit over there. The Dow has in fact gained 6% in 2024 so far. But look at the move on the S&P 500, 18% rally in 2024 so far. So big moves coming in there. So all eyes will be on how this week shapes up, and of course large events to watch out for.
Well, that's right. The sense you got on Friday was that in fact, the Nifty is prepared now to move to higher levels, and maybe that range has moved a little bit higher. And now all eyes are on that mark of around 25,000, or the round figure that we're looking at, just a couple of percentage points away. So the bulls, they have their eyes set on that 25,000 odd mark. What do the FIs do? Well, they have been long. They continue to remain long. Close to around 16,000 of their contracts were added on the long side, and there was some mild short covering. It keeps the ratio more or less at that 80%, 20% long short ratio, the LSR ratio that we look at. Well, in terms of the absolute number, well, the FIs, they continue to remain net long, 3.3 lakh contracts on the long side. The clients, well, they have continued their short positioning at around 2.14% of 2.14 lakh contracts. But both of them have come off considerably from the recent high. But the reason I say that it appears this range has moved up because I'm looking at the options data. And remember that 24,450, 24,500, that was a bit of a resistance zone. Now, we did see a fair bit of addition at that particular level because the call writing seems to have moved up from around 24,400 to around 24,500 and 24,700 call out. So both of them were fairly active. On the downside, the put writing, 24,200 put was active. Now in Friday's trading session, we saw that base move up a little bit. 24,400, 24,500 put, both of them were fairly active. So the new range you're looking at is, in fact, the markets are likely to move a little bit up. The support, since we are seeing writing at around the 24,400 put, this 24,300, 24,330 mark becomes extremely important. While on the upside, the first level you're looking at is 24,650. And then because the 24,700 call is active, the 24,750 mark becomes important. The Nifty Bank, that's facing resistance at these levels. And I say that because in the last few sessions, we're going towards that 52,700, 52,800 odd. And from there, we're coming off the day's high. So you just pull up that chart, you'll see that the last few sessions, we've been visiting that mark. But the Nifty Bank, that holds the crucial number out here. Even in Friday's trading session, it came off close to 350 points from the high point of the day. So it needs to get past that 52,800 odd mark. The stock that I'm looking at is NBCC. Well, that's been in a bull run of its own. However, on Friday's trading session, it took a bit of a break. It was down close to around 2% odd, and it underperformed the Nifty a little bit. Now, importantly, it's crossed that 20 DMA, and it's trading comfortably about those levels. So was Friday's session a bit of a pause and it wants to resume the uptrend? Or is it in for a bit of a correction? Well, time will tell. But for the time being, that stock is going to be a crucial one because it's seen a big run and it took a bit of a break on Friday.
Okay, Nigel, thanks a lot for that. Well, let's move on and get you some opinion now. On the equities front, we kickstart with Chetan Seth of Nomura, who says that another soft US core CPI almost seals a Fed rate cut in 2024. He says significant rotation seen post-soft CPI release, and focus is now on whether the equity rally broadens out into laggards and value areas, at least in the very near term.
Okay, we have Samira and Chakrabarti of Citi, who says that higher than expected inflation, continued robust growth momentum, relatively easy financial conditions, and recent comments from the RBI governor prompt them to push back their first repo rate cut called to April 2025 from October 2024. He says with monetary policy expected to be based on forward-looking data, a shallow rate cut cycle of 50 basis points can happen in early FY26.
Okay, and let's also get you some money market views and tell you how you should approach the rupee this morning. B. Prasanna of ICICI Bank says a soft inflation print and weak jobs data in the US has triggered a broad-based correction in the dollar as an early rate cut in September is getting priced in by the markets. He says the Japanese yen recovered sharply from its lows on account of unwinding of carry trades, while the Chinese yuan and Asian currencies appreciated moderately. However, he says the rupee remained an outlier and hinged around 83.50 because of the lack of trading interest in RBI intervention against flows. He expects this trend to continue and the rupee to trade in a narrow range of 83.30 to 83.60 this week. And on the bonds, V. Prasanna says the bond prices globally saw continued momentum post softer employment data and lower inflation in the US and is now pricing in a 50 basis points cut in 2024. However, he adds local bonds remain cautious amid strong growth and a sticky inflation scenario. He expects consolidation to continue ahead of the union budget on robust demand and thin supply scenario. He expects the 10-year benchmark bond yield to trade in a range of 6.95 to 7.05%.
Well, we've got a lot of stock-specific action that we're tracking for you in our special Top 10 segment. For the time being, we run you through the list. We're looking at HCL Tech, Avenue Supermarts, IRDA, Oro Pharma, Cipla, Lupin, Piramal Pharma, Alembic Pharma, Suntech Realty, and PTC Industries. That's sort of a day where all the stocks will be reacting to positive news flow.
Okay, Jeffrey Dennis is independent emerging markets commentator. He's joining us now to take some questions. Jeffrey, good to have you with us here. Thank you for your time. You know, just a quick word on the presidential race in the U.S. and if the sort of attempted assassination of President Trump, what does it do to the race itself? I mean, elections are a little out, and markets have, I don't think, started trading that one way or the other. But what is your own sense?
Well, of course, it's a shocking development, which I think everybody should regret, and there's certainly a major attempt to try to play down some of the rhetoric that is going on post this assassination attempt. I think the net of this is probably it helps Trump in the polls as sort of, you know, if one can ever put this with respect to President Trump, ex-President Trump, a sympathy vote because of this assassination attempt. And also, I think if you look at Trump versus Biden, assuming Biden is still going to be the nominee, and I think the Trump assassination attempt takes a bit of pressure off Joe Biden short term to make his mind up about whether he's going to run or not. But I think the net is that the market would probably prefer a Trump presidency. And therefore, at the end of the day, this is probably something that does benefit the Republicans at the margin. And therefore probably is positive for the market. But I think the real issue here is this is a tragedy for the United States, a tragedy for the Trump family, and I don't want to make too big a deal of what the market implications could be.
Okay, absolutely. This is a big tragedy. I mean, the events that have unfolded are very, very unfortunate there. But Jeff, let's get back to tracking the markets because it's been phenomenal, the run that we've seen so far, whether it's in India or even in the US markets with the Dow hitting that 40,000 milestone. You've tracked emerging markets for the longest time. How do you see all of this playing out? Is it still, is the risk reward still in favor of investors to invest at this point in markets like India?
I do believe that's the case with respect to emerging markets. I think I've said on this channel before that one of the extraordinary things about this year is how the whole of the increase in the market, in the index, the EM index this year is down to two countries, Taiwan and India. And therefore, we really haven't had a broad-based emerging market rally. If you like, it's our version in EM of the Magnificent Seven in the US, although we're talking here about countries and not just individual stocks. Now, as we head down towards a Fed rate cut, and clearly now one is on the table, I think, for September, and I expect a second rate cut in December, that is going to continue to pull the dollar down at the margin, and that's going to push money out towards the emerging markets generally. So I'm not sure India would be the major beneficiary here because it's had a good run already, although I do like the story. But I think these events as they play out with respect to interest rates and a slightly softer economy are very positive for emerging markets, assuming the dollar continues to drift lower.
All right. Hi, Jeff. Good morning and good to see you. And you have said in the past as well that India is preferred over China. Now, if President Trump is going to make a comeback, it could make things a little bit more difficult for China. In that sense, on the equity market perspective, does it make China even more uninvestable, so to call it? We had the Q2 GDP print that came in, And irrespective of all the stimulus and all the talk, it still missed estimates.
Yes, the Chinese numbers are frankly still poor, and they're really making a very poor effort, I think, in trying to broaden growth out from exports, which remain strong, and investment towards the consumer, which is really what they've got to do as time goes on. Now, given that the focus here of growth in China continues to be mainly exports, when the Chinese economy is flooding the market, flooding the global markets with cheap production, which are products which are often being subsidized by the Chinese government. This is why the US and indeed other parts of the world, the EU, are concerned about Chinese imports and the potential, therefore, for there to be more tariffs. And so I think if Trump were to win, I think you'll get more tariffs. I think if Biden were to win, I think you may get more tariffs as well. It'll just be a more aggressive trade policy for ex-President Trump to win the election in November. Bottom line here is, despite this vast gulf in valuations between India, which is quite expensive, and China, which is quite cheap, the case is still much better, I think, for India over China, not least because China has not done the right things yet to get its growth going again on a sustainable basis, driven by consumer spending for the long term.
Okay, Jeff, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts. That's the word coming in from Jeffrey Dennis, independent emerging market commentator, and his views on how to approach the markets. Let's slip into a quick break. On the other side, our list of top 10 stocks is lined up. Stay with us.
Invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going testing.
Welcome back to Bazaar Morning Call. With the markets at record highs, all eyes will be on whether we can see some follow-through buying on the upside. The Nifty implied opening suggests a big opening this morning, up almost 90-odd points. And it's a big week. It's the last trading week before we head into the union budget. But we have lots of stocks to talk about, so let's get straight to it. Our research team is joining in with a list of top 10 stocks. Reema's here first up to tell us about HCL Tech and how the numbers look. Reema, over to you.
So, you know, HCL Tech's numbers are slightly ahead of street expectations. Revenues have fallen by 1.6%, but the street was anticipating a 2% decline. The reason for the revenue drop is because one of their large projects went offshore and 2 annual productivity benefits get passed on to customers. Margin decline of 50 basis points too was slightly ahead of street expectation. But remember, the stock had run up on Friday with that monster, IT rally that we had on Friday. So perhaps some of the good news is priced in. And 2, the profit beat is courtesy of one-off other income. So profits went up 6.8%, but it's aided by an other income. The company's maintained its full-year revenue guidance of 3 to 5%. They've said Q2 will be a growth quarter. They've also maintained full-year margins of 18 to 19%. The brokerage view is mixed. CLSA downgrades, but Motilal Oswal says HCL Tech is their top pick, kept a target price of 18.50. Nomura raises EPS estimates.
Thanks a lot for that, Reema. Well, in fact, we'll get a conversation going with the management of HCL Tech on the Q1 numbers as well as the outlook at 9:30 a.m. later today. Well, the other set of numbers that came out over the weekend was DMart. The valuation-wise, the stock is not cheap, but the numbers look pretty okay, I think. Mangalam, tell us more.
Well, no problems with the numbers. In fact, some of the internals are actually quite strong. For DMart, we already knew what the standalone revenue growth would be. So the key thing that everyone was looking at in terms of numbers were the gross margins. And there, there has been an improvement both year on year and quarter on quarter. The company said that the product mix has increased as contribution from general merchandise has increased as well for them. So that's important. The EBITDA, however, the margins were limited largely because there were higher employee costs and other expenses. And DMart Ready, that's the second thing that we were watching. How is the online business doing? Out there, the revenue growth was 27%, and they saw a mild break even on the EBITDA as well. So overall, revenue growth of 18.5%, EBITDA growth of 18%, margins at around 8.7%, and the net profit grew at around 18% as well. And the company said the operating costs have largely gone up due to continuing effort on improving service levels and building capabilities for the future. The only thing that the street will eye now is the pace of store addition and the rate at which the company keeps on opening new stores. So that's something we'll watch out for. Improvement in gross margins is good, and the fact that they are spending on improving service levels and building capabilities is a positive as well. See mild green today because the valuations limit much upside on DMart right now.
Okay, thanks a lot for that, Mangalam. Let's go across to Ekta now. She's tracking Aurobindo Pharma, Cipla and Lupin this morning. Ekta, over to you.
Thanks for that. Well, I'll start with Aurobindo, which is in focus because they will be considering a buyback on July 18th. They have a gross cash of around 6,500 crores on their books, net cash of around 150 odd crores. Analysts say that the buyback is because, their Pen-G capex is now complete. But they're speculating that the quantum of the buyback won't be too much. It could probably even be limited to around 1,000 to 1,500 odd crores. Cipla, their Kurkum facility is classified as a VAI, voluntary action indicated, was inspected by the US FDA in May, and it was a routine inspection. Expect that stock in the green. Lupin, their Dabhasa facility in Gujarat has received an EIR from the US FDA, and the plant was inspected from April 8th to April 12th with no observations. It's used for API and CDMO operations.
Okay, thanks a lot for that. So Aurobindo, Cipla and Lupin in focus. Aurobindo considering a buyback as well. But there are some more pharma stocks that you're looking at, Ekta, this morning?
Well, yes, I'm looking at Piramal because the US FDA conducted a pre-approval inspection of their Ahmedabad facility, and that was completed with zero observations. Expect the stock to be in the green, and they have received a no action indicated status. So things are all clear for them. Alembic, they've received a tentative US FDA nod for Uptravi generic or Selexipag, which is basically an injection used to treat high blood pressure. Company says they're the sole first applicant and could be eligible for 180-day exclusivity. Could expect the stock to be in the green. But remember that it's a tentative approval that they've received.
All right, Ekta, thank you very much for that. IREDA first quarter numbers. Abhishek is here with detail. Abhishek, morning.
Well, Prashant, it was a strong AUM growth. However, operationally, it was a weak quarter with reference to PNL. And, provision write-back has aided the PAT this time around. So, AUM growth was at close to 34% YOY and about 6% sequentially. Quarter-on-quarter gross NPA ratio has improved to 2.2% versus 2.4% in the previous quarter, and net NPA ratio has also improved to 0.95% versus 0.99% in the previous quarter. Net interest margin has expanded both YOY and quarter-on-quarter, so 3.29 compares to 3.23% in the same quarter last year and about 2.85% in the previous quarter. So the NII growth is at 37.5% YOY and about close to 5.5% sequentially. However, the operating profits have declined by a massive 8.9% quarter-on-quarter. There is a provision write-back of about 30 crore this quarter, which compares to an expense of about close to 9-10 crores in the previous quarter. So PAT is up 30.25% YOY and about 13.7% sequentially thanks to this provision write-back. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Sonal, who's here to tell us about Sunteck Realty. They're an update out there. And PTC is looking at raising some funds. Morning, Sonal.
Good morning, Nigel. Let me start with Sunteck Realty. 2 consecutive quarters of good performance in their pre-sales. It had been lagging so far, but this time around, pre-sales are up 30%. Their collections have gone up by 19% as well. And it's a sequential recovery that the company has seen in terms of collections as well. For PTC Industries, they will be raising 700 crore rupees. This is via QIP. The board approved it over the weekend. So these 2 stocks will be on our radar today.
Okay, thanks a lot for that. Well, here's a quick recap of our top stocks. Stocks with positive news flow: HCL Tech, Avenue Supermarts, IRDA, Aurobindo Pharma, Cipla, Lupin, Piramal Pharma, Alembic Pharma, Sunteck Realty and PTC Industries. While there are no stocks on our radar with negative news flow, but Manisha Gupta is joining in for a roundup of all the action from the commodity markets and all that we've seen overnight. Manisha, good morning.
Well, thank you for that. I'll start with the crude oil prices, where we have seen prices decline. Commodity has actually have gone into a bit of a profit taking, as we saw in the previous week, and the start of this week is no different. So after 4 weeks of gains, the crude prices fell more than a percentage point in the previous week, and that is what you are looking at in the markets right now as well. But, having said that, JP Morgan, Citi, and Bank of America, all these banks believe that the crude oil prices are headed towards $90 a barrel in this quarter, given the backdrop of hurricanes and interest rate cut expectation, and the fact that you could be looking at a deficit in case of crude in this quarter itself. Having said that, the metal prices, they have started slightly on a positive note, and this is after China industrial production data. Export numbers have come in on the stronger side, while of course the second quarter GDP numbers have come in slightly on the weaker side. But even with that, most of the metal prices, including copper, zinc, iron ore, steel, silver even, have started Asia slightly on a positive note.
Okay, thanks a lot for that, Manisha. Well, let's do one thing. Let's take a quick commercial break. On the other side, market expert Prakash Diwan will join in to discuss fundamental stock analysis. We'll also be joined by Prem Kishan Gupta, the Chairman and Managing Director at Gateway Distriparks, to discuss their business outlook. Stay tuned.
Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now. As per the recommendations of the Bimal Jalan Committee, we have an economic capital framework. It is principle based, it is formula based. There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan Committee. We follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the, let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the Central Board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
The retail participation has been something that everyone's been appreciating, and personally as well, most of your money goes into SIPs, which we believe that over a longer span of time, well, it'll hold well. The only fear is retail getting into a bit of a trap, and that's the fear. Welcome back. You're tuned into Bazaar Morning Call. Well, we've laid out all the stocks that need to track, but let's get some more fundamental analysis going. Prakash Diwan, market expert, who joins us on the show. Hi, Prakash. Good morning. Hope you had a great weekend. Plenty of sporting action as well. And as we speak, the Copa America as well is on. So that final, Argentina taking on Colombia. Let's see what's the outcome. As of now, it's pretty much even Steven at 0 apiece. But let's talk about stocks. The tech space had a beautiful run in Friday's trading session. HCL Tech participated as well, and the numbers looked a little bit better than what the street was working with. What do you do with the stock right now? Some part of that good news is in the price, but view on HCL Tech and preference in the tech space.
Good morning, Nigel. Thanks for the warm welcome. Yeah, of course, the UEFA has kept us awake till quite late, so but we're all set for the day, and I'm sure this is going to be a very interesting day and a week ahead, as Sonia said rightly at the beginning of the show. For HCL Tech, very clearly, all the good news, all the move in the stock was actually thanks to the TCS numbers. The moment TCS flagged off that turnaround, the whole this thing of semblance of some sort of green shoots coming back, all these stocks rallied, and HCL Tech did most of it on Friday itself before the numbers. Now the numbers come through, and you realize that it's all absolutely as the management has indicated earlier, whether it's margins, whether it's revenue growth. There's nothing which is out of place in that sense, even on the upside. Of course, if you look at the profit numbers, it's that JV with the State Street, they say exit that probably brought in that one-off thing. But from here on, I think HCL Tech, given its past track record, will continue to keep finding newer ways to grow and, of course, make it profitable. Whereas the likes of TCS and Infosys will probably have a very steady state growth as compared to HCL Tech. So to answer our second question, what are the top picks? I would still go with an Infosys and Wipro in this space because, of course, the numbers are still awaited. But the point is that if there is a turnaround in order booking, which is finally happening in some sort of softer way than anticipated, it will benefit the ones which are more resilient. So given the fact that Wipro has also moved ahead, Infosys probably stands a better chance at some sort of a reset the way TCS did. But HCL Tech is something which I won't be very excited about. Today, you probably see some sentimental green, but then people will set their eyes on the newer names or the other names which are anticipated in this week's numbers. So good numbers, but won't get too excited about it as yet.
Okay, won't get too excited about it. Got that. What about Reliance? Comes out with numbers on Friday, and this time around, the entire telecom basket is going to be definitely in focus because of the tariff hike, etc. But ahead of that, would you buy Reliance?
Good morning, Sonia. So Reliance is something which it's very endearing to understand the business finally getting into a stage where it's not just firing on all cylinders, but it's kind of revving up for the next level. Whether it's retail, whether it's telecom, as you rightly said, whether it's the O2C business, which was, let's say the last quarter or two has been a bit soft, hasn't been really talked about much. But my sense is that given the dominant position that it is now having on a global scale and not just the domestic markets, Reliance will see some sort of a re-rating. And then you finally are getting, with every quarterly numbers, you're getting close to the new energy business getting to take off. And if that's the state, so you've already seen a pushback of the aircraft, and now it's kind of come on the runway. Sometime it's going to announce that takeoff. And when that happens, Reliance will kind of give you that bump up, which is a re-rating, which is from the fourth business vertical. So my sense is at this level, you don't have much to lose. If there are positive triggers in terms of announcement closer to the AGM as well, you'll probably benefit. So if the numbers are okay, I think the market will see some follow-through buying in spite of this run-up that we've seen in the last month or so. But I would definitely recommend that to be a long-term hold in the portfolio. If people don't have it yet, it's still not too late. You could still buy into it with at least a 2-3 year horizon from here on.
Prakash, hi, morning. There's so much rotation which happens, right? People rotate it into IT. I was saying in the morning that IT is, the big rally, minor upgrade, EPS upgrades, but big stock rallies. Maybe it's, but Infosys is on Thursday. Maybe, that will, and if there is a big surprise there, then, the rally will look a little justified, because to me, it seems a little maybe overdone, but stocks are under-owned, etc. There are other technical factors at play. But just a quick word on what other sectors, Prakash, will shine this week that you think will be in focus, stocks or sectors, pockets,
Good morning, Prashant. No, so that's a very interesting point. While numbers will be center stage on a day-to-day basis, from a pre-budget positioning, I think the market's very clearly seeking newer areas that also offer you some sort of a valuation comfort. And the first sector that I notice here is shipping. If you look at the activity, and we spoke about this about a month back when I was talking about how the anticipated push on the maritime sector by the government is going to make such a big difference. So whether it's port operators, whether it's companies that facilitate that, whether it's shipbuilding companies, shipping lines, you name it, and this entire value chain is something which, look at a slumbering name like GE Shipping in the last 1 month. See what response you see, and the shipbuilders, which is Cochin and JRSC and Mazagon, they have been predominantly focused on defense contracts, but there's lots that can happen on the commercial side as well, and they will of course get a piece of that pie. But my sense is shipping is one sector that you could deep dive and figure out a lot of things that are happening, whether it's container freight stations, logistics operators around the shipping ports. So there's quite a bit happening. The second sector, Prashant, again, this is in anticipation that the government will come up with something to buttress the earnings potential of the farm sector, the agri sector. You will probably see a comeback, and the monsoon has been fairly okay in spite of the late start or a little bit of a stop and go kind of a start. My sense is the likes of Escorts and all of those, if you look at stocks which haven't done well, participated as yet, and have the right potential to do it. So with Kubota coming in, I think it's a full cycle that they've gone through in terms of product innovation. And that entire reset on the product mix, the kind of distribution strength that they've built over the last year or so, I can see very clearly those things kind of moving in a very significant trajectory. So you will have some re-rating from some of these names. But of course, then you have your regular stuff in terms of textiles and all of that. But then those are conjecture. I haven't seen any specific push from any of these. So maybe the railways continue to benefit. Maybe the power sector continues to benefit. So you will start seeing the budgetary anticipation build up in this week, probably post Wednesday. Wednesday is the day off, but Thursday, Friday would probably be very key for the pre-budget kind of a position.
Okay, well, we'll just come back to you in a bit. We have a management joining us now, Gateway Distriparks. The stock has seen a good run in the last 1 year. It's over a 50% surge. To discuss the company's business momentum, growth outlook, expansion plans, we have Prem Kishan Gupta, who's the Chairman and Managing Director at Gateway Distriparks, joining us now. Mr. Gupta, good morning and thank you so much for joining us on the show. I want to first start by just asking you how the volumes were in Q1. What was the growth that you saw in your volumes? And overall, what are you guiding for the full year? That's for FY25.
Yeah, good morning, Sonia. Thanks for having me on the show. See, the volumes are a little bit subdued. If you compare it with the previous year, Q1 and Q2 of financial year 24 were on the up, whereas the decline started from Q3 and it accelerated in Q4. And the first 2 months in Q1 also we saw some slow, low volumes. But June and July are giving them some hopes to build up those volumes. There are multiple factors. One is the Red Sea conflict is compounding, and the containers shortage and the freight rates has dampened the EXIM business. But hopefully things will revive now that the elections are over, the budget is going to come. So we expect that logistics sector will be given some boost, and the spend on the infrastructure, mainly the DFCs, which are part of which are incomplete as of now, would be completed. So we look forward to some increased volumes in the coming quarters.
Mr. Gupta, when you say volumes were subdued, can you just quantify that for us? I mean, was it in 5-6% range? Was it less than that? And for the full year, do you think you can eke out double-digit volume growth, or does that look tough as of now?
Well, if you compare the last year volumes, the volume in Q1 is down by, say, roughly 5%. But as I said, that we see some early growth in the business scenario now that the stable government is there, and new policies, and as I said, the budget, everyone is waiting for that. So overall, I mean, we are evaluating. Q1 has not been good, so but we hope that we will be able to catch up if the macros improve.
All right. Hi, Mr. Gupta. Good morning and good to see you. And Nigel on this side. The street is looking at the valuation debate between Concord is re-rating. Should Gateway Distriparks re-rate and narrow that bridge? So that's going to be important, and that volume number is going to be crucial. But post your numbers, maybe we'll get a little bit more out of you on that aspect. The other big deal that was announced just in the last 1 month was, JSW Infra has gone ahead and bought 70% stake in Navkar Corp for around 1,000 crores odd. How does this change the competitive intensity for a company like yours?
Well, good morning, Nigel. See, it does not change, because Navkar sale is, of course, there is some CFS business and 1 or 2 ICDs in Gujarat. But it is a real estate game. I mean, they have a big piece of land which is valued around that much. So basically, the valuation of the business is much less than the overall figure that you see, which has been announced. So it does not make any change. I mean, the operations are handed over to one operator to other operator. So it does not really make any change.
All right, and just to confirm, going back to the volumes number for the first quarter, you said it was 5% lower on a year-on-year basis? There was a degrowth?
No, if you look at the overall year-on-year basis, then it will be more. But I was talking about the average of 24. Q1 was extremely good last year, but we are talking about from Q3, the volume started declining.
No, I'm saying quarter one of this fiscal year versus quarter one of last fiscal year. What was the change?
Oh, it will be in double digit.
Double digit, okay. So on a year-on-year basis, a double-digit growth on a year-on-year basis or double-digit degrowth? Degrowth, right?
About 9 to 10% degrowth. Yeah.
Degrowth because of the EXIM, exposure that you have. Most of your volumes are towards EXIM, so that could explain that. Just a quick question. Since you mentioned, there are various buyers for the CFS business in the market. Have you engaged with anyone? Because you have put out that strategy clearly. That rail you want to focus on, CFS you gradually want to dwindle down. So are you in conversation and how do you see this panning out?
Yeah, so we stick with our version, that CFS business is going downhill. So we are in talks with some operators who are interested in the CFS assets. So we'll be definitely, we are not close to any deal, but that is what our focus is right now, to monetize the CFS assets and put it in rail.
Mr. Gupta, hi, morning. Have you spoken to JSW Infra?
Good morning, Prashant. No, we haven't spoken to JSW because they have already taken the position in Nava Sheva, and we are talking to some others, not with them.
And what could be, by when could we potentially see something, I mean, the outlines of a deal? The next quarter, 2 quarters?
Yes, I mean, we can see something in the next 2 quarters that some assets are monetized, some piece of land as well as some CFS.
And in terms of value realizable, in the ballpark, could you give us a sense?
See, it depends if someone is interested in the whole business, means CFS business, or we have also offered some people, a particular location. So we value our overall CFS valuation, if we monetize everything, it will be close to 1,000 crores.
Okay. That's for the CFS business. I wanted to ask you about your plan for growth in Snowman Logistics, right? Because you are working towards increasing your stake in Snowman to 50%. How are we over there, and what kind of growth do you see?
Well, Snowman, the growth is really good. I mean, it is in excess of 20%. And we have some new projects in pipeline, which will be operational in Q2 and Q3. So every quarter there will be some addition to the existing capacity that we have. So Lucknow would be ready, say, next month. Similarly, we Calcutta capacity we are increasing, and that should be operational in Q3. And there are some other dry warehouses that we are, offering to the same customers, and the 5PL business of many companies like Tim Hortons or similar companies. We clearly see a growth.
Okay, all right, Mr. Gupta. We'll look to revisit some of these numbers post your quarterly numbers. I recall you had given us that guidance of EBITDA per quarter scaling to around 100 crores or more than that. So we'll focus more on numbers post your quarterly update. For the time being, we thank you for joining in and giving us a sense about how business is shaped up in the first quarter of this year and how things are likely to shape up from here on. Let's get back to Prakash Sivan. Prakash, we have spoken about this in the past. Gateway Distriparks actually has underperformed Concord just in the last few months. But if you look at it on a longer term, if you look at it, say, on the 18-month horizon, actually Gateway had seen some bit of a re-rating, and there is a valuation cushion as well out there. Your take on it?
Absolutely. I think, the valuation comfort that you have when you buy Gateway Distriparks, similar business, of course, very, very small scale as compared to Concord. But it gives you the comfort that this company has all the right ingredients to kind of be able to scale up. They've been a bit probably distracted with this acquisition and trying to normalize something which was another area of logistics for them as compared to what their core competence lies in. But if I read between the lines, it's very clear that they are looking at monetizing some of the non-core assets in their parent business to make sure that the new business is supported with more capital allocation and accelerated growth. So if that were to happen, I think you'll probably see it play catch up. Concor has risen for reasons which are not just operational, but it's more of the premium that it attracts, the scarcity premium that it attracts Nigel. So I think it's primarily because of that, but I would still believe Gateway Distripark offers far better comfort on valuation, and you could probably still see some upsides if the numbers start kind of scaling up as anticipated, which they could. It's not something which is a big ask according to me. So quite positively disposed to this thing.
Okay, let's do one thing. Let's take a quick commercial break. Up next, we have Mitesh Thakkar and Sudarshan Sukhani joining in for some technical trades, so do stay tuned in.
The retail participation has been something that everyone's been appreciating, and personally as well, most of your money goes into SIPs, which we believe that over a longer span of time, well, it'll hold well. The only fear is retail getting into a bit of a trap? And that's the fear, but that's been the case as well. If you look at the SIP numbers, well, beautiful looking numbers. In the last 6-7 years or so, that retail number, the SIP number that you're seeing has moved up from around 3,500 crores all the way to around 21,000 crores, which is very, very encouraging, up close to around 6 times odd in 7 years. As a proportion of the total free float, Motilal Oswal, they have put out this note, which they have titled the Retail Rhapsody. And they have highlighted that, as a proportion of the total free float of Indian market capitalization, the DIs and the retail, well, their holding has gone up substantially from around 55% all the way to around 63%. Not just their holding, but even their participation has gone up, quite a bit. So in the last 10 years or so, the non-institutional participation has gone up from around 38% to around 52% or thereabouts. Some on the street would say, well, that's a little bit scary, but those are the data points that's put out by Motilal Oswal. You have the FI flows, they've been quite volatile, and that's been the case. If you look at the monthly flows, the FI flows, well, they've been all over the place. But the encouraging part is the DI flows. And in the first half of this calendar year so far, you just take a look at it, well, the DI flows at the half-year mark are more than what we saw in the entire of last year. So the DI flows have been the key reason that have been driving this market higher. Since we have the retail support, the domestic flows as well, that's led to a relative outperformance. And that's why, the weightage on the MSCI
Welcome back to Bazaar Morning Call. So we have, about 10 minutes before the pre-opening rates kick in. Good time to invite Mitesh Thakkar and Sudarshan Sukhani on the show. Gentlemen, morning to both of you. It's been a dream run for the market. Do you think that this is something that can continue? Sudarshan, let me begin with you. What's the best strategy for the week and for today?
Yeah, good morning. Well, I'm delighted. On Thursday, I had suggested that the Nifty is ready for new highs, not necessarily on that day, but very soon. And the market has obliged us. Once we are into new highs, we can expect an index like the Nifty to continue in that path. So the trade for today, as well as probably for this week, is to buy every dip. And for positional traders, just hold on. For intraday traders, exit on rallies and then look for a dip again to go long. This is a market where you only want to go long. Keep a 150-point stop from the opening price and find an opportunity. Buy call spreads, or buy whatever ETFs, whatever you want, but go long in the Nifty.
Go long in the Nifty, all right. Well, that's a good way to put it. Buy whatever you want, but go long. Is that the kind of market we're dealing with, Mitesh, where, anything and everything that you buy, will largely be on the upside? And if yes, what's the best way to approach it now?
Broadly, I would agree to it. I think, the only short positions which we have taken in the last few weeks, and especially in the last 1 or 2 weeks, is on the PSU banking side. We have seen Bank of Baroda, Punjab National Bank, Canara Bank get into a corrective mode. But broadly, it's a market where trading long has been rewarding as the Nifty continues to make new high. Now what I'm observing is some kind of a sectoral change from banking. I think IT is taking over the baton, and now would be a primary driver in the up move in the Nifty. So traders, swing traders must focus on IT stocks, stocks which are giving breakouts or positive crossovers. I think that's where the focus would be. And for the Nifty, the near-term targets are 24,800, 24,950. And maybe, we'll look at levels beyond that, depending upon how the bank Nifty movement shapes up. But for the timing, I think we are clearly biased on the upside.
Gentlemen, morning. Mitesh, what would you trade in terms of individual names?
I have all buy calls today, Prashant, and as I said, IT is the sector to focus upon. I have two IT names. Infosys is a buy with a stop at 1680 for targets of 1785. Disclaimer, I have some call options positions, so there is vested interest. And Coforge is a buy with a stop at 5,900 for targets of 6250. A buy on Manappuram with a stop at 219 for targets of 236. The stop made a fresh high after consolidation. Very strong charts here. And Dalmia Bharat is a buy with a stop below 1900 for a trading target of 2000.
If you wanted to sort of take that long through options, Mitesh, what is the best way? On IT, Infosys, yeah.
Yeah, so I have, as I said, I think, I have Infosys. I have other stocks where I have long option positions as well. And I think buying at the money options for most of these stocks could do well. I think all these stocks are now showing signs of a trend which has been there in force for the last few weeks and is still showing signs of continuation. So I think IT would be definitely one of the sectors where I would want to buy at the money call options.
Okay. All right. Infi, of course, numbers on Thursday. So we'll see if Infi can surprise the street in a very positive way as well. Sudarshan, morning. What would your trades be?
Well, we are watching the same charts, me and Mitesh. I also have these ID stocks. LTI Mindtree is a buy with a stop under 5,400, and Coforge again for me also is a buy with a stop under 5,800. I also have Page Industries. It's a high value stock, but if you can and if you're looking for an opportunity, this is it. Consider buying it with a stop under 39,000. And an interesting idea is Z. Z-Tele. Z is a buy with a stop under 348. It's a buy on dips opportunity. Let's see if that works out. But primarily he's right. Mitesh is right. Focus on IT.
Okay, the focus is on IT. Got that. That's Sudarshan Sukhani and Mitesh Thakkar. Chandan Taparia is also joining in, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, hi, good morning. So the focus is definitely on IT, and you have Infosys coming out with numbers this week as well. Tell us, how are you feeling about the market overall, and what's the best way to approach it?
Good morning, Sonia and Prasant. Thanks for having me. So Nifty Index has been making high tops, high bottom, and index continuous winning streak for 6 consecutive weeks. Supports are gradually shifting higher and every small decline is being bought. So we believe that this momentum could continue until Nifty holds above 24,250. We advise to continue with buy on decline stance for a next leg of rally towards 24,750 to 25,000 zone. Looking at the data setup, we have seen rise in the put call ratio. The volatility index is falling down and the base of the market is shifting higher with hold of key moving average, which clearly indicates that bulls are having the dominance in the market. Now, talking about the Bank Nifty index that has been consolidating, we have seen slight underperformance, but the good part is that it managed to hold support of 51,750. So it needs to hold above 52,500 zone, then only the bullish stance could be there. So Nifty is holding well. Bank Nifty needs to see some follow-up action to support the broader market. Now, looking at the stock-wise, we have positive stance on the Nifty IT, and this index has been making high tops, high bottom with sustained buying interest. We have seen huge built-up of long position with put writing. Momentum is clearly visible in most of the IT name, and we have positive stance in Infosys, TCS, Coforge, Bsoft, HCL Tech. But here we would like to recommend go long on persistent system. One of the strongest chart. It has seen a breakout from its pole and flag pattern. Long built-up is clearly visible. So recommending to buy on persistent with support of 4,700 and looking for an upside target till 5,050 level. Second trading area, there is buy on Grasim. One of the strongest name in the market, holding well, respecting to its key moving averages, given a fresh breakout at the lifetime high zone. So recommending to buy with its price target of 29.70. One can keep the support of 27.90 for the long position. Last trading area, there is buy on Reliance Industry. Sustained buying interest we have seen. The stock has been respecting its key support of 3100, 3130 zone. We have also noticed the put writing and a small follow-up could lead the stock to higher zone. And I think momentum in the Reliance can take the index towards 25,000 as well. So recommending to buy Reliance with support of 3135 And here we have a target towards 3,300 to 3,330 zone.
Yeah, all right. Lots of IT between Mitesh and Sudarshan and Chandan. Chandan, good to speak with you, and thank you for those trades today. So activity certainly in the IT services space. We'll take a quick commercial break here. We are back with a pre-open session. We'll also have Abhishek Kumar at JM Financial to focus on IT results, what's come out, and of course what's ahead of us, and whether stocks are rallying based on hopes of a turnaround, or is it more to do with under ownership and other factors. Stay tuned.
From the mid-single digits all the way to around 19%, because when the markets move up, higher market capitalization, that's resulting in a higher weightage. The problem is, the question that people are putting out is, are retailers getting into a bit of a trap? At least as of now, that narrative that India's retailers, well, they buy at the top and they sell at the bottom, well, that's not yet happened. So as of now, it appears that that saying is actually reversed, and this time around, they could possibly get it right. The only problem is two factors. We've been talking about PEs and other data points. Just want to highlight India's market cap to GDP. As of now, it is at a relatively higher level if you compare with what we have seen on average of around 85%. So that's one data point. And the other one is the outperformance of the broader markets. Whether you look at the mid cap, you look at the small cap space, well, that's been where the big money is. And that's over a 5-year horizon that I put out these numbers. Well, in the shorter duration, that's in the last 1 year.
Okay, welcome back. 2 minutes to go for the pre-open session. We talk about the US inflation numbers and how that's sort of trending lower. But here in India, we got a bit of a slight surprise as compared to market expectations. Indian June CPI came in higher than the CNBC-TV18 poll. The number was 4.94%. The actual number was over 5%. My colleague Lata is joining in. Lata, does this justify the need for a slightly hawkish RBI?
Well, the Reserve Bank governor did indicate hawkishness, and I think perhaps they had some preview, some idea that the June inflation is going to be a bit nastier than people are prepared for. 5.1, our expectation was, our poll was 4.94, but on the street there were even polls of 4.8 actually. So 5.1 quite clearly is a surprise. It's a 4-month high if you want to look at trends. But the culprits, largely vegetables, 14% higher month on month. Shouldn't come as a surprise to any of us. We've all paid 120 rupees for tomatoes at least, if not more. The prices of onions, potatoes also higher. So 14% month on month and 29% year on year. It would be okay if this were the only culprit because this is a normal monsoon affair. But pulses and cereals are also higher, both month on month and year on year. And I must particularly point out pulses 16% up year on year. Cereals have a very big weight, and that's nearly 9% up year on year. So all this has made the food inflation up about 9.3, if I'm not mistaken, up year on year. And that compares with an already high 8.69 in May. One was expecting it to recede after the hot summer months. But if anything, food inflation has gone up. Now, core inflation has come in at 3.1. It's marginally higher if you in decimal point version compared to what it was in May. But it is going to get a little worse, which is not bad. I mean, you don't want core inflation to fall too much because it shows that there is no demand. But it's going to go higher because of telecom tariffs. That's not entirely, absorbed in the June inflation, but it will come in the July inflation. Some 15 basis points is the impact on the entire CPI, according to economists. Now, what this has done is it's made most brokerages, like especially Citi and ICICI Securities, PD, say that there are no rate cuts at all in 2024. And more, there are more brokerages as well. I just picked up 2. The point is the bond markets may not be terribly upset with this because the governor, when he spoke to CNBC-TV18, clearly said that not just rate cut, but even talk of stance change is too premature at this point in time. So bond markets were kind of expecting this. However, bond yields will continue to react to the US yields, and that clearly distinctly lower, even lower than 4.2. So actually, all told, this is going to be very good for banks. See, banks don't like a cut in the repo because immediately all loans linked to the repo fall. But deposits fall slowly because as they reprice, term deposits. So banks are losers when there is a repo cut. However, they gain when bond yields fall because they get mark-to-market gains. So the net, this is actually a little bit of positive for banking stocks. Coming to IIP, actually, that's a good number. 5.9, it's like some 6-month high. And I'll tell you what is good about it. The good part, of course, electricity has been doing well in such a summer. What else would you expect? 13.7% higher, but manufacturing also is 4.6, and that's supported by consumption. That's what we were ruining. Consumption is not doing well in India. It's all government capex. Look at the consumer durables, 12.3. I guess a large part of it is air conditioners. And consumer non-durables, which was negative in April, has become a positive, which means probably there is a rural recovery. So I would say both these numbers are positive.
Okay, both these numbers are positive. Got that. Thanks a lot, Lata, for joining in and explaining the macros to us. Prakash Diwan is still with us, so, let's get his view in. Prakash, the big stock to watch this week is going to be Reliance, coming out with numbers on Friday. Of course, we spoke about that earlier as well. But let's talk about the other telecom player, right? Bharti Airtel, which has been doing very well up until now. Do you think that the risk-reward is still favorable for some of these telecom names?
So honestly, the Bharti stock has already done so well in anticipation of this, price, this tariff hike that finally is coming. So I don't think there's much that you would see. You will only see reportage of ARPUs kind of improving at some point in time by September, and that's about it. Till there's some sort of a build up on the next round of tariff hike. And importantly, the rollout plans that Bharti has been kept, keeping in the wings of sorts. Is probably going to start deciding where all they'll grow. So, you have some of the circles where they're not yet very, intensely present. They could probably rectify those situations. But that's all operational stuff in this, Sonia. There's nothing much on the stock that you have. And, Reliance, the geo impact is something which you'll probably not necessarily see on these numbers, but it's going to be the subsequent quarter. So we'll have to wait for that. But the build up to that is very clearly going to be very positive for Reliance for sure.
Okay, all right, Prakash, just one quick word on Avenue Supermarts. The numbers Mangalam told us a little bit better than what we're working with. But even if you look on FY27 numbers, it's still trading at around 70 times. So valuations are not in favor. Your view on the stock?
I agree. So, the margins are very impressive for sure, Nigel. And what I think they're doing is from a mass market, a price sensitive, price conscious segment, they're trying to get some better experiences. You can see some of the formats trying to tweak in larger cities. But Avenue Supermart will always find this very challenging now that they've clocked some decent margins to maintain these margins. So if, let's say, these margins don't sustain in the next few quarters, the street is going to start questioning that. And that's precisely the reason why high valuations are always make the stock very vulnerable. And then technically, whether this gets into F&O and all, there's lots that's happening. So stay away. There's better things in retail as well that are popping up. But yes, if you hold it, you can enjoy the ride, continue enjoying the ride, but not buying anything afresh.
No, I was wondering, Prakash, I don't know if you have any thoughts of Nigel and Sonia, all these Insta delivery apps, right? Blinkit and Instamart, etc. Won't they impact players like DMart? Because, I mean, you're basically ordering on the fly. Whenever you need something, you order. Whereas I'm assuming that the person who goes to DMart kind of shops for the entire month, groceries or whatever. But if you do it through the course of the as you need it, I mean, there is, that big kind of, I don't know if DMart has an Insta service, but it's a question to ponder.
I'm glad you brought that out because I just had an incident recently where I needed some medical, not medicines, but medical stuff like, Band-Aids and all of that. And I was so surprised that I got it on Blinkit in less than 10 minutes at 11:30 in the night. So that's the kind of service that some of these quick commerce guys are providing, not just with food and with accessories and all of that, but even with critical things like medical devices and equipment, right?
And non-critical things also. I've recently found out 2 days back that you can order a printout on Blinkit.
Really?
You can give a printout, they'll deliver the...
Oh, wow.
I mean, it's just...
It's remarkable. Okay. Well, let's do one thing. We'll also move on and talk about the IT earnings because that's been in focus. Abhishek Kumar, equity research analyst at JM Financial joins us now. Abhishek, good morning and thanks for joining in. What are your thoughts first on HCL Tech, the numbers, the fact that the company has maintained its revenue guidance and how you're positioned on the stock now?
Yeah, hi, good morning, Sonia. Thanks for having me here. So HCL's earnings also, like TCS, were slightly above expectations. in this case, the decline was lower than what we were anticipating. And also they did slightly better on margins. However, they have maintained the full year guidance at 3 to 5% and also for margin guidance 18 to 19%. So I think, both these results, the better than expected results is as much because of a more realistic guidance or expectation at the beginning of the year than any change in the underlying demand environment. So that's how I would view the outperformance of the result. In terms of stock, I think HCL is already trading at one standard deviation above its past 5-year mean, and because they have maintained the guidance, there's no earning upgrade. So I wouldn't really see this as a very positive in terms of stock performance. So we have a hold, and I think the current valuation are fair value on the stock.
Okay, fair value on HCL Tech. Hi, Abhishek. Good morning and good to see you in. This is Nigel on this side. I wanted to ask you about TCS because that's the one that clearly fired up the entire sector. Now, TCS used to trade at this premium in comparison to other tech names, and that's narrowed down, with the recent rally. Do you think that TCS still should command that premium, and because of that, a little bit of a higher PE multiple from here on? Given that, the ratios are more favorable, the growth is likely to be better as well.
Yes, so you're right. TCS has traded at a premium to other large cap peers. But, when the demand environment improves and the discretionary spend comes back, that is when I think that premium kind of narrows. TCS is a much better play in bad times because it has a very steady ship, whether it is top line or margins. And also, in terms of just growth acceleration into FY26, we believe the acceleration for someone like an Infosys or a Wipro would be faster. TCS would be slightly lower also because the BSNL deal, which is contributing to the growth this year, will be absent next year. So that becomes a headwind. So I think, the narrow of premium at this stage is sort of justified in my mind.
Abhishek, hi, morning. Just a two-part question. From here, playing the results point of view, or if you are in a bit of a move up, what are the best ways to make money? What stocks to your mind? And second, both, to my mind, both TCS and HCL Tech, didn't really it was not a blowout number or anything. There was no real big change in commentary from the TCS management. I spoke to them, asking them specifically if they'd be willing to call out a turn in underlying demand conditions by the end of the year. Well, they were not. And of course, we know the HCL numbers now. So unless Infi on Thursday does something spectacular, do you think this is more of a tactical kind of a move that we're in, if this is that?
I would tend to agree with that. I think, and we saw this in January after the Q3 results. There were beats, and all the stocks rallied. Yeah. But it didn't translate into earning upgrades later on, and that's when we saw the correction in the stock. I think there are enough evidence that the worst is behind the sector, right? And there are no earning downgrades, material downgrades coming through. At the same time, earning upgrades are not happening. And the valuation buffer that we had maybe around April, May, that has gone away with the recent rally. So I would say that the stocks could consolidate before actually the earnings would start coming through.
Okay, thanks a lot for joining in and have a great week. That is the word on the IT space, and looks like the worst seems to be over, at least from a market standpoint. If you look at the IT stocks in pre-opening, HCL Tech is your top gainer. TCS, Wipro, Infosys comes out with numbers this week. That is also up about 1%. Tech Mahindra is also up 1%. So that's really the star of the show this morning, the entire IT space. And then you have ONGC, that was a big gainer last week as well. So 1.5% higher there. And names like on the downside, names like Apollo Hospitals, Eicher Motors are under a bit of pressure. But Sudarshan Sukhani is joining in to give us the 9-10 call of the day. Sudarshan, what are you looking at?
What is a buy with a stop under 5,800?
Sorry, I missed that stock. Which one is it?
Coforge.
Coforge. All right. So sticking with the IT space, the mid-cap IT names. Mitesh, what about you? We can't hear you, Mitesh. You're on mute.
Yeah. I have Coforge in my list as well, but for a change, I'll go for Dalmia Bharat for a target of 2,000.
All right, Coforge, both those, both Mitesh and Sudarshan looking at Coforge, but he's also liking Dalmia Bharat. So let's do one thing. Let's just get a quick word on what's happening in the market right now. The pre-opening rates have settled a bit higher, about 0.3% higher. And in the broader markets, a couple of stocks are worth looking at. MRF actually is one stock that we're looking at this morning. So let's just take a look at how the stock is doing. I expect the stock to be in the green because MRF has announced a price increase effective 18 July. Truck tires prices have been increased by 2%. Passenger car and radial tires increase in the range of 3 to 7%. So far, there's no increase in two-wheeler tires just yet. Now, this blended price increase works to about 2% for MRF. And this is the first price increase that MRF has taken after the price reduction that we saw in March of 2024 across categories. Now, of course, the price increase is to, make good the raw material price hikes that we've seen, pass it on to the consumers. So that's a positive for names like MRF, the fact that they won't have to bear the higher commodity prices. Apollo, CEAT and JK had already taken approximately 3% increases earlier. So this entire tire space will be in focus as price increases are now being passed on to the consumer. Most of them actually holding up in the green this morning. But Ekta is joining in to tell us about Aurobindo Pharma. Ekta, over to you.
Yes.
Go ahead.
Well, yes, Aurobindo Pharma is in focus on account of, the fact that they will be considering a buyback on July 18th. Now, the gross cash on books is around 6,500 odd crores. The net cash on books is around 150 odd crores. And hence, the street is going to anticipate what they will do. One of the key reasons for them possibly considering the first buyback ever is because their Pen G capex, one of their big capexes, is now behind them. And but the quantum is probably not expected to be that much, according to analysts. It could probably be restricted to around 1,000 to 1,500 crores.
Okay, all right. Thanks a lot for that, Ekta. Well, let's go to Manglam. He's here to tell us about Zomato. Manglam.
Good morning. So there were a lot of media reports that indicated that platform fees by food delivery companies have been increased by about ₹1. So, from 5 rupees per order, it's increased to about 6 rupees. Morgan Stanley has written on it. They've said that every ₹1 increase in the platform fee helps blended take rate / contribution margins by about 20 basis points and adjusted EBITDA for the food delivery segment of Zomato by about 5 to 6%. But they've also qualified this by saying that the net impact on financials should be seen in the context of discounted prices for gold memberships that the companies offered during renewals. And this is actually a step in the right direction, not necessarily a big boost to financials, but definitely a step towards improving the operating performance of all these companies. We've seen a big move in Zomato already, and they have an overweight rating with a target of 235 rupees on the stock.
All right, Mangalam, thanks very much for that. So that's Zomato for you. We'll have more on this one as the market opens. What do we have as far as first rates are concerned? Just a couple of seconds to go for market open. We'll sort of look at some of the earnings reactions and, of course, others as well, HCL Tech and a few others, DMart and, stocks with news flow and more. So the opening bell, the first rates are on your screen. The Nifty is starting at about 24,573. It's a new high, of course. I think it's a new high. The Sensex is starting higher as well with 80,700 plus. That's a 150-point gain coming through. What else? Bank Nifty is up about 90 points, 52,366, 377. So Nifty Bank was the problem child on Friday. It gave up all the intraday gains, complete sell-off. But it's starting about 100 higher. And IT index is up about 0.65% once again. So, maximum focus on IT on Friday with a near 4.5% rally in the IT index. And it's another 0.75% gain this morning to boot. So this is a good-looking screen at the word go with a 60-point gain on the Nifty. Sonia.
So it is a very good opening. Very good because we've had so many days of gains, right? And now we're building onto that. So the mid-cap index is up 150 points. The advanced decline ratio is solid at almost 1,500 stocks on the advancing side. Now, Zomato is a stock that is once again at a fresh high. It's been very strong lately, and this morning as well, Zomato is sitting at a fresh high. Then you have Tech Mahindra, which is at a fresh 52-week high as well. So Tech Mahindra is gaining ground. Talking about fresh highs, Britannia at 5,800 has hit a fresh high as well. It hasn't done too much this year, but Britannia is sitting on a fresh high right now, and the market cap has almost hit 1.5 lakh crores on Britannia. Inox Wind is another one looking pretty good over there. So these are just stocks that are hitting fresh highs. ONGC is at a fresh 52-week high as well. In the broader markets, a couple of other names. On the upside, IRDA is the one that's gaining a lot of ground after very good growth that the company has reported in its AUM. And then you have HCL Tech, which is now up almost 3%, post a good set of numbers. And something like a Zomato that I spoke about earlier. Geo Financial Services also looking pretty good. RCF, Hudco, Canara Bank, Yes Bank, PNB are also a couple of other stocks that are piling on the weight. So it's a good opening for the market.
Well, that's right, Sonia. A few more stocks on the broader markets that are doing well. EMS, they've got an LOA for a project worth around 140 crores from the Uttarakhand Power Corporation. So that one's opened up with a gain. EMS is up closer to around 5%. Piramal Pharma, the US FDA has issued zero form 483 observations and no action indicated designation for the company's Ahmedabad facility. So that one is well up closer around 4%. Another one that's moving well is Apollo Microsystems. They have been awarded a project by the Indian Army for vehicle-mounted counter-swarm drone system. So Apollo Microsystems, that stock as well, is up and about, up closer around 5%. GET&D, they have received an order of around 490 crores from Power Grid, but initial take on that stock actually was lower. I think the stock was down closer around 3%. So just pull up that one. In fact, that's opened up a little bit lower, GET&D. The other two stocks that are doing very, very well, we have Avenue Supermarts and V-Mart, both of them flying away. Remember, they've been doing well in the last week as well. And both those two stocks, they're up and about in today's trading session. So good start to trade. The Nifty Bank is underperforming yet again, but that's going to be holding the trigger from here on. Advanced decline ratio firmly in favor of the number of stocks advancing. Prashant.
All right. Well, it's a 65-point gain on the Nifty. 24,565 is where we are at right now. Let's just quickly look at some of the other names here which are jumping up. So I think we did mention IREDA. It's the biggest volume-led gainer, 7%. Okay, that's now 5%. IRFC is up about 5%. There is IFCI, which is up about 5-6 odd %. HCL Tech is popping up with a 5% gain, so 1632 on HCL Tech. Oracle Financial Services has got about a 3% pop. We've got Cyient, which is up about 3.33%. I think that tire price increase, I can spot Apollo Tire with a 4% gain right now. MapMy India, which is CE Infosystems, that's up 4%, 25.21 on MapMy India. There is Safari, the luggage maker, which is up 7%, 22.72 on Safari, and it's got decent sized volumes to show for it as well. We've got Zentech, which is up 4%, 13.50, 13.51. It's done fantastically well this year. Piramal Pharma is up 4%. Shakti Pumps is back up 5%. Stocks at about 43.50 or so. And you got Raymond, which is coming up with about a 5% gain as well. So, it's a pretty decent start. Zaggle is up about 2%. EMS Limited, I can go down the list, but then volumes are a little on the lower side to begin today's session. On the downside, maybe a few other names. Asian Paints is down 2. There is Cochin Shipyard and Garden Reach Shipbuilders and GE Shipping. So the shipbuilders are all down 2.5 odd %, but they've had such a huge move. in 2024 so far. So that's, I guess, understandable. Mazgaon is another one. Yep, same sector, but 1.75% lower on Mazgaon as well. So all of these shipbuilders, and maybe we should put these stocks up down as an alert. Eris Life Sciences is the biggest loser with a 4% cut. The biggest volume-led loser with a 4% cut as well. Najib?
Just a few more stocks. The reason that both Safari and VIP, both of them are higher, we have Investec. This could be a bit of a tailwind to both these two stock prices. They have initiated coverage on both those two stocks. On Safari, they have a target price of 2,800. On VIP, they have a target price of around 560. They're saying the industry itself will have a tailwind, and that's why they're expecting both these two stocks to do well. And just one point on IRDA, the stock listed in November, that's November 29th odd. The issue price was 32 rupees. So effectively, you've got a 10-bagger on IRDA. The high of the day was more than 310 rupees odd. What a dream stock. 8 months odd. If you got allotment in that IPO, which was fairly subscribed, you'll still be getting close to around a 9.5 to around 10-bagger in 8 months. That's the market we are in.
Oh, absolutely. And, quite amazing. Vineet Samre is our market master of the day. He's head of equities at DSP Mutual Fund. Vineet, good to have you with us here on the program. Thanks for your time. Appreciate it. You just heard some of these anecdotes and trivia, right? 8-bagger, 10 months and whatnot. I mean, it's just amazing. Once in a lifetime kind of market, right? And you don't get many of these. The question is, I think most people have made money to varying degrees in terms of what everyone's situation is different, what the starting capital is, risk appetite, and how they went about it. But broadly, I think one can say very few people would have been left behind. Are we at that point, Vineet, where you start to look at, protecting what you've made, and thinking on slightly more defensive lines rather than sort of, looking at doubling and trebling your money from here? What's your sense?
So Prashant, good morning and thank you for having me on the show. I think you have very rightly mentioned that, at every interval, one should always be thinking about one is growth, and then after a strong growth, one should be thinking of how to protect capital. And clearly, if you look at the markets last 3 months, the quality factor has done well. And this is what actually we have generally followed over long term. At some points, it has hurt as well in terms of the overall performance. But I believe that the next maybe 1 year or so, we could see, focus back, coming back on the quality factor, because last 2-3 years, because of growth and followed by a lot of liquidity, we saw these up moves taking place across the segment. Now, most of the market is either expensive or very expensive. You don't have stocks which are really cheap in that case. So I would say that at least be focused on quality. I mean, till the time the liquidity is driving the returns, it's good. But in any case, there are some issues which leads to market consolidation. Then also, I think we should be in good hands is what I believe.
Okay. But this has been such a phenomenal market, right, Vineet? If you map the last 1 year, so in the last 12 months, the returns that this market has given you, the Nifty itself is up over 20%. And I don't think any other asset class, maybe 25%, any other asset class has not given you this kind of returns. Do you think it's easy to replicate this kind of move? Or do you think that now the market could head into a period of time-wise correction, consolidation, until we get the next big trigger?
So Sonia, let's look at the data. So one is, let's go by the fundamentals first. The last 3 years, the Nifty earnings actually grew by over 25%. And now we are actually looking at growth, which is, let's say, close to 14-15%, which also I think is getting downgraded gradually. I mean, people are coming down to 12-13%. So I think fundamentally, what drove decent outperformance in the market was also, on the back of very strong earnings growth, which it itself is likely to see some bit of consolidation going forward on a high base. And anyways, some parts of the economy is still not, in the best form today. So I think considering all of that, we'll have some slowdown in the growth. And from that perspective, ideally, what you mentioned, market should see some consolidation, or at least investors should moderate their growth or the returns expectations from the market. Secondly, I mean, a large part of the market move has also been a factor driven by liquidity, which is also witnessed in terms of the P re-rating versus the earnings growth. If you make a comparison of the returns, if you break them down into how much of earnings growth has led and how much P has led to the overall return, the P re-rating has played a very important factor. And hence, I believe that, going forward, P re-rating may not remain as an attractive a factor for adding to growth. Earnings should, drive the incremental growth, and earnings themselves are in a sort of slow lane. So I would say that one should expect moderation, while flows continuing can do, any kind of, things, I mean, as what we've seen in the past few years. But I think as far as the expectations are concerned, we should have some moderation in the thought process.
All right. Hi, Vineet. Good morning and good to see you. And, just looking at the data that we get from the mutual fund industry on a month-to-month basis, and we were thumping the table with regard to the SIP flows. But if you look at cash levels, I'd say the top 20 mutual funds, well, that's gone up dramatically. We had the PPFA, mutual fund manager who joined us on the show, and they are at around 15-16%. Even Quant Mutual Fund, well, their cash levels are up nearly around 2 times in the last 6 months in comparison to what it was. Given this sort of liquidity that's coming in and the cash at various mutual funds, we're unlikely to see a big price correction. A time correction is more like it.
So, Nigel, I think the cash is just not lying in the domestic mutual funds, but also if we consider some of the international investors, they are also maybe waiting at the sidelines because they also want to participate in the India growth story and maybe are not as comfortable in terms of the valuation. So maybe at certain price points, they would also want to look at India more holistically. So you're right. I think which is where you don't see deep cuts. Small cuts leads to good amount of flows. I think 4th June was a big experience of that, where after the results came out, markets ideally should have seen even sharper cuts, but it actually restricted itself at a narrow cut. So I would say that a lot of flows which are wanting to be part of this growth story will mean that the markets will not maybe see deep cuts unless we have some very bad incident taking place. But otherwise, I think we should be overall doing well. And like you said, some time consolidation, some market consolidation should be there. But I mean, who can fight against the flows is what I can say.
Vineet, the budget is around the corner. Tell us what is your expectation. Actually, I want to know your wish list. What would you like to see happen?
No, so see,
I'm sure you have those conversations with your team as well.
Yeah.
So give us a flavor.
So I think in terms of my expectation, I would say that I'm looking at this budget from a very balanced perspective because I believe, first of all, government does have good financial wherewithal to maybe do justice to their capex, what they were doing. Also, there is a room for some amount of welfare spends, which has been one of the important reasons where we have not seen the low income level or the mid income level actually come in the overall consumption as a basket. So I would say that beyond capex, which needs sustenance, which is very important for the overall markets and the industry growth. But I think that to create a balance, we need more broad basing of consumption taking place. The low income, the mid income should also maybe come back in terms of driving the consumption, and any particular policy which actually drives this part of the consumption should be a welcome step is what I would imagine. On the taxation, I think there are various talks around the restructuring of the capital gains tax, rationalization of the various asset classes, bringing them all into similar periods. So I mean, all those things we'll have to see as it comes, what gets announced. But I think the capital gains tax or anything to do with the taxation on the equity is something which is going to create more sentimental volatility. But otherwise, I think in terms of the broad policies, I would want to see more broad basing of the growth metrics.
Okay, Vineet, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here. That's the word coming in on the market overall, which, by the way, is holding out quite well. 24,500 is holding. The Sensex at 80,700. But HCL Tech is surging on the back of its Q1 numbers, which was slightly better than estimates. My colleague Reema caught up with the management to discuss their Q1 performance, began by asking them about their annual revenue guidance. Listen in.
This guidance of 3 to 5% is something which we gave in the beginning of the year. And we did factor in the first quarter softness, which is quite similar to the previous years. And of course, Q2 is going to be a growth quarter, and Q3 is where we usually deliver peak performance. And at this point, we feel confident of the overall guidance for the year.
But you're confident about achieving that guidance, but do you think you will get to the upper end of the guidance, or is it going to be lower to middle?
We are confident of meeting a 3 to 5% guidance. No further qualifications of higher end or lower end at this point. Just one quarter is over, so probably next quarter we may fine tune it a little bit.
Sure. One more question. You've also said that you're seeing some early signs of discretionary demand bottoming out, but it's too early to call it with certainty. What are these signs of green shoots in discretionary demand?
If you see the verticals like technology and services, we've delivered a good sequential and good year-on-year growth. And I did call out these verticals even a couple of quarters ago that the pipeline is improving, and we expect to see some good momentum on this. So that's definitely played out. But having said that, in the last 7 quarters or 8 quarters, there has been kind of differing kind of signals that we've been getting, and sometimes the ramp-ups are very short cycle and things like that. So that's why I've not called out any pickup in demand. The demand situation remains pretty much the same as what we had talked to you 3 months ago when we gave the annual guidance.
Prateek, can you explain the margin performance? It's declined by 50 basis points, and with impending wage hikes, how comfortable are you with the margin guidance, or is there a risk to it?
Good morning, Rima, and all the viewers. I think, it is pretty much along the expected trajectory. If you see even our last 2 years, the quarter-to-quarter trajectory has been, the first quarter is the weakest, around this 17% in both the previous years as well. And then it's the second quarter where we pick up to, let's say, somewhere around 18%. And then the third quarter is the peak, driven by the software seasonality, which is our most profitable segment, as you know. And then the fourth quarter is kind of near the annual average, again, just like Q2. So that's the trajectory, and we seem to be following that. Given the first quarter decline in revenues, I think 50 bips decline is pretty much par for the course. So no special comment on that.
But there is an impending wage hike which will further put pressure on your margins. So are you still comfortable with the margin guidance, or is there even a little bit of a risk as the year progresses?
So the wage hikes, last year itself was a delayed cycle, delayed by a quarter for everybody practically. So we'll have to see what we do this year. We haven't still made the decision, as we discussed on Friday as well. So we'll have to wait and see, and we'll do what it takes, pulling out efficiencies from the business and to do the right things for the employees as well.
Okay. CVK, your deal wins, the TCV, total contract value, is down 14% on a quarter-on-quarter basis. And you said a couple of deals got pushed and delayed to Q4, though deal bookings will be pretty strong going forward. What was the reason for the delay?
Yeah, I think our overall bookings came in quite in line with our last few quarter trends. We've been clocking about $2 billion of net new TCV for the last several quarters, with the exception being the Q2 of last financial year, where we had a big spike in the deal wins. This quarter, we expected it to be a little more, maybe 2.3, 2.4, and a couple of deals got moved to the next quarter. It is really nothing to do with anything to do with the macro or anything like that. It is just that the logistics of getting an agreement signed got delayed, and we expect that to happen in this quarter.
And how is the pipeline compared to what it was 3 months ago?
Yeah. Pipeline remains pretty much at the same levels as what we had in the beginning of April. However, the pipeline also needs to be further qualified into the advanced stages in which deals are and things like that. So we feel a little more comfortable about improved bookings in the upcoming quarters. That's really what our takeaway from the pipeline analysis is.
Do you think this year, though, the deal wins in FY25 can be better than what we had in FY24?
I mean, you still have 3 quarters to go, and deal wins tend to be a little bit spiky in nature. So I don't want to take an overall call. But our overall expectation is we will have a better total TCV booking than what we had in the last year. At this point, it's just an expectation, but we have to see how it plays out.
So FY25 deal wins should be better than FY24. Prateek, you've also indicated the intent to hire fewer freshers this year. Can you tell us the reason why? Because hiring generally also has been subdued over the last few quarters.
Yeah, so I mean, we've called out a number of about 10,000. Last year, the fresher hiring was 12,000. So it's kind of in the same ballpark range, if you like. It's still early days, and let's say if things do become better, we could probably go over 12,000 as well. So we moderate it or monitor it across the quarters. Especially the off-campus is something that gives us flexibility to adjust those numbers in line with the growth and in line with the attrition as well.
And how is the attrition in the system? For you, the attrition picked up quarter on quarter?
I would say it is flattish. Yes, numerically, 12.8 versus 12.4 is higher, but I would say it's along that same 12 to 13 band that we have been, I think, for probably more than a year now.
CVK, coming to generative AI, because you've called out certain productivity benefits, I think 50% in BPO and testing, 10 to 30% in ADN, and up to 10% in operations. How is this going to play out? Will you have to pass on these benefits to your clients, or do you think it'll start reflecting in margins, or are you going to bid more competitively?
Yeah, I think there are multiple variables that play into the whole productivity paradigm. And I did also call out that some of these productivity goals that I talked about, it plays out over the next several years. It's going to be a journey where we start with putting together what we call as our HCL Tech AI Force platform, which can be used to derive efficiency out of everything. IT operations, business operations within an enterprise. And it's a journey, and I mean, it will give you some year-on-year productivity, which is a little higher than what we had seen in the past. I think it's largely will get passed on. That's how I see it. There will be little areas where we may get some additional benefits, where we kind of agree on a risk-reward kind of arrangements. There could be some benefits that will accrue to us.
And just one final question about the near term, because you've called out Q2 is going to be a growth quarter. So tell us your expectations. Will it be better than what we had last year, even taking into account the impact of the JV divestment, and individual in sectors and geographies? What is it that you expect?
Yeah, overall, we expect Q2 to be a growth quarter. In terms of verticals, barring financial services, we are expecting growth in all verticals. We also expect to grow in all geographies. However, two things to call out: financial services would decline because of the divestment that we had announced. And for the software business as well, it is a little bit weaker in the JAS July, August, September quarter. So I'm not calling out any specific growth percentage or want to say it's better than last year and things like that. Overall, it will be a growth quarter.
Okay, well, that's the word coming in from HCL Tech. Let's step into a quick break. On the other side, we'll put focus on the big event next week, the union budget. Sameer Kanabar of EY and Himanshu Parekh of KPMG India will be with us to discuss their tax expectations from the budget. Welcome back. Let's focus on the big event next week, which is the union budget. What are the changes expected with respect to the taxation? Will there be any income tax relief at all? Any capital gains tax on the changes on the cards? Himanshu Parekh, the partner tax at KPMG India, joins us now. In a bit, we'll have Sameer Kanabar join us as well. Himanshu, good morning and thanks for joining in. You know, this time there is a little more fiscal headroom, right? Because of the kind of tax collections that the government has got, the kind of RBI dividend that was given out as well. So on the taxation front, is there any relief that the middle class can expect? Overall, what are your expectations?
I would think, yes, there is enough and more justification for the middle class to expect some relief from this budget. Now, if you see the tax regime as is applicable to individuals, you know, we have two regimes which are currently under play. One is the what we call as the old regime, which comes into play where taxpayers are entitled to several tax incentives, but with a slightly higher rate of tax. Compare that with the new regime, where hardly any tax incentives are available to taxpayers, but they have a concessional rate of tax across, you know, more liberalized slab rates as far as income streams are concerned. Now, if you look at the new regime, the basic exemption limit for individuals is pegged at 3 lakh rupees. And I think it's time for the government to relook at it and increase that from 3 lakh to at least 4 lakh rupees. Similarly, if you look at the standard deduction that is available to taxpayers, that's a mere amount of 50,000 rupees per annum. And there's a high expectation from taxpayers that that standard deduction be enhanced from 50,000 rupees to 1 lakh rupees. If the government is keen to continue with the old tax regime as well, then there are expectations of taxpayers. There's a limit of deduction available under Section 80C, which has been stagnant at 1.5 lakhs since 2014. That needs to be suitably enhanced. And similarly, the deduction available on interest on housing loan, that has been stagnant at 2 lakh rupees since several years. And there's a need to enhance that as well. So a lot of expectations as far as on the personal tax front, as far as individuals are concerned from this budget.
Okay, since a large part of our viewers are retail investors, you know, investors in the market, Himanshu, I just wanted your thoughts there because there is some expectation of allowing mutual funds to offer pension and retirement products with the same tax benefits as a lot of tax saving schemes like an NPS, for example, right? On that front, what can we expect?
Yes, that's a fair expectation, I would say. I'm not so sure whether the government will be inclined to extend that benefit to mutual funds which invest in pension schemes. But overall, I would say as far as the capital gains tax regime is concerned, there are a lot of expectations on the taxpayers to rationalize or simplify the capital gains tax regime. Today, if you see, the regime has become very complex in nature. Depending on the category of assets, the holding period thereof, or the residential status of the taxpayer, you have differential capital gains tax rates which are applicable. And this has made it a very, very complex exercise. So there is an expectation of taxpayers that the capital gains tax regime should be simplified, it should be rationalized. And the way it could be rationalized is to say, to bifurcate all assets in two classes. One is what we call as financial assets, and the second is non-financial assets. As far as financial assets are concerned, let there be a more relaxed or liberalized tax regime applicable to them. For example, on long-term capital gains tax, let the rate be 10%. On short-term capital gains, let the rate be 15%. Whereas for all non-financial assets, let the long-term capital gains tax rate be 20% with indexation benefit, and let the short-term gain be subject to tax as per normal rates. So a lot of expectations on that front in terms of rationalization of the capital gains tax regime. Then the one other important aspect in the context of capital gains tax regime is in the context of buyback of shares by listed companies. Now today, when listed companies do a buyback of shares through the open market through stock exchange route, the shareholder does not know to whom he is selling the shares. So the shareholder ends up paying capital gains tax on that. The company doing the buyback also ends up paying buyback tax on that. And in that sense, the same transaction ends up in double taxation. And therefore, there's a need out there to eliminate the applicability of buyback tax when it comes to share buyback through this mechanism.
Gentlemen, good morning. We have Himanshu, good points there. We have Sameer Kanabar, who's also now joining us on the program. He's partner tax regulatory services at EY. Samir, good morning. Good to have you on the program. You know, a lot of the viewers who are watching are I think I'm not sure I'm echoing their sentiments. Of course, more tax saving through higher exemption, etc., is absolutely welcome, right? But I think the big way in which a lot of people have created money and wealth over the last couple of years is through, of course, stocks. So that has been the single biggest driver for the wealth effect, and it's been humongous. And I think that is the reason why there is a lot of sensitivity around this on taxation and how you tax stocks. Samir, should we expect, as Himanshu just mentioned, rationalization is what he spoke about, 3 different buckets, etc. What are your thoughts here?
Yeah, so, and of course, this is more if I just joined in a bit late, so my apologies, but is more from personal tax or is it more from corporate or both?
Personal taxation.
Personal. Okay. So obviously from personal tax, there are a lot of, I mean, if you look at pure economic data that has been released, there has been, nobody's now talking about that we need to expand the base. So we have quite a bit of taxpayers, which is around 6.5 crores. From 2 crores, we have moved to 6.5 crores. And hence now the discussions are that if we have more people paying taxes, and how do we sort of give back benefit to them? And that's where we are doing these discussions to say that, is there something that we can do more for the taxpayers and thereby increase the consumption story, leave more money in the hands of the people? Couple of things that come top of the mind is essentially, if you look at ESOPs, today the ESOPs are flavor of the day. And again, we are talking more from market perspective. A lot of companies are offering ESOPs. Now, today ESOPs are being taxed on the date of exercise. If this could be extended till the date of sale, obviously it would encourage a lot of people to sort of go for the ESOPs, because paying tax upfront without realizing any value becomes a big challenge. So this is something that I think government would be seriously looking at to bring taxation of ESOP, which is there, I think, today for startups, but not for all companies. So they should try to bring it at par from the date of realization. Second is, of course, if we can either increase the slab rates from 3 to 5, or can we increase standard deduction from 50 to say 125,000 rupees or odd. That would also leave a lot of money in the hands of the people. Some of other important aspect is that, you know, the housing related changes which had come earlier, where people, you know, had to, where it is more than 10 crores, people had to sort of not been able to take full advantage of investing in a new house. Now, if this can be sort of allowed for first house or one house, and this 10 crore limit can be sort of fixated for a second or third or subsequent houses, but not for the first house. That will make a lot of difference in the hands of the taxpayers. And of course, then can you allow sort of, you know, housing loan enhancement from 2 to 3 lakhs or 4 lakhs, whatever it is appropriate, because today tax rates are quite high. Of course, we are looking at a lower tax regime, but we don't a lower interest rate regime, but we don't know when the rates will reduce. So that is something that we would be looking at more focused, in a more focused manner. And of course, you know, today you can only offset 2 lakhs of your housing property loss against your other income. If that cap can be removed and you can be allowed to set off all your housing property related losses against all your other income, then this would sort of leave a lot of money in the hands of the people.
Okay, just one final question from my end, Samir, and this is Sonia here. You know, I think the bigger argument is, how does the government broaden the tax base, right? Get more people under the tax umbrella. And on that front, what do you think the government can do?
So, and again, as I just articulated the economic data, we have moved from 2 crores to 6.5 crores, right, taxpayers. And if you have broad numbers, if you look at, there may be, you know, how many taxpayers who have disposable income. It would be around, you know, 25-30 odd crores, or between 25 to 35 odd crore people who would be in the tax net. And then, of course, if you leave out the daily wage earners or contract people, then you are around 25 odd crores people, and out of that, say you're saying 6.5 crores people are paying tax. Obviously, yes, you would still want to expand the tax base, not that you would not want to. Having said that, at least today, we believe that we are in a not that kind of worse situation as we were when there were only 2 crore taxpayers. So we are still in a better situation. Having said that, if government still proposes to expand the tax base, obviously something that government want to then allow is to keep the slab rates undisturbed, but then enhance the sort of standard deduction and thereby allow people to still continue to come within the tax net because the slab rates are still lower, and then still continue to file return and thereby encourage more people. Again, one more data that is there, which has been put up by income tax authorities, is that people who were, say, below 5 lakhs, who were paying taxes has reduced from 50% to 33%. So many people have actually moved into a higher tax bracket from 5 lakhs and above. So what we can do to sort of encourage them to sort of, give more income in the disposable income in their hands is something that government should focus.
All right, gentlemen, thanks a lot for joining in. Let's see what the finance minister has in store for us in the next 1 week or so. We'll know. And post that, we'll invite both you gentlemen, Himanshu as well as Samir, to join us and give us your first take on that. For the time being, thanks a lot for joining in. Well, time to get back to our special segment then, Quarter Se Quarter Tak, where we bring you the earnings expectations from each sector. Today, the focus is on the chemical space. Sonal joins us to tell us what do we expect from there. Over to you, Sonal.
Thank you so much for that. The big question for the chemical sector is, when will we see recovery? This time around, it's going to be a mixed quarter for this sector. Raw material prices have stabilized for most companies in Q1, but Red Sea issues, they are driving freight rates higher, leading to better prices for some chemicals. And the lead time for both raw material sourcing and supplies of finished goods has increased significantly. While the commentary from management suggests prices have bottomed out, but a meaningful recovery would only be seen in second half of FY25. Let's take a look at some of the names. SRF will continue to see decline in PAT both on a quarter-on-quarter and on a YOY basis. The chemical segment will see some weakness, but packaging could see some improvement. For Navin Fluorine, it would be a decent quarter YOY, but CDMO will continue to be under pressure with prices for R22 lower. RT Industries will see profits rising 60% YOY on a low base because discretionary demand was very low last year. Let's talk about agrochemicals now. International agrochemical market remains under pressure from Chinese oversupply and pricing pressure. And that's why UPL will continue to report a loss. While the volumes will pick up, this will be led by lower pricing. For PI Industries, growth will continue, though growth rates will come down. New products, excluding pyroxasulfone, may have been relatively subdued this quarter. The valuations will come up for you on the screen. Though we have seen substantial correction in pricing in stock prices as well, they still remain at elevated levels, somewhere between 29 to 30 times, barring UPL, which is one of the cheapest agrochemical stock and one of the biggest companies in the agrochemical space. But yes, this is what the valuation picture looks like here. Discuss more on the Q1 expectations from the chemical space. Bhavna Israni, the research analyst at Anand Rathi Institutional Equities, is joining us. Bhavna, hi, good morning and thanks for joining in. You heard Sonal out on the expectations from the sector. Just wanted your thoughts on the chemical space. What are the 2 or 3 things you're watching out for, and which are the stocks that you're most bullish on now?
Yeah, hi, good morning and thanks for having me on the channel. Yeah, so as Sonal said, so Q1 FY24 last year, the performance was majorly impacted due to the destocking situation and aggressive supplies from China, which overall negatively impacted the volumes and prices both in the domestic and export market last year. So given the weak base, we would see year-on-year growth for the whole chemical sector on the back of export recovery and demand pickup in some segments. So we are seeing the demand improvement in performance chemical side, like more of pigments, polymers, paint, adhesives, and oil and gas chemicals. However, sequentially, performance is going to be a mixed bag as Q4 is seasonally a strong quarter for chemical companies. So we expect few companies like Atul, Aarti, Sudarshan would show some sequential growth supported by demand pickup in the discretionary segment. So on conclusion, year-on-year growth would be strong. However, sequential performance would be mixed bag and company specific.
All right. Hi, Bhavna. Good morning and good to see you in. This is Nigel on this side. I wanted your take on UPL. that's been a bit of an underperformer in comparison to the other stocks. Valuation-wise, there is some support. I'm not sure whether you'll have official coverage on that one. But post its exclusion from the Nifty, the stock actually has done quite well.
Yeah, so on the UPS side, we are expecting that the demand in the domestic crop protection side would be better as compared to last year's, and the monsoon is going to be good. But however, having said that, the situation in the global agrochemical market is still challenging and headwinds are there. There is this destocking situation is currently going, pricing pressure is there. So might be there would be some more quarters to gain more recovery in the segment.
Okay, all right. Also, what are your top picks? I believe PI Industries, which has been a rank outperformer, they have done some inorganic growth as well. That's one of your top buy picks. Tell us more about that. Valuations are not very cheap, so I ask you.
Yeah, so as compared to if we see other companies, yes, the valuation looks fairly priced, and there is no been major correction on the sharp correction for various names in the sector. Looks fairly priced on the expectation, but yes, PI Industries has delivered better in the challenging time, and we expect that the company has the growth story, and the sector and the company would perform better in the going ahead. So yes, we are bullish on the PI Industries.
Okay, you're bullish on PI Industries. Any stocks that you feel that, of course, valuations across the sector are at elevated levels, but any stocks where you have certain discomfort because of valuations alone?
Yeah, so if we see that Naveen, SRF, they are trading more than 35-40 times of multiple, and the recovery is prolonged. So we are expecting that the recovery would be majorly seen in the second half of the year, and which is going to be majorly driven by the agrochemical recovery. And the China situation, we currently not know that how they are going to pan out this season. So these are the factors, yes. So SRF, Naveen, there would be some challenges considering the major mix of the agrochemical side. And they have more of the generic products.
Got it. Okay. Well, we will let you go on that note. Thanks a lot for joining in. That's Bhavna Israni tracking the chemical sector. But let's get back to the market now. It is quiet, actually, not doing too much. The Nifty is up about 50 odd points. Mitesh Thakkar is back with us. Mitesh, welcome to the show. Your views on the index now, do you see it build on to its gains this week, or do you think that we could be entering a bit of a consolidation space? And also, what are the stocks to look at now?
So good morning again, Sonia. Every time I have called for a consolidation in the last 2 weeks, it's been sideways for 1-2 days and then made a new high. I think this rotational theme still is going on, and I think the IT names will continue to do well as they are doing today, and the banks could possibly be under some pressure. So on the Nifty, I'm not sure whether we'll have an immediate consolidation because of the strength in the IT pad, and I still expect the IT stocks to go higher, though we have results coming up in most of the stocks in the coming few days, but the overall trend looks very strong on the upside. So I think the way to approach this is that try to buy Nifty on declines around supports. So anything close to about 24,400 spot levels would be a good entry point. Avoid the banking names in the short term and focus on IT names.
Any of these tire names on your radar? C8 is up 6% now. JK is up 9%. JK Tire, that is. It'll come up on your screen. Apollo Tire. You already have trades here? Sorry.
Prashant, I have 2 positions in tire names. In fact, there is one recommendation also. So I have positions in MRF as well as Apollo Tires. MRF, we have futures, and Apollo Tires, we have some call options. But yes, I think good breakouts being seen over here. So I have C8 on my recommendation list. You just mentioned the stock. Keep a stop below 27.25 here. Look for targets of 28.75, which was the recent high. But I suspect eventually the pattern suggests that we might break beyond 28.75 and head towards 3,000 levels as well. So very positive bias on tire stocks. I've given my one recommendation, which is C8. The other one is a sell on ABB. After a long time, there is signs of profit booking happening on the capital goods stocks, and ABB and Siemens both look to give a good pullback. So from a trading point of view, keep today's high 82.60 as the stop loss for ABB and look for targets of around 79.50, 79.30.
By the way, Mitesh, these shipbuilders, Mazgaon and Cochin and Garden Reach, even GE Shipping, I mean, they're all down 3.5%, 4%. Just, chartically, because, these were in strong momentum and people would have bought them on the way up. This morning they are down. What would your recommendation be?
Prashant, I think a very, very similar charts for all these stocks and a very similar technical setup as well. all these stocks have run up very aggressively in the last 3 weeks. They're extremely overbought, and now there are first signs on the hourly, 2-hourly charts of profit booking taking place. So my idea is that if somebody has been holding long, take profits or trail your stop loss to about 3-4% from the current price, which means that take a very tight stop loss and wait for a pullback to play out, this consolidation to play out. I think you will get them at lower levels in the next few days. Though the bigger trend still remains on the upside, in the short term, I think there is a good chance of a pullback.
Okay, we take a quick break on that note. On the other side, Manisha Gupta will join in to give us all things commodities. Stay tuned.
It's been even more startling.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now, so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they're younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has to be, testing, and then ultrasound lower abdomen.
I think, first of all, as far as rural is concerned,
Welcome back to Bazaar Morning Call. Well, let's go across to Manisha Gupta to find out what's the one commodity you need to be tracking today. Manisha, over to you.
Well, thank you for that, Sonia. I'm looking at metals as a sector because we've started Asia on a stronger note here. Last week was kind of uneven. We did not see all the metals gain up. Copper actually lost a percentage point in the previous week, but this week it has been on a firmer note, and the markets are reacting to all the very positive data that has come in from China. So the industrial production at 5.3% on an year-on-year basis is higher than the estimate and has been on a stronger note as well on a month-on-month and a quarter-on-quarter basis as well. So that has been supportive. Apart from that, when you look at the China export numbers, that should come in on your screens, and that has been at a 15-month highs, 8.6% year-on-year gain coming in for that as well. So China production and export have been on the stronger side, but that's exactly where the stronger data from China comes to a halt. The imports have declined by 2.3%. So that tells you that within China, the domestic demand is not so strong, but the export demand definitely seems to be picking up. Now, when you look at the first quarter GDP numbers as well, were on the higher side. The second quarter GDP numbers have come at slightly at the lower side of 4.7%. And then the retail sales data has not been so great. Well, that's at a 17-month lows. The unemployment numbers in China also show an unchanged view there. So as I said, it's a half and half when you look at the Chinese numbers there. But because the production and the industrial data has been positive, well, that has been supportive for many of those metal prices. If you look at copper, aluminum, zinc, iron ore, steel, those prices are trading slightly in the positive right now. For copper, essentially, while of course the forecast of the demand going forward has been on the stronger side, the near-term inventories are much on the higher side. So when you look at the LME inventories, they have doubled in last 3 months. The Chinese production numbers have been up by 9.5% for the month of June. And that is the way the copper really seems to be behaving right now, until the month of May, it was a $70 per ton of a discount to 3 months and cents of cash. Now that has gone up to $160 a ton. So that tells you that while the holding capacity and holding cost of copper has been on the higher side, it also has to do with the fact that the near-term demand on ground is not so strong. Is the reason we have seen the copper prices come off as well. So in the month of May, we saw all-time highs at $11,000 a ton. We are trading at below 10,000 at this point in time. What the markets will watch out for going forward is one, Powell testimony, well, that is today. And then it also is about China's third plenum meeting. That starts today as well. The focus is expected to be on debt and manufacturing. Well, this is a meeting that will set course for the next 5 years within China, so would be essential to watch out for.
Okay, thanks a lot for that. Well, let's talk about IRIDA, which has been a big stock in focus. Abhishek is here to tell us more about that. Abhishek, over to you.
Well, strong business momentum has aided the results this time around, although operationally, if you take a look, the operating profits have declined on a sequential basis. So take a look at the AUM growth. It's at about 33.9% YOY and close to 5.5% sequentially. Quarter on quarter, asset quality has improved. So gross NPA ratio has come down. Net NPA ratio has also come down by 4 to 5 basis points sequentially. Net interest margin has expanded both YOY and quarter on quarter. So net interest margin has come in at 3.29% versus 2.85% in the previous quarter. And our growth is at 37.5% YOY and about 5.5% sequentially. Now, operating profits have declined by 8.9% quarter on quarter. That's largely due to the fact that other income has declined on a sequential basis. There is a provision write back of 30 crore versus expense of 9.5 crore in the previous quarter, and that's aided the PAT this time around. PAT is up more than 30% YOY and about 13.7% on a sequential basis. Back to you.
Right.
Okay, thanks a lot for that. Well, I'm also watching out for some of the tyre names because there is a price increase that some of the tyre companies like MRF have announced. MRF has taken a price increase effective 18 July. This is to pass on the high raw material costs. And truck tyres have been increased by 2%. Passenger car and radial tyres have been increased by 3 to 7%. And that's why you're seeing the stock move up as well, because the company is passing on high raw material costs to consumers, and consumers are accepting it. There's no increase yet in two-wheeler tyres, so perhaps that would come as well. The blended price increase works out to 2% approximately. And this is the first price increase by MRF. Apollo, SIAT, JK have already taken approximately 3% price increases. So this is the latest that's happening in the tyre space right now. Let's step into a quick break. On the other side, in our special pre-budget show, Lata will connect with Sajid Chinoy of JP Morgan, Soumyakanti Ghosh of SBI to discuss the big budget numbers to watch out for.
What CII is recommending is that the amounts through direct benefit transfer, the amounts through Manrega and income tax at the lower end, below 20 lakhs, there should be some relief in, and all the other areas should be increased. As far as infra spends are concerned, we are also talking about, putting greater indexation to spends in the rural area. Then, of course, to solve the rural angle on a more sustainable basis, the issues of both agriculture and empowerment of rural economy through skilling, etc. Which skilling, of course, is a joint responsibility that industry also has a role to play there. I think that has to be addressed. And as far as agriculture is concerned, I think a lot of policies of collectives, technologies, clusters, all the right tools. We have to scale this up and very aggressively start working on building resilience, because the biggest culprit at this moment in the recent past on rural incomes has been the weather events.
Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now as per the recommendations of the Bimal Jalan committee, we have an economic capital framework.
Yes.
It is principle based, it is formula based.
Yes.
There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan committee. We follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the, let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the Central Board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
I think the mood is quite positive, it's optimistic, and that's reflected also in
Hello and welcome to our pre-budget economist special. This is the show where we discuss the big budget numbers. How much may the final budget numbers differ from the interim budget? Does the finance minister need to change her revenue and tax assumptions after the excellent April-June tax collections? Is there space and need to spend more, especially after the election verdict? And finally, will the government target a lower fiscal deficit number? Joining me are two heavyweight economists, Sajid Chinoy of JP Morgan and member of the PMEAC, and Soumyakanti Ghosh of State Bank of India, member of the 16th Finance Commission. Gentlemen, thank you very much indeed for your time. Soumya, let me start with you. You're very busy, I know, with the Finance Commission work as well. But would you expect the Finance Minister to announce much higher, tax estimates? We just have got the April-July tax estimates, and across the board, they're like, 19-20% higher than last year. But the interim budget had only assumed about 11 or 12% rise in taxes.
Yeah, thank you, Lata, for having me on the show. No, I think just to take a little back, the prerogative of this is fiscal deficit. The budget comes against the backdrop of an impressive tax revenue and also the tax collections. But there are some things which the government used to address too, given the fact that the fiscal situation looks much better than what it was anticipated and significantly post-COVID. I think the first thing to look out for in the budget, and if you ask me, is that I think the RBI dividend numbers came it as a positive surprise to the markets, and I think all the entire financial ecosystem of around 2.1 trillion. So my sense is that while the government is committed to a fiscal deficit number, as you know that the 4.5% is the fiscal deficit number which the government is projected by FY26 as per the new FRBM targets. My sense is that the government could actually look into a tax collection in the range of 14 to 15%. Basically, the nominal GDP growth rate in the interim budget is around 11%, and I don't see any reason to change that number. If you retain that nominal GDP number at 11%, that makes a nominal GDP growth rate of around, I think, 328 trillion. So even with a tax payancy of 1.2 to 1.3, which is eminently achievable given the current trends, I think the government can target a tax revenue of around, say, 15 to 16%. So overall fiscal deficit, which was in the interim budget pegged at around 16.9 trillion, could be reduced a little bit to around 15.9 trillion. But given the fact that there is buoyancy, GDP growth has been solid, the government could still target a deficit which is lower than 5.1%. So basically, it could be around 4.9 to 5%. But at the same point of time, the 2.1 trillion could be actually used to rev up the expenditure a little bit. I don't think the expenditure could be revved up beyond a trillion.
Yeah. I'll come to the expenditure in just a minute. Let's just do revenue first. Sajid, your take. We all know that the Reserve Bank was expected to give 80,000 crores. They gave 2.1 trillion. So there is that 1.3 trillion extra with the government. But will it be more than that? As Soumya says, he's expecting the government to have, almost 2 trillion more because of higher taxes. You agree?
I suspect it will be more. And I think the real story of the fiscal Lata over the last 5 or 6 years has been how gross taxes have evolved. Let's go back to 2018-19, before the corporate tax cut. Gross tax to GDP was 11%. That number fell when corporate taxes were cut. But because of, efforts over the last 5 or 6 years, we've seen the GST has been kind of fixed and reformed. We've seen direct taxes have been very buoyant. The base has been normalized. We expect that, last year, gross tax to GDP was 11.7%. Right? The actual numbers are now out. So we've seen, 0.7% increase over the last 5 years, despite a corporate tax cut. And my sense is last year, the government got a growth rate of about 13.5%. They were quite conservative, as the fiscal estimates have been in the last 3-4 years, very conservative, kind of under-promising and over-delivering. And so despite that 13.5%, the interim budget only kind of budgeted, 11.5% growth. I suspect that's what we'll get, that in the budget numbers that print, you'll still get conservative assumptions on tax growth. But because last year's base is higher, even if you make an assumption of 11.5% growth vis-a-vis the achieved number of 13.5%, tax to GDP will be even higher at 11.8% of GDP. So you get now higher RBI dividends and higher gross tax to GDP, even making very conservative assumptions. I think the bigger message, Lata, from this is that we come into this budget with the government having multiple fiscal degrees of freedom. And they emerge because first, apart from higher taxes, we had higher consolidation than envisaged last year. The deficit over the last 2 years has gone from 6.4 to 5.6. That means you now have less to travel. You've got to go from 5.6 to 5.1, A. B, you've got extra cash balances with you, which means borrowing can come down. And C, you now have the prospect of higher taxes and a higher RBI dividend. So there are multiple degrees of freedom.
Okay, no, I take your point. What Sajid is telling us is that last year's fiscal deficit was expected to be 5.8. We got the final numbers a few weeks back. It turned out to be only 5.6%, not 5.8. And that was because the tax collections were higher by about 30,000 crores. And that clearly comes into this year by way of a base. Shaumya, I'm coming to the deficit because that's the big number the markets want. They want to know if the borrowing will be less. And I know both of you are urging to tell me that, but let's come to expenditure first. There is that election result which some people interpret as anger of the lower communities. And we know that consumption was lower. Even when we looked, if we pull apart the GDP of last year, it was almost entirely capex driven. Personal final consumption expenditure rose only 4%. So is there a chance that, overall tax bracket will be brought up from 2.5 lakh to, from 3 lakh to 4 lakh or something? Or, there is more rural expenditure. Do you expect bigger changes in the expenditure front?
Yeah, thank you, Lata. I think that there are two aspects to it. One, the next budget is actually also not even 9 months away. It's in the month of 1st of February. So I think the government could actually take a graded approach to fiscal reduction and, if required, to look into some sort of a tax incentive to boost up consumption. My sense is that the government in the budget could actually look into some sort of tweaking the agricultural sector reform, some reforms in the agriculture rural sector, which is pending for the last couple of years. I think for whatever reasons that has not been pushed, because that is one aspect. The second aspect is that I think there is two types. The roadmap is also of the direct tax, the implementation of the direct tax code, and the second roadmap is that overall the GST2 implementation. So my sense is that I am not expecting too much of an leeway on the personal income taxes front. Of course, there could be some giveaways here and there, because you all know that the government is pushing us to move towards a new tax regimes where exemptions are not available. So if I take that as the benchmark, I don't expect too much amount of leeway, but of course, the government can always go for lower personal income tax regime with the caveat that you have to move towards a new tax regime. So in my sense, some changes could come in the personal income taxes front, but there could be bigger changes or a bigger roadmap for the rural economy and also in terms of some of the issues impacting the MSME sector and generating employment in the budget. And that could be taken forward in February also when the next year budget is presented.
Fair point. Well, Sajid, your take. See, capex as it is, they have increased by about 25%, if I'm not mistaken, to 11.1 trillion rupees. And then there are some months lost during the elections. So would it make sense to really increase the capex budget? Will they even have the bandwidth to spend it in the balance 8 months? Or will there be a bigger thrust on, what a PMAY or any other kind of agricultural giveaways?
Lata, so the question is about 0.4% of GDP in extra fiscal freedom that fiscal authorities have now that they did not have or when they were making the budget in February. And the question is, how is that 0.4% going to be spent? Will it be saved and the deficit comes down? Will there be some tax cuts or will there be some more expenditure? I'm in the camp, as you were alluding to, that we already have capex growth that's implicitly budgeted to grow at 17% this year.
Yeah.
And, that will take some doing of a higher base. So I think there are, absorptive capacity limits on capex. If you look at revenue expenditures, X of interest and subsidies, those were budgeted to grow much more modestly. If you look at what's budgeted over the actual number last year, it's only expected to grow at 3.5%. And initially, that was the means by which the consolidation was going to be achieved. Now, with higher tax revenues and with a higher RBI dividend, the pressure of expenditures goes off. And so personally, I'd like to see higher spending on the revenue expenditure side, X interest and subsidies, for the reason that multipliers on the revenue side typically are higher than multipliers on tax cuts. When you have tax cuts, some of that tends to be saved. Of course, it depends on whose taxes are cut. So my sense is it'll be a balanced approach. We may get something on the tax side, something on the revenue side. But the larger point, I'll make one final point here is, when people talk about a stimulus, we have to be realistic here that fiscal deficits are being reduced here. So we want to make sure that we need to consolidate for sure, but we don't want to consolidate too quickly given where private sector demand is. And here's the good news. Normally you consolidate by higher taxes or lower expenditure. This year, because of the RBI dividend, a lot of the consolidation actually happens through asset sales because a lot of the RBI dividend came from higher FX valuations and came from foreign interest revenue. So if you add that to what's already budget for asset sales, of the 0.5% of GDP consolidation this year, 0.4% occurs through asset sales, which is not contractionary. And that's the good news here, that we can have consolidation without compression. It doesn't have to be contractionary in the economy, and we still bring the deficit down.
Absolutely. Reserve Bank's dividend can't have come at a better time. And my sense is that they're going to give a big dividend next year as well, because people are only factoring in one rate cut from the Fed this year, which means Reserve Bank's reserves are going to continue to earn whatever, 4%, 5% invested in US Treasuries. We're going to get another dividend manna next year. But very quickly now, the big question to both of you, and if you can keep it brief. Soumya Kanti Ghosh, what is the deficit expected? How much can the market borrowing program go down if it goes down?
No, I think, Lata, there are two figures I should quote over here. I think I agree with the larger picture that aggressive fiscal consolidation may not be the need of the hour given the government has comfortable fiscal space. So I expect the fiscal deficit to be, but still it should need to give a message to the market in terms of fiscal consolidation. So basically the fiscal deficit could be picked up around 4.9%, which makes it around the deficit, overall deficit in absolute numbers, lower than 16 trillion. So this would mean a net borrowing estimates to the market, which will be close to around 11 trillion, and a gross borrowing market estimates, which could be around close to 13 trillion. But these numbers actually could change if the government announces switches or other things in the budget. But my sense is that the government will go for consolidation, but at the same point of time, use the additional fiscal space to rev up the spending to some extent.
So how much does the borrowing, how much may the borrowing go down by?
So I think at 11.1 trillion, it will be lower than last year. If I remember, the last year overall borrowing was around 11.8 trillion in the interim budget.
Okay. So about 60,000 crore less.
Yes.
Got it. Yeah. Sajid, your best guess.
Very quickly, I think my expectation is still that the fiscal deficit will be close to the interim number of 5.1%. But the beauty of these extra fiscal degrees of freedom is you can have all three things happening. A, close to the same fiscal deficit. B, higher expenditure. But C, lower borrowing, because as we discussed, the government had about 1.5 trillion of extra cash balances than it had budgeted. Now, I think half of that is states investing in T-bills. There's about 70 to 80,000 crore of cash balances from last year's borrowing that were not budgeted. which can be used to bring down this year's borrowing. The question is, does the government do it on T-bills or dated borrowing? That is up to them. But you could have a situation where borrowing is lower, the deficit is the same, and you get higher expenditure. So in a way, you can have your cake and eat it too.
You can do it all. Oh, you're right. You're right. We could have the same 5.1 and you could still have lower borrowing. Take your point very quickly. I mean, completely, Soumya Ghosh, one or two other things that the government might notice. Please make it in 10 seconds.
I think some changes maybe on the rural sector. I think some of the policy changes which are pending, the government can just say we're going to accept those recommendations and act on them thereafter.
Okay, I thought you wanted them to tax deposits less in your report.
Yes,
well as...
yes,
yeah, I mean, I got that. We have to, take that major point because capital gains is very contentious. Sajid, any one measure or two measures?
Yeah, I would be looking very closely at direct tax reform and how we can migrate people to the new tax code. The fact is, over the next decade, we've got multiple expenditure obligations, health, education, the energy transition, and deficits have to come down. So the only way to square the circle, to bring deficits down, but increase necessary social expenditures, is to increase the tax to GDP. Let me give you one statistic, Lata, and end with that. Gross tax to GDP last year at 18%, center and states combined, is the highest that India has seen. So we've made significant progress on this front, but we need to do more going forward, given what we have to do on the expenditure side, on infrastructure, health, education.
Point taken, many developed countries have 26% tax to GDP. So if you're going towards Viksit Bharat, then higher tax to GDP ratio comes with it. Thank you very much, Soumya Ghosh and Sajid Chinoy, for setting the tone on what to expect from the big budget numbers. We wrap up on this edition. Chartbusters coming up.
Now, so far as the dividend payment is concerned, we cannot link it to our, it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now. As per the recommendations of the Bimal Jalan Committee, we have an economic capital framework. It is principle based, it is formula based. There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan Committee. We follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the... Let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the Central Board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
I think the mood is quite positive, it's optimistic, and that's reflected also in the CEO's internal surveys that we do on business confidence. It's in fact significantly higher than what it was the same period last year. So the outlook on growth, on investments and jobs is certainly positive. And it's also, the performance of the economy last year and high frequency indicators are also reflective of this trend. And of course, as you know that nation building or economic development is always a journey. So there are lots of positives today. And the model of growth of inclusive growth, which is investment-led, empowerment-led, has, I think, certainly been validated. And I think that journey should continue because economic development is always a journey. And of course, there are additional areas that would need to be addressed as we go forward.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial bio.
HCL Tech climbs after delivering first quarter numbers that were slightly better than street expectations. The constant currency revenue declined 1.5% versus expectations of a 2% decline. Management tells CNBC-TV18 they expect the second quarter to actually be a growth quarter.
Tire stocks like MRF, Apollo, as well as Seat, all of them climb in trade after MRF becomes the latest company to announce price hikes. They upped the truck tire prices by around 2%, passenger car tire prices by around 3 to around 7% effective 18th of July.
Zomato gains after it increases platform fee in key markets to 6 rupees versus 5 rupees an order. Morgan Stanley says every 1 rupee hike in platform fee aids adjusted EBITDA for food delivery segment by about 5 to 6%.
Aura Pharma gains almost 4% on news that the board will meet on 18th of July to consider a proposal for a buyback.
GE T&D gains after it bags a near 500 crore order coming in from Power Grid.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu, and it's a good start to Monday morning. The global cues were fairly positive. We have the Nifty that's holding with a gain of around 50 points. The broader markets as well doing pretty well. Advanced decline ratio in favor of the bulls. The only problem pocket has been the Nifty Bank, so that's going to be the swing factor for the remainder of today's trading session. Hey Mangalam.
Hi Nigel. Nifty Bank is slightly weakish, and we've seen Reliance come off the highs as well. Reliance is actually at the low point of trade, so that's something we'll watch out for. Was one of the top contributors over the last few trading sessions in terms of an up move. The intraday chart of Reliance comes up for you. Nifty Bank is absolutely flat. So IT is doing a lot of the weight lifting in today's trading session. Let's see where we go from here. So good time to get in our technical expert of the day, Shivangi Sarda of Motilal Oswal, joins in for a quick view on the market. Shivangi, we've seen a big rally that continues. Do you think the Friday's move was a bit of a breakout and we move past that, or maybe we see some sort of resistance at levels that we are at currently?
Very good morning, Mangalam and Nigel. Thank you for having me. So we've definitely seen that Friday's move was quite a mover. We've almost touched 24,600 odd levels. And after the consolidation of the last 9 sessions, the index has come out on the daily frame. On the week-on-week basis also, it has been making higher highs from the last 8 weeks, which consistently suggests that supports are being bought into very smartly. The Nifty put-call ratio is also sustaining near about 1.3 levels, which indicates that, put writers are comfortably making a base even at the higher zones. And we are seeing follow-up action. Although after the gap-up opening, we are seeing some sort of range-bound move in the intraday swings. So, of course, the intraday traders are having a tough time, but overall buy-on decline to continue over here. And we are expecting 24,750 and then 5,000 marks here in the index, and with a support of 24,250 levels. Now, talking about Bank Nifty, here is the main consolidation and range-bound move which is happening. Now, the Nifty index has been led by the IT stocks, of course, but Bank Nifty is witnessing the same lackluster move from the last 6 to 7 sessions. We are seeing some sort of consolidation, and this is to continue over here. Very small range for Bank Nifty. We are expecting 51,750 to 53,000 levels in this index here.
Okay, all right, Shivangi, good morning and good to see you in. What about individual stocks? Give us a couple of ideas.
So individual stocks, my first pick would be on India Mart. We've seen that this stock has given inverted HNS pattern breakout on the daily frame, and with excellent volumes over here, which are being added from the last 2 sessions. Now, interestingly, in the July series so far, we've seen 32% open interest addition over here on the long side. And overall, the stock is witnessing a good up move, maintaining its key exponential moving averages here as well. So this stock is to move upward and onward. We are recommending a target of 3,030 levels over here.
with a stop of 2850 levels. Now, the second pick on radar is ONGC. We've seen that, this stock has given a yearly breakout, even, on the monthly basis, we've seen a Poland flag pattern breakout, which has the implication of, for the next few months as well. But, talking about immediate point of view, the daily frame also looks quite positive with a divergence of RSI here. If we talk about the open interest addition, we've seen around 22% in this series so far on the long side. So this stock is also set for a new up move towards 330 levels with a stop of 305.
All right, Shivangi, I wanted to ask you about NBCC. That's been a stock that's been in a bull market of its own. Fundamentally, there are various arguments that are put out there. It hit a 52-week high last week and then it corrected a little bit. Today as well, the stock was down more than 2%, and from the lows, it's seen a bit of a bounce. Any view on that one at around 190 rupees?
So this stock, on a yearly basis, it's given around 140% odd percent return so far. And, it's just been a half a year. But overall, if you look at the immediate basis, chart structure looks quite positive. It's consolidating at the higher zones, although follow-up is slightly missing. So this, there is a possibility that this stock is going to go, range bound and then get ready for a fresh move. But definitely 200 is the next level on cards over here in this stock, and then 220 positionally. 185 would be a support to watch out for.
I'm wondering if you also track some of these cash names. Say, Godfrey Phillips, for instance, up around 12% today, has again been one of these big movers, over 100% move in this year itself. Over the last 2 years, it's a near 200% move. Do you think it's too hot to touch right now, or maybe it is a fresh breakout?
This stock has consistently performed from the last 6 months. We've seen a V-shaped recovery here. And of course, on the weekly basis, it's just coming out of its higher band, the consolidation band. So definitely stock is a good pick right now. It's surpassed its previous cluster zone of around 4450 levels as well. So definitely looks quite positive, and with any minor dip, we can enter into the stock with the next target of around 4700 levels.
Okay, all right. Thanks a lot for that, Shivangi. Well, let's slip into a short break. When you come back, we'll continue to focus on markets. Actually, before we slip into that short break, let's go across to our colleague at Money Control. Madhu is joining us to give us a stock that she's tracking rather closely. Madhu, take it away.
We are talking about Capital Small Finance Bank that had a tepid debut in February, and the stock has underperformed thereafter. Capital Small Finance Bank operates mostly in Punjab and few other northern states. Unlike other small finance banks, it lends to the middle income group. While growth had been sturdy in the past, it seems to be picking up in recent times, and the recent disbursement figures are also encouraging. The bank has a completely secured loan book, and its agri lending is also to the middle income farmers who do not come under the ambit of loan waiver, and the exposure is fully backed by collateral. On the liability side, the focus is on granular. With an improving CD credit to deposit ratio post the IPO, the bank is now looking at gradual uptick in net interest margin. The next area of focus for growth is also going to be non-interest income. While costs are likely to remain elevated for a while, we see gradual uptick in return on assets. Post the correction, the valuation is now looking reasonable.
All right, that is Madhu Chandade from Money Control Pro giving you an idea for profit. Just before we slip into a short break, keep an eye out on something like an LIC, which has seen a bit of a spike. It's moved to the high point of trade, and giving it company on the way up are a couple of these rail names. Once again, Texmaco Rail, for instance, has moved higher to the high point of trade. Take a short break, come back, focus on a lot of these stocks which are buzzing around.
So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
I think it is not euphoria. It is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to break their FD, and they want to. Somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again join stock market and all. So I think that this situation is not. Personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. Now the pricing power is coming with all these telecom service providers like Jio has already increased the rates and.
Welcome back. The Nifty Bank has suddenly taken off right now. In fact, when we started the show, the Nifty Bank was mildly flattish or sort of, just about in the green. Now you have a big move that we're seeing out there. What are the stocks that are doing well? We have SBI, which has moved to the high point of trade. That's been doing well for the Nifty Bank itself. But to cause a sudden spike, we had to see a couple of these private sector banks do well. So we have ICICI Bank. That's the intraday chart that should come up for you on the screen. And alongside that, bring up Kotak Mahindra Bank as well. So both these stocks have moved well just in the last 10 minutes or so and taking the Nifty Bank higher with a gain of almost 150 points. So just keep an eye out on Kotak Mahindra Bank and ICICI Bank. The intraday charts of these stocks come up for you. Will be very interesting to see whether HDFC Bank has also seen a bit of an up move. Well, it's not quite moved as well as these others. But, if this does spike further, this could cause a bigger gain on the Nifty Bank, considering its weight on that index itself. So we'll keep an eye out on all these stocks as we're moving towards the end of today's trading session. But Zomato is the other one, Nigel, that I'm looking out for because, I don't know whether you've ordered lately or not. You would notice that they've increased their platform fee from 5 rupees to 6 rupees.
I've ordered, but I forgot to notice that.
1 rupee, that's exactly what the company is betting on. 1 rupee does not seem like a big difference for people to, order because it's just about half to 0.7% of the average order value. But on an average, the company orders almost 85 to 90 crore orders per year. So 1 rupee increase in that could actually aid their food business EBITDA by about 85 to 90 crores. So this blended increase can actually take the contribution margin higher by 20 basis points, adjusted EBITDA for food by about 5 to 6%. That's Morgan Stanley's calculation. But more importantly, the net impact on financials should be seen in context of the discounted prices they have for Zomato Gold as well. So this 5 rupees to 6 rupees jump has happened for everyone. But at the same time, those who were paying 60 to 180 rupees for Zomato Gold, they have been discounted as well. A couple of days ago, when they were celebrating their 16th birthday, they were giving Zomato Gold for 30 rupees for 6 months. I took that. So I saved that 30 rupees there. So that 1 rupee additional has to be looked in context with the kind of money that has been, saved because of these discounts that they're giving. So with all of this, the net impact could be close to around, 1 to 2% of the EBITDA. Irrespective of all of that, the point is that people are monetizing. The operating leverage in their food delivery business is improving and quick commerce is doing extremely well.
Yeah, and I think that this rate has gone up from, 2 rupees to around 5 rupees, which has now gone to around 6 rupees.
Yes,
right?
so we need to also understand whether this is dynamic or this is static, because that 2 rupees, 5 rupees has gone to 6 rupees. But if you order on New Year's, it actually is 9 to 12 rupees as well. So they do this in a dynamic basis. And if you order on Blinkit, in recent times, you would see, if it's raining, they would have a rain surcharge of close to around 30 rupees, etc. as well. So let's see how this pans out. But for now, this 1 rupee increase is a step in the right direction, and as a result of which the stock up 2.5%.
Thanks, Mangalam, for explaining that to us. Earlier, we spoke to Vineet Sambre, head of equities DSP Mutual Fund, to discuss his top sectorial picks. So let's hear out what he has to tell us.
At every interval, one should always be thinking about one is growth, and then after a strong growth, one should be thinking of how to protect capital. Last 2-3 years, because of growth and followed by a lot of liquidity, we saw these up moves taking place across the segment. Now, most of the market is either expensive or very expensive. You don't have stocks which are really cheap in that case. So I would say that at least be focused on quality. I mean, till the time the liquidity is driving the returns, it's good. But in any case, there are some issues which leads to market consolidation. Then also, I think we should be in good hands is what I believe. I think fundamentally, what drove decent outperformance in the market was also, on the back of a strong earnings growth, which it itself is likely to see some bit of consolidation going forward on a high base. And anyways, some parts of the economy is still not, in the best form today. So I think considering all of that, we'll have some slowdown in the growth. And from that perspective, ideally, what you mentioned, market should see some consolidation, or at least investors should moderate their growth or the returns expectations from the market.
Okay, time to slip in a short break. We come back, we continue our focus on markets and stock-specific action.
Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is the for sure, earlier we used to talk about, in India, roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that even my driver keeps 2 mobile. I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
CNBC-TV18.
Welcome back. Well, just keep an eye out on a few stocks that should come up for you on the screen. Whirlpool, that stock was in the red. Now it's in the green. It's up close to 1.5%. And there's a swing of around 3.5% on that one. LIC Housing Finance as well as another one that's moving very, very well in the last few minutes. So just keep an eye out on a couple of these names. They are in a world of their own. But let's get to an exclusive conversation with CNBC-TV18's Latha Venkatesh. The RBI Governor, Mr. Das, spoke about the stock markets, the proposed tightening of project finance rules, extension of its tenure, and a lot more. Let's listen in to a few excerpts from that conversation.
Whether it is stock markets or the bond markets, or so many components are there, so many segments of the economy. We look at what spillovers they will cause. Now, so far as the banking sector is concerned, we are very closely, we monitor all banking, meaning the credit sector or the credit growth, all that is, this segment is concerned. We very closely watch this position. In fact, much closely than it was, a few years ago, much more closely than a few years ago. And whenever we see possibility of whenever we see some early signs, or whenever we feel that a few months down the road there could be a problem in this particular sector or subsector, we act. And an example is the unsecured credit, where we took action last year in November. And we increased the risk weights, and the results are there to see.
Okay, that's exactly what I'm saying. See, the F&O volumes was something that troubled government, RBI and SEBI. And SEBI has appointed the Padmanabhan committee on it. So do you have this fear that bank money could be fueling the stock market rally? And therefore, is there a case for higher risk weights, or even to keep the interest rate, on watch?
You see, so far as bank money going to sort of create some, giving some boost to the stock markets, etc., is concerned, the exposure limits of the banks to the stock market, individual borrowings from, let us say, NBFCs, which were very high earlier for participating in IPOs or for going to the stock market, the IPOs or for FPOs, whatever. Even there we have put a limit of 1 crore. It was all done some 2 years ago. It's not something we did yesterday. So therefore, at the moment, so far as from the point of view of the credit sector, there are no major concerns.
Okay, you don't think fresh controls are needed?
And in any case, banks have their own, end-use monitoring. Only some amount of, you can say, some amount of unsecured credit may go into the stock market.
Exactly.
May go. But so far as unsecured credit is concerned, we have already come out with, we have provided for additional risk weights, and the overall growth of unsecured credit has started moderating.
So you don't think more is needed?
That I cannot say. As and when something is, because it all depends on the numbers and the future outlook. So we keep on constantly evaluating. As and when some measures are required, I can assure you that the Reserve Bank will be proactive.
Okay. You're not done with risk weights?
Depends on how the situation plays out.
3 members, external members, their last meeting is in August. And then I think your term is December, Patra's term is till January. The whole MPC changes. Not just for that reason, but that is a very good reason to continue you. So that there is continuity in the MPC and, a job well done. Why should the government disturb? Have they intimated to you anything at all?
See, it is like
we would like you in Win Street. That's why I'm asking.
It's like this. When there is an assigned, you see, first thing is institutions are bigger than individuals. Whether it is the Reserve Bank as an institution, or it is the monetary policy as an institution, the institution is bigger than the individuals. The institutions develop their own momentum, their own discipline, their own principles, guidelines. So institutions will always continue to function. Now coming specifically to this thing, you see, when I am on a particular job, I focus on that job. I am not distracted by other things. Or to use the analogy of cricket, when I am out there batting, I rather focus on my batting and not think whether I am there in the next match or not. So it's that way.
But they have not intimated anything at all about, the post-December person in RBI or your position. No intimation at all from the government.
No, I think, it's again, the question is, I think I said it elsewhere also. As I told you, I'm just focused on my batting currently. Okay. Indication, no indication, it doesn't matter to me at all. I'm currently in a job. My focus is completely on that job. I try to follow the principles of Arjuna, remain continuously focused on the job at hand, and not get distracted by anything else. And I'm not saying it to sort of make it a kind of a cliched answer or anything. This is what I really mean.
Let me come now to the banking sector questions. The two obvious things that the market is waiting for from you is this project finance provisioning. You have raised it to, you want it raised to 5%, and once the project is completed, even then it is coming only to 2.5%. Standard loans is only 0.4%. So you're really asking for a very big provisioning. Is there any chance it will be softened?
You see, what we have given out is a draft circular.
Yes, it's a draft.
In fact, we are now adopting in our regulations, we are adopting a very, very consultative process.
Yes.
And in fact, in the annual report also, if you recollect, or you may have a look, or your viewers may have a look. In the annual report for, last financial year, there's a separate box item, there's a separate annex, where we have listed out all the regulatory measures which we have taken, the number of regulatory measures which followed a consultation with the stakeholders. Okay. So we are now actively consulting. There is a consultative approach for regulation making. So this is also a part of our consultative approach. What we have put out is a draft circular. We have started receiving comments, and based on the comments that are received, we will examine the comments, and then we will come out with a final circular. The purpose of the draft circular is to adopt a consultative approach to get external inputs and examine them with all seriousness.
See, this is not a discussion paper. This is a draft regulation. It's almost ready to go.
It's a draft circular.
So the fear of the industry is that you won't tweak it much.
It is a draft. We have said
it is a draft.
So when I say it is a draft, I am not saying that we will not tweak much, or I am not saying we will tweak it so much. It's a draft circular, and our approach is consultative. We take this consultative process very seriously.
All right, interesting, insightful conversation with the RBI Governor, CNBC-TV18 exclusive. Before we wrap up, there is a news at the bottom of your screen, a near 1,000 crore order coming in for Ashok Leyland from the Maharashtra State Transport Corporation. In their overall scheme of things, not a very big number, but a positive indeed in terms of a 1,000 crore order win that they've got, and as a result of which the stock has spiked to the high point of trade. That's all the time that we have on this edition of Chartbusters. Stay tuned. We have Trading Hour coming up next. But as we do that, top business leaders and newsmakers gathered at the CNBC-TV18 CII Budget Town Hall last week to put forth their expectations in the upcoming budget, a higher capex allocation to spur consumption, incentives to boost skilled manpower were some of the demands that were put forth by the industry. India Inc. also pushed for the sunset clause on the 15% concessional tax scheme for new manufacturing companies to be extended by 5 more years. Let's hear them out.
Consequent to COVID, we have seen the cost table, and a lot of it because of external factors has actually gone up. And because of that, there is a challenge on consumption across the world. As far as rural is concerned, given that cost of everything has gone up, what CII is recommending is that the amounts through direct benefit transfer, the amounts through Manrega, and income tax at the lower end, below 20 lakhs, there should be some relief in, and all the other areas should be increased.
Our last 5 years have seen the early benefits of schemes like the PLI scheme. There have been some mistakes along the way also which need to be corrected. I hope we see a version 2 of that, and while we know the budget is for the year, but I hope there's a direction for the next 5 years. What industry needs is a clear glide path of what to expect over, say, the next 5, even 10 years, so that they can invest with confidence. Second, around jobs, getting jobs and skilling. We were just talking to somebody over lunch, and you can't get people because most people have gone home, and how do you get them back? I think this is another big challenge for industry.
This 15% income tax sunset clause, if you can push it back by another couple of years or maybe give it a 5-year push, I think it's going to play extremely well. The external environment is positive today. If you look at the environment in terms of interest rate, they're going to fall. You go look at the, despite all the trouble in the world, energy costs are almost flat. You can't ask for a better environment, but we now need to capitalize and move forward.
Comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have
significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Good morning. Welcome to Trading Hour. It's a Monday morning. I'm Reema Tendulkar. With me is Sonal Bhutra. And after a quiet start, things are picking up for the market. So the last 30 minutes, have been positive for our markets. We're up close to about 75 points in the Nifty. The Sensex up close to about 200 points.
And the pickup in mid-caps is also something that has come by very swiftly. It was in the red, but the index is now up 187 points. And if we look at the sectoral moves as well, across the board, we are seeing a green tinge. So there is no sector which is in the red right now. 40 out of 50 Nifty stocks are in the green today, be it the PSU banking index, which is the top gainer right now. We have CPSE index. So we have the likes of Oil India, GAIL, ONGC, Petronet LNG, all of them doing really well ahead of the budget as well. So there's a lot of positivity in that particular space. Oil India was doing well on Friday, up 11%, adding another 1% today. Look at that, GAIL is up around 2.5%. So it's across the board. Even autos have made a comeback today. And Pharma index is the other big gainer. So it's very sectoral, but still it's green across the screen.
In autos particularly, tire is the hot pocket today. We'll talk more about it, but I was just checking the valuation. So for instance, JK Tire, which is up close to about 10%, is trading at 10 times FY26 PE. So we keep talking about the market being expensive, but MK had come out with a note towards the end of June, 28th of June, I think. And that note has put the EPS, FY26 EPS of JK Tire at 49.4. So assuming 50 rupees approximately, the stock is still at 10 times forward multiples. I thought that was quite interesting.
Yes, and it looks like it's the most sensitive to the price hikes as well. We don't know if JK Tire has gone ahead or not, but MRF doing it, and that is something.
Apollo had hiked on the 1st of July.
So it's just an indication that maybe the entire sector would do that. And Manisha has been telling us what's happening with the rubber prices. So that's about, of course, tire sector. We'll discuss it in greater detail. But the stock of the day, of course, is HCL Tech as well. What did the numbers look like?
Well, decent numbers, but the stock has started moderating a bit because it's had a pretty good run even on Friday's trade. So the stock was up close to about 3.5–4%. But now, as you can see, the gains have whittled down a bit, so it's up 1.3%. Now, Q1 was ahead of street expectation on revenues and margins, but what it's done is, with TCS also reporting a better than expected numbers, HCL Tech being higher, it's rekindled hopes about an IT recovery, even though none of the managements are calling out a turn in demand, a pickup in discretionary spending. The Nifty IT index today went and hit all-time high levels. Now, Motilal Oswal today says they're valuing HCL Tech at a premium to Infosys, and the premium is 10%. So they've upgraded the valuation multiple by 10% for HCL Tech to 27 times. They're saying HCL Tech will most likely outperform Infosys for 3 straight years on growth. The company's free cash flow metrics, FCF metrics, have meaningfully improved over the past 3 years, and it's now comparable to both Infi and TCS. And therefore, according to Motilal Oswal, HCL Tech remains the top pick in the large cap space. They've put a target price at 1850. That said, not all are believers. CLSA has downgraded the stock to a hold and put the target price at 1550. We had quite a long chat with the management earlier today. We spoke to them about their annual guidance of 3 to 5%, how they're going to achieve it, because in Q1, the company's revenues dropped by 1.6%. So they've had a soft start to FY25. So the confidence in achieving their full year guidance, the outlook on margins, because their margin guidance is 18 to 19%. In Q1, their margins is 17.1%, and they still have to give a wage hike. So there is that fear, right? How will you achieve your margin guidance? Because wage hikes typically will depress it whenever you announce it. They've not decided the date yet. So we chatted with the comfort in achieving the revenue margin guidance, the outlook on discretionary demands, how the near term is going to pan out. Listen in to some important comments.
This guidance of 3 to 5% is something which we gave in the beginning of the year. And we did factor in the first quarter softness, which is quite similar to the previous years. And of course, Q2 is going to be a growth quarter, and Q3 is where we usually deliver peak performance. And at this point, we feel confident of the overall guidance for the year. In the last 7 quarters or 8 quarters, there has been kind of differing kind of signals that we've been getting, and sometimes the ramp-ups are very short cycle and things like that. So that's why I've not called out any pickup in demand. The demand situation remains pretty much the same as what we had talked to you 3 months ago when we gave the annual guidance.
If you see even our last 2 years, the quarter-to-quarter trajectory has been, the first quarter is the weakest, around this 17% in both the previous years as well. And then it's the second quarter where we pick up to, let's say, somewhere around 18%. And then the third quarter is the peak, driven by the software seasonality, which is our most profitable segment, as you know. And then the fourth quarter is kind of near the annual average, again, just like Q2. So that's the trajectory, and we seem to be following that. The wage hikes, last year itself was a delayed cycle, delayed by a quarter for everybody practically. So we'll have to see what we do this year. We haven't still made the decision, as we discussed on Friday as well.
I think our overall bookings came in quite in line with our last few quarter trends. We have been clocking about $2 billion of net new TCV for the last several quarters, with the exception being the Q2 of last financial year, where we had a big spike in the deal wins. This quarter, we expected it to be a little more, maybe 2.3, 2.4, and a couple of deals got moved to the next quarter. It is really nothing to do with anything to do with the macro or anything like that. It is just that the logistics of getting an agreement signed got delayed, and we expect that to happen in this quarter. Pipeline remains pretty much at the same levels as what we had in the beginning of April. We are expecting growth in all verticals. We also expect to grow in all geographies. However, 2 things to call out: financial services would decline because of the divestment that we had announced. And for the software business as well, it is a little bit weaker in the July, August, September quarter.
Okay, all right. That's the word coming in from HCL Tech's top management. With that, we'll sip into a break. Up next, we'll discuss what's buzzing in commodity space with Manisha Gupta. Stay tuned for that.
The first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Before we talk about the commodities, let's just take a look at some of these stocks. Apollo Tyres, we were discussing what's happening in the tyre space. That stock is up 5% right now. Following this one is India Cements. The stock is buzzing today, up 3.5%. We've been talking about the consolidation, the big stake buy in India Cements by Ultratech Cement. So that stock is up 3.5%. GAIL, Petronet, LNG, ONGC, NTPC, some of these names from the oil and gas PSU space, that's doing really well. GAIL, we talked about it earlier, but ONGC also has picked up pace. So that stock is up around 2%. NTPC is the other one, which is up around 1.8%. PSU banking names, Bank of Baroda, this PNB, all of them higher in trade, anywhere between 2 to 4%. But let's talk about commodities now. Manisha joins in, and today we are focusing on rice. Manisha, what's happening there?
Oh, well, yes, you were talking about the tyre companies, and rubber is trading at a 13-year highs, by the way. We've seen further surge in the international markets onto that one. But yes, coming back to rice, and this is a commodity that actually has seen constant declines. You know, for this year, we started with nearly 17 cents in the international markets. We saw the prices go up to all the way to 19 cents as well. And currently, with 17% of a decline in last 1 week itself, with the major falls coming in the overnight markets in US, we are now trading at 14 cents. So a very sharp decline from its highs and from where we started this year as well. Well, rice has been declining because India, which is the world's largest rice exporter, could be coming back into the market. We are looking at a higher surplus this time around. The crop is also expected at 141 to 142 million tons. So that's quite on the higher side. And that means that you will see some rice coming back into the international markets. While, of course, some is going to be sold into the open markets within India as well. We have seen a notification to that effect already. And the new crop in Indian markets also will start coming into the month of October. The sowing numbers have been on the stronger side in any case. The feeling, or rather the kind of statement that we have seen go around via officials and via sources is that India could allow white rice exports with some of those restrictions taken over. The parboiled rice could see 20% of tax being taken off, and a fixed duty could be allotted there. The crop estimates, as I said, have been on the higher side, and that has been putting pressure not just in the Indian rice prices but the global rice markets as well.
Okay, thank you very much for that. We will slip into a very short break. We'll come back and address the market technicals. Soni Patnaik from JM Financial Services joins in on the other side.
ENT issues are far more common than you think, yet they often go undiagnosed and untreated. In India, some of the most common ENT problems are persistent ear infections to sinusitis and acid reflux. But there's more at stake. ENT conditions can deeply impact our quality of life. Take hearing loss. For example, it affects 5% of the global population, cutting across all age groups, from children born with it to musicians exposed to loud noises, and even those who suffer multiple or severe viral infections.
If you are the one who tries to sort of boost up your music and you're hearing it all the time, I told you 80 decibels and above for a prolonged period is going to cause damage. Earbuds in the ear. That's a no-no.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential.
Welcome back. One of the big movers today is Tanla Platforms. I think it's up close to about 8 to 9%. The company has announced to the exchanges that they've signed a commercial agreement with one of the global tech majors to combat scams on their messaging platforms by identifying fraudulent phone numbers. So the size of the deal has not been disclosed on account of confidentiality reasons, but they have signed a commercial agreement with one of the global tech majors. The stock is up 10% today, but it's still down 20% from its 52-week high, which is above 1,300, and the lifetime high on the stock is more than 2,000. So the stock is off nearly 50% from its all-time high levels. Remember, they declare the Q1 numbers later this week on 18th, and it also will, there is a dividend play that goes ex-dividend on 18 by 6 rupees. So that's the other bit of news.
Since the time it changed its name from Tanla Solutions to Tanla Platforms, I believe we saw that big surge. But yes, now it has come off, as Reema mentioned, from those levels of 2,000 rupees a share. But the other stock on our radar is Avenue Supermarts. We'll discuss about that in greater detail because that is the one which is reacting to its earnings. But a lot of names which are in focus. So before we get to those names, let's get in Mangalam to talk about the numbers here. Mangalam.
Well, for Avenue Supermarts, you know, what we had already was a standalone revenue growth, and that was about 18%. The street liked that because that implied a near 5 to 6% same-store sales growth. So to that extent, what was important in these numbers, the consolidated numbers, was one, how the gross margins have performed. Secondly, how DMart Ready, the e-commerce business, has performed as well. And on those fronts, you know, the company has been showing some strength. So gross margins for the company in the first quarter have increased both year-on-year as well as quarter-on-quarter. Product mix has also increased or improved as contribution from general merchandise has increased. Higher employee and other expenses have actually limited EBITDA margins to around 8.7%. So that's kept them stable despite an increase in gross margins. And DMart Ready, the e-commerce venture, has grown 27% to about 357 crores this quarter. And that's a number which is implied. So overall, revenue growth has been around 18.5%. EBITDA has grown around 18% with margins at around 8.7% and net profit at around 17.5% higher as well. What is it that the company said on the operating costs? They said that they've gone up due to continuing effort towards improving service levels and building capabilities for the future. And this is something that they've said in our interview as well, where they said that, you know, going forward, there can be some bit of pressure on EBITDA margins, but improvement in gross margins is something that the street likes. The stock, however, is not flying away because, one, it has already seen a decent rally from the lows, and secondly, at 90 times, it is not particularly cheap on a one-year forward earnings basis.
Okay, thank you very much for that. IREDA is up 4.5% after reporting Q1 numbers. Abhishek joins in to give us the details. Abhishek.
Well, strong business momentum has aided the results this time around, although operationally, if you take a look, the operating profits have declined on a sequential basis. So take a look at the AUM growth. It's at about 33.9% YOY and close to 5.5% sequentially. Quarter-on-quarter, asset quality has improved. So gross NPA ratio has come down. Net NPA ratio has also come down by 4 to 5 basis points sequentially. Net interest margin has expanded both YOY and quarter-on-quarter. So net interest margin has come in at 3.29% versus 2.85% in the previous quarter. And our growth is at 37.5% YOY and about 5.5% sequentially. Now, operating profits have declined by 8.9% quarter-on-quarter. That's largely due to the fact that other income has declined on a sequential basis. There is a provision write back of 30 crore versus expense of 9.5 crore in the previous quarter, and that's aided the PAT this time around. PAT is up more than 30% YOY and about 13.7% on a sequential basis. Back to you.
Okay, one-way move on IREDA since the time it has listed, and now on the back of these numbers, the stock is surging again. It's a good time to get a technical check on the market. Soni Patnaik from JM Financial Services is joining us for that. Soni, good morning. Thank you so much for joining us. A swift recovery from the lows. Markets are cheering. It's really not a Monday mood for markets. But tell us what are the next levels you're watching out for on the Nifty and any individual bets?
Good morning, Sonal and Reema. Thank you for having me on the show. I think Nifty, of course, is in a very strong uptrend, and no signs of exhaustion or profit booking just yet. We can see aggressive put writing taking place today at 24,500 put option, continued by 24,600 put option. So it's trying to form a new base of support around 24,400, 500. I think that's the support level to watch out for. If that support breaks, you can see some profit booking towards 24,200 and below that 24,000. But as of now, these support is getting quite strong. On the higher side, we can see that it can test 24,700, 750 odd levels from current levels. I think that's how the levels are, panned out for the day, and what to be watched out for next. What is lagging over here is the Nifty Bank Index, which is not showing a lot of strength to take out the resistance of 53,000, which is very critical for Bank Nifty. So until and unless 53,000, 53,100 resistance does not go away for Bank Nifty, I think this index particularly can consolidate here with 52,000 as a very good support. If 52,000 breaks, then only we can see some profit booking coming in Bank Nifty, which will also drag Nifty lower. I think as of now, these are the indices level. Stock specific bets quite aggressive. We can see good data option building in today in LIC Housing Finance, which is heading for a fresh target of 828.30 odd levels. So one can buy at current levels in LIC Housing Finance, keeping a stop loss of 780 in futures and a target of 820.30 can be seen. The second stock pick comes in Exide, which is consolidating. After testing higher levels of 600 plus levels, it saw some profit booking. It is collecting the strength at this level with a very good support of 550. So one can accumulate Exide Industry for a positional play at current levels with a stop loss of 550 and a target of 580. 600 can be seen.
Okay, thank you very much for joining in. Sony, need to slip into a very short break. We'll come back and talk about market fundamentals. Sunny Agarwal of SBI Securities joins in next.
What are the tests that women need to probably undertake when they are approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now, so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has to be, testing, and then ultrasound lower abdomen.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading...
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Now, we spoke about the market technicals. It's time to discuss market fundamentals with Sunny Agarwal joining in from SBI Securities. Good morning. Thank you so much for joining us. I just wanted to understand your view on markets right now, because there's nothing that seems to deter Indian markets for sure. We are approaching union budget as well. Do you think ahead of that we could see some more moves, and after budget there could be some profit booking?
Yeah, good morning, Sonal. I think if you look at the valuation, Nifty is trading close to 21 times FY25 earning per share EPS. Although trading at a premium to the MSCI emerging market, but liquidity is something which is keeping market buoyant. So we have seen a very strong liquidity from domestic institution and retail investor participating directly or indirectly. Although FII flows continue to remain volatile, yes, you have rightly pointed out the upcoming union budget is leading to a lot of positivity in the market, and post that we may see some either time-wise or price-wise correction in the market. Having said that, what I feel is that ongoing June quarter numbers will have an stock-specific reaction. So we have already seen two large IT companies, TCS and SCL, reporting slightly better than expected numbers, and we have seen a positive reaction in IT sector. In terms of earning, what I feel is that quarter one, we will see a very good set of numbers from auto and as well as BFSI sector. And if somebody is a long-term investor, I think bottoms-up story still exists. So we need to identify companies which are likely to deliver healthy earning growth over the period of next 2 to 3 years. So yes, it's a bottoms-up stories are still there in many sectors such as auto and telecom, wealth manager, mining companies, ethanol, so on and so forth.
Particularly about IT, since you spoke about the top 2 IT companies reporting their numbers, have you upgraded any of the stocks or changed your EPS estimates post the numbers? Is there a turn in the demand sentiment? Do you feel differently about IT than what you did 2 months back?
Yeah, so Rima, yes, IT, what I believe is that in the terms of demand environment, it's a work in progress. However, after looking at a commentary from TCS and SCL, it seems that the concern on spending cut is at least easing out, and quarter 2 and quarter 3 are likely to be a better quarter as compared to quarter 1 for tier 1 IT companies. In terms of earning growth, I feel, we all know that mid-tier companies like KPIT, Cyient, specifically focusing on ER&D space, are likely to be a relative outperformer in terms of earning growth. And hence, in terms of valuation, although trading at an expensive valuation, since earning growth are relatively better as compared to tier 1 IT companies, we may see a sustenance of expensive valuation in mid-tier IT companies. So yes, at current juncture, mid-size IT companies look much better as compared to large cap IT companies. Large cap IT companies, if somebody really want to invest, maybe an SIP route is the right way, where one can gradually deploy the capital in names like TCS, Infosys over the period of next 3 to 4 months.
By the way, mid-cap IT is indeed doing very well. Look at Oracle Financial Services, 5.5% on that. It's crossed the 11,000 rupee mark. A latent view is surging 4.5%, much smaller. Intellect Design Arena is up. These are stocks where you are seeing some buying, incremental buying. And then the others like Zensar continues to remain up 6%, about a 3% gain on Emphasis Science. So many of these mid-cap IT companies are higher.
And that's what's been happening since the time we got numbers from TCS,
the
right?
last 2 days.
Sunny, I wanted your take on EMS players. You like the likes of Sirma, SGS and Amber Enterprises. These stocks have seen a one-way move, expensive valuations, margins in single digits. What's the next trigger for growth here? Do you think at these valuations as well, someone can go ahead and look at these names?
Yeah, I think, yes, I agree that valuations are expensive, but one has to keep in mind that the way government is supporting EMS sector through PLI scheme and the kind of execution which we are going to see across the board, whether it is from a mobile phone perspective, consumer durable perspective, I think the earning growth is likely to be pretty good over the period of next 3 to 5 years. So I believe that expensive valuation, premium valuation will sustain for all the EMS player. And one can look at companies like Amber Enterprises, where we are seeing a diversification of the business from only AC to non-AC sector, fast growing sector. At the same time, At the same time, we are seeing a backward integration in the form of component manufacturing. So I think few companies like Sirma, where the earnings has been muted since last 2 to 3 quarters. There I feel FY25 is likely to be good on a low base of FY24. Amber again due to diversification. So I think there are a few names where definitely opportunity exists from a medium to long term perspective.
Okay. What have you made of the up move that we're seeing in tire companies with the price hikes?
I think for tire companies, the price hike at least have addressed the concern that with the rubber prices at multi-year high, at least we will see a better margin for Q2. But what I feel is that Q1, which is the June quarter numbers, will remain muted because of the higher rubber price and margins coming under pressure. So I think I would like to wait for a few more months before taking a call on tire companies at the current juncture.
You like Praj Industries as well as the ethanol play. You think there's still a lot of catch-up that is needed there? There's a lot of move, a lot of chatter around ethanol, but then we saw the diversion of production to sugar versus ethanol. Do you think regulatory risks are something which could continue to plague the sector?
I think, yes, so there was a regulatory risk a few months back, but I believe once the election is over, outcome is there, we believe that the government is still committed to ensure that 20% blending ratio from the current 15%, and that will at least keep order inflow ringing for companies like Praj Industry. Yes, I agree the stock has run up significantly during last 2 years. So maybe buy on dip is the right strategy in a names like Praj Industry to ride on ethanol story.
Okay. Any other, many of the stocks that we've spoken about in the past also, Sasani. So any new ideas that you've had which, SBI Securities has come up with in the last 1 month?
Yeah, so Rima, we are bullish on cables and wire iron segment, and Finolex industry is the one stock where we are pretty bullish on, more of a B2C business, trading at a relatively cheaper valuation as compared to RR Kabel and Polycab. At the same time, we have seen that companies are going to pursue capex of close to 500 crore over the period of next 2 years. That will add a lot of capacity to their both telecom cable as well as normal electrical cable. And being a B2C business, I feel the lower valuations are not warranted for Finolex Industries. And one can look at maybe 15 to 20% return from Finolex over the period of next 6 to 12 months in Finolex.
Okay, all right. Thank you, Sunny, for joining us today. So those are market fundamentals. The markets, by the way, continue to do well. 80 points are on the Nifty, and the mid-caps, they are powering through. Time for a short break now. When we return, we'll be joined by Karan Taurani of Elara Capital. We'll discuss Zomato's platform fee hike in Bengaluru and Delhi, and we'll get his take as well. Stay tuned.
We just don't feel the need to brush more than once a day.
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because Also, availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
I think it is not euphoria. It is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not
Welcome back. Zomato is a stock in on our radar today, 2.5% higher after it hiked platform fees from 5 rupees per order to 6 rupees per order. But this has happened only in 2 markets right now, Bengaluru and Delhi. Mangalam joins in with the details. Mangalam.
Well, Zomato's increased its platform fees in select markets by about 1 rupee per order. 5 rupees has been increased to about 6 rupees. What's interesting about this is that while this noticeable 1 rupee change, may go unnoticed by those who order regularly, when you put all these orders together, it does make a difference to their EBITDA. So, for instance, the company is expected to do anywhere between 85 to 90 crore orders this year. So, a 1 rupee increase in some of its key markets could actually increase their EBITDA by about 40 to 50 odd crores, or 1 or 2% as per analysts. If you look at what Morgan Stanley has estimated, they say that every 1 rupee increase in the platform fee helps the blended take rate or contribution margins by about 20 basis points, or an adjusted EBITDA for their food delivery business by about 5 to 6% as well. But what's important this time around is to note 2 things. One, this hike is not across the portfolio or across their geographies. And secondly, you have to adjust this to the net impact of financial costs in context of discounted prices for gold memberships which are offered during renewals itself. So, you increase the platform fee and reduce the discount that has been offered and make that net, it is still a positive and a step in the right direction, because the overall thesis of Zomato is improving operating performance of the food business with moderate growth and strong growth coming in for Blinkit, along with decent operating performance improvement out there as well. And that would mean that the stock continues to move higher, and today as well has hit a fresh record high.
Okay, yes, 2.5% higher. Thank you so much, Mangalam, for joining us with those details. To discuss more on this, we are now joined by Karan Taurani of Elara Capital. Karan, good morning. Thank you so much for joining us. Well, tell us, what is your estimate? What would the EBITDA impact be considering the annual orders by Zomato because of this hike?
Hi, good morning. So I think, considering this impact, this definitely is a very big lever for the overall EBITDA margins. We believe that there could be an absolute EBITDA rate of about 7 to 8%. The increase in take rates will be in the range of 25 to 30 bips. And Zomato has seen a consistent increase in their take rates over the last 3 quarters, I think, since the time, platform fee has been introduced.
Okay. And past hikes in platform fees suggest that there is no impact on demand, right?
Yes, absolutely. So, Rima, if you look at the situation here, what happened clearly is that, the loyalty programs right now are offering free delivery, right? And some delivery charges, have become zero for the loyalty customers. But, if you look at the AOV, which is about 400 rupees on an average, the platform fee is getting hiked by 1 rupee. So even if we say that the platform fee goes up to 6 rupees, 7 rupees, or even 10 rupees, the potential impact is not going to be very big. It's not about 2.5% of AOV. Even if it goes to 10 rupees, in the higher end, upper end over the next 2 to 3 quarters. So I think it's happening in a phased manner. The customers are not feeling the pinch at one point of time. And I think that is the good part, in terms of getting the correct blend for profitability for Zomato.
Considering the delivery fee for some of the distances goes as high as 50 rupees as well. So I think a 10 rupee convenience charge or the platform fee is something that at least the gold members wouldn't mind paying as well. But Karan,
it's just that, it's happened fairly quickly, because I think it was only in April that it was hiked from 4 to 5 rupees. And then again, 3 months later, it's hiked from, 5 to 6 rupees.
But so Karan, your take here, is there an expectation of a further a hike in this platform fee, and is this something that investors should pencil in as well if they're looking at the stock?
Yes, definitely. So I think this started off last year in the month of August with 2 rupees, went up to 5 rupees in Jan, and then in April, and right now, it's coming to 6 rupees as well. So the point is that this is a good manner to kind of see offtake, and they are doing it very selectively. They aren't doing it in a blanket manner. They are trying to do it in top 4, top 8 cities, see the response on demand, and then move to other cities. So doing it in a blanket manner may have a negative impact, in terms of the customer demand or in terms of price sensitivity in the markets, which are tier 2 and tier 3 markets where AOV is very low and the percentage, could be higher in terms of the platform fee. So doing it in a phased manner is the correct way to do it. And I think going ahead, you will see further increase in terms of platform fee going ahead as well. And we believe this is a lever for margin improvement, because if you look at restaurant commission rates, we believe they have somewhere plateaued out. Advertising revenue and platform fee are the bigger levers for margin improvement. And we have already penciled this into our estimates, in terms of potential EBITDA margin improvement. Their adjusted EBITDA as a percentage of GOV is about 3.3% today, as on Q4 that is. But going ahead, potentially there is a potential for this to move to about 4.5% over the next 2.5 years. So, this is a lever. It is penciled into our estimates. There's no such big delta which is going to be created. There's no such big upgrade which could happen. This is largely factored into our estimates.
Okay. Just quickly give us the key numbers in terms of FY25. What could be the potential revenue? What's the potential revenue growth? With this, what would the EBITDA margins now stand at on an adjusted basis? And even on the bottom line, what is your own expectation?
So I think in terms of potential growth for the food business, on GOV, we're expecting a growth of about 20%, 18 to 20%. In terms of revenue, we're expecting revenue growth rates to be much higher versus 20% because of increase in take rates. So if you look at take rates currently, they stand to be about 20.6 to 20.7% roughly. I think you'll see an improvement of about 60-70 bips in terms of take rates because of levers around advertising and platform fee. And in terms of EBITDA, as indicated, Q4, the exit was about 3.3% adjusted EBITDA as a percentage of GOV. Potentially, we believe that could also move up towards 3.6, 3.7. And I think over the medium term, we'll find that in the management guided range of about 4 to 5%. So potentially, even adjusted EBITDA could move towards 4 to 4.5%. And I think in terms of valuations, we are assigning it a 55 times, forward EV EBITDA for the food business. And in terms of the target price, we have a target price of 280. And in terms of contribution, we believe that about 40 to 45% of the business would be valued because of the food.
Sorry, you said the adjusted EBITDA this year would be?
Adjusted EBITDA this year, in terms of percentages, would be around 3.6, 3.7% of GOV.
Okay. And when do they get to their target? I think their target was 4 to 5%. So this year, they hit 3.7%, according to your estimates, post this hike in platform fees. How soon before they will that happen in FY26 itself? And what about the ESOP cost? Because that was a drag in the prior quarter. Will that weigh on the margins or overall profitability?
Yeah, right. So in terms of margins, I think the guided range is about 4 to 5%. And, post that, they'll be reinvesting the money in terms of within the business, and, probably, even look at the take rates might even come down to a certain extent. That could also happen because they did indicate of, sharing some kind of, benefit with the restaurant partners as well. But that's a very medium-term thing. So I think, in terms of the margins, as I said, adjusted EBITDA will move towards 4.5, 4.6% by F26 as per our estimates. Secondly, in terms of ESOP cost, I think our margin estimates are clearly after the ESOP cost. So we have already factored in the negative impact of ESOP cost as well, which could be in the range of 40 to 60 bips on an annualized basis.
All right, Karan, thank you so much for joining us with your take on Zomato. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
To stock market and from different walk of life, different field, business-wise, career-wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to, break their FD, and they want to, somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again, join stock market and all. So I think that this situation is not, personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. now the pricing power is coming with all these telecom service providers like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 20.
Welcome back. You're still tuned in to Trading Hour. Markets have picked up pace actually. We have the Nifty, which is gaining some ground, and it's up around almost 100 points. We have the mid caps too, which are at the day's high, and a couple of these names which have surged in last couple of trading minutes. ONGC, for instance, is up 3%. That stock is going from strength to strength. Bajaj Auto reports numbers tomorrow, and that stock is up another 2% and has been doing well since that launch of their CNG bike. Maruti Suzuki is the other one, 1% higher on that one. So the auto pack is really making a comeback today. Hero MotoCorp has surged in last couple of minutes. Coal India, NTPC are the other names. NTPC, in fact, is at the day's high right now, followed by Coal India and ONGC. We also have some of these banking names which are contributing substantially. So SBI, IndusInd Bank, these names should also come up for you on the screen. That one is up around 1 to 2%. In the broader markets, we have RPG Life Sciences. That stock is up around 8%, reports numbers by the end of this week, so that is surging. Sequence Scientific is the other one, which is up 6.5%. CEAT reports numbers on Wednesday. That stock is also up 5.5%. Of course, the tire price hike news is something which is also giving a fillip to this name. Let's get you an exclusive now on the sidelines of the India-Singapore Connect event. My colleague Shireen Bhan caught up with DBS Global CEO Piyush Gupta, who spoke about the growing economic ties between India and Singapore, the acquisition of Lakshmi Vilas Bank, and much more. Listen in.
Let's talk about India and Singapore. And as I said, natural allies, and there has been momentum building along this partnership. How do you see it from here on, and what do you believe will be the points of partnership where more can be done at this point in time?
So, Shane, for me, this India-Singapore Connect, the corridor we're talking about, there are really two important things that we want to try and achieve. One is to celebrate what we already have. And the truth is that in the last few years, a lot of people have lost focus on understanding how important this relationship is and how much traction it has gained over the last 5-7 years, especially in recent times with the boom of the Middle East.
Yes.
So everybody tells me, Middle East is where it's happening. And I sometimes laugh and tell people, the Middle East might happen in terms of promise in the future.
Singapore's already happened.
Think about Singapore. If you look at any calculation, Singapore's investments in India are well north of $100 billion, probably close to $150 billion. That's massive. It's much larger than any single country in the world, the stock of investment, but also the flow of FDI. You look at the last 5-6 years. Every year, Singapore is the largest FDI into India. And some people tend to believe that this is, round tripping of somebody else's money like Mauritius. Yeah. It's actually Singapore money. It's GIC, it's Temasek, it's DBS, Sembcorp, Singapore Airlines, Singapore Telecom. Yeah. These are Singapore's champions who are heavily invested in sector after sector. We're in the port, we're in infrastructure, we're in energy, we're in telcos, we're in finance. So it's an unappreciated story, and we need to make sure we celebrate that a lot more. The reverse is also true. When I talked about we created DigiBank in India and then took it out all over the world, that reflects a couple of really important things. India's ability, the talent base, and the tech capabilities are really exceptional. And so that you can actually take that and engineer and drive a lot of stuff as you go out into the East. We've been able to do that in our own case. And therefore, we need to recognize and appreciate that story. That's the first part. Now, to your specific question, the way forward, I'm just so bullish on the opportunity we have for 2 or 3 reasons. Number one, everybody knows, India is the story of the moment and will be the story for the next several years, decades maybe. And a lot of Singapore's capabilities and strengths are well aligned to be able to participate in that India growth story. You asked which sectors. You think about, we talked about AI, machine learning, and technology. Now, India has some strengths, so does Singapore. Energy, it's a big deal for India, 500 gigawatts of renewable energy by 2030. Singapore is a champion today in renewable and green finance. So there's an opportunity for us to co-construct, co-create, including moving down up the value chain, things like hydrogen and so on. If you look at infrastructure, continues to be a big need in India. Singapore, I mean, everybody knows infrastructure, Singapore is great, but it's not just because it's a small city. Singapore has capabilities. Public housing, for example, I think there's a huge opportunity over there. Water, going to be a big crisis in South Asia and India. Singapore has mastered water. So there are fields and infrastructure that Singapore can clearly participate in. And a source of capital. It's a small country, but we have over $1 trillion in reserves, and we are consciously reallocating capital across the spectrum. So that's a big opportunity. The reverse is true. India's always had a look-east policy, now act-east policy. But for the first time, I can see that India is actually focused on both sides of the supply chain and looking at Asia ex Japan ex China quite seriously. One is on the sourcing side. As you think about Viksit Bharat, the best way you get Viksit Bharat is to plug into Asia supply chains. And that is something that is already beginning to happen. The geopolitics helps, and because of geopolitics, all our clients, for example, the Koreans, the Taiwanese, everybody from Asia, the Western multinationals, are all looking at creating an additional air capacity in India. So that's a huge opportunity for India to be able to attract a lot of this supply chain work. But equally at the tail end of the chain, for the first time, Indians are beginning to think about global brands. And many of these global brands will play extremely well in Southeast Asia. People don't realize, but you think about Indonesia. Do you know what the word for a three-wheeler auto rickshaw is in Indonesia?
Tuk-tuk.
Bajaj. Do you know why Bajaj is Bajaj?
Yes.
So Indian Godrej, it's got a lot of brands in Malaysia and South. So Indian brands, actually, the price point and the brand positioning is quite good. So there's an opportunity for India on both sides, the sourcing procurement side, but also the distribution and sales side. So I do think because of the alignment of interests, the nature of geopolitics, the massive growth, Singapore doesn't have a natural hinterland. And therefore, the ability to build this connection is actually very, very interesting for both countries. In the middle of COVID, we had the opportunity to acquire a distressed bank, Lakshmi Vilas Bank, through a competitive process. And that obviously has changed the complexion of our business manifold. We're now 500 plus branches. We're in 350 cities. And so we have a scale today that we certainly did not even 10 years ago. Now, like many other international players, we paid tuition fees along the way. But I have to say, today, India is our fastest growing business, even though the LBB franchise will still take some time to make it profitable. But in aggregate, it is our fastest growing business.
What about, appetite for putting more money to use in India? You talked about Lakshmi Vilas Bank and how that's playing out for you. I know that the government hasn't moved so far as its bank privatization plan is concerned, but IDBI Bank is still up for grabs and that hasn't moved. Is that a potential area of interest?
If you look at our M&A strategy for the group in the last decade, we like to do bolt-on deals that we can integrate and create value from. So large transformational M&As in banking are very challenging and rarely work. And so that's been our mindset. Do enough, consolidate, and then build your own capabilities at the same time. And so, I will say we're always open and on the lookout to do the right kind of deal, but it's got to be a kind of deal that we think we have the management bandwidth to bring some value to.
Well, speaking of value, you've had a very strong Q1, record net profit, total income, return on equity, and it's been a great run for banks, not just globally, but here in India as well. As you look at the future, macros continue to be fairly resilient, even though geopolitics is uncertain. What do you see going forward?
What's been obvious, the tailwind banking has had, is that interest rates have been high. And so that's helped the net interest margin of most banks. That's obviously quite helpful.
So you're factoring in 1 or 2 cuts this year?
I think probably 2 is my bet, but I don't think you'll see as many cuts next year as a lot of people. In fact, even this year, people speculated 6, 7 cuts. I think we'll be lucky to get 2. And I don't think the pace of cuts next year will be as sharp as people think.
Back at 24,600, so we're at the day's high. Though private sector banks are not participating. So ICICI Bank and HDFC Bank, Axis Bank, they're in the red. The cuts are not deep, but they're not participating on the upside. The Nifty's climbed up a good 100 points, and fertilizer name, that's the latest section of the market which is now moving up. So if you pull up an RCF, NFL, FACT, you would see some big moves coming through on pretty large volumes. The fertilizer names are the latest move of stocks where you are seeing that spike. But as we wrap up on the show, we're going to listen in to Vineet Sambre, Head of Equities DSP Mutual Fund, to discuss his top sectoral picks and the expectations from the budget.
At every interval, one should always be thinking about one is growth, and then after a strong growth, one should be thinking of how to protect capital. Last 2-3 years, because of growth and followed by a lot of liquidity, we saw these up moves taking place across the segment. Now, most of the market is either expensive or very expensive. You don't have stocks which are really cheap in that case. So I would say that at least be focused on quality. Till the time the liquidity is driving the returns, it's good. But in any case, there are some issues which leads to market consolidation. Then also, I think we should be in good hands is what I believe. I think fundamentally, what drove decent outperformance in the market was also, on the back of very strong earnings growth, which itself is likely to see some bit of consolidation going forward on a high base. And anyways, some parts of the economy is still not, in the best form today. So I think considering all of that, we'll have some slowdown in the growth. And from that perspective, ideally, what you mentioned, market should see some consolidation, or at least investors should moderate their growth or the returns expectations from the market. My expectation, I would say that I'm looking at this budget from a very balanced perspective, because I believe, first of all, government does have good financial wherewithal to maybe do justice to their capex, what they were doing. Also, there is a room for some amount of welfare spends, which has been one of the important reasons where we have not seen the low income level or the mid income level actually come in the overall consumption as a basket.
So 3.5 or whatever you call it. So, and one thing is the for sure, earlier we used to talk about, in India, roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that even my driver keeps 2 mobile. I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Stocks drift lower after a strong start with advances and declines evenly balanced. Energy and healthcare stocks are prominent gainers, even as financial and capital goods are the soft spots today.
After TCS's strong show, HCL Tech reports growth ahead of estimates with inline margins. The company also holds on to its FY25 revenue and margin guidance.
MRF announces a hike in tyre prices for commercial and passenger vehicles from July 18th. The move coming on the back of rising costs boosts sentiment for all the other tyre stocks, where the gaining pack today.
Aurobindo Pharma gains on weighing its maiden buyback. Strong asset growth lifts IREDA, and Tanla Platforms gets a fillip from a global tech major's contract. But even Suven Pharma sulks in getting 2 US FDA observations for its unit. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, it is turning out to be a session where we've started in the green, so no problems really coming in there. It is going to be a truncated week for us, but nonetheless, the mid-cap index as of now is outperforming with a gain of around 0.6%. We do have the June WPI data, which is flashing on your screen, so that's come in higher on a month-on-month basis. It's hardened to around 3.36%. versus 2.6% on a month-on-month basis. We do have Lata in the studio to tell us more about the analysis there. Lata, over to you.
Well, this is on expected lines. Not too many people give you advanced estimates of WPI, but I was getting a number of about 3.5%, if I'm not mistaken. There is, it's almost there, 3.4% is the inflation. We must remember that we are starting to get positive numbers because the base is now becoming like extremely negative. All of last year we had minus numbers in WPI, and that's why now you have started to get positive numbers. As you can see, month on month also there's an increase in the WPI number, but just look at the vegetable inflation. Onion inflation at 93%. Eggs, meat and fish, okay, that's not the big number. We should be looking at the food inflation, or what in WPI you call primary markets inflation. Food inflation 8.7% versus 7.4%. Vegetable inflation, as you can see, month on month as well, very high. Cereals inflation at 9.3%. So this is a food-driven inflation, no two ways about it. But I would want to look at the manufacturing inflation as well, because there could be a bit of the end of the fall more in manufactured products. As you can see, 1.4% compared to 0.78%. The extent to which global prices are falling is stopped, and now there is a bit of an upside. But more importantly, at some point in time, you know, even the telecom things will start factoring in and could get into wholesale prices of other things. The telecom rates is a CPI issue. It's a consumer price issue. But it gets into, the costs of companies, and that can also push up other wholesale products. So there it is. Today the story is largely a food inflation story as far as the WPI is concerned. But I think it's important to note that the fall in manufacturing prices has also stopped, and now you're starting to get a 1.4% manufacturing products inflation as well. With that preface, I think we should invite the guest. Upasana Bharadwaj, Chief Economist at Kotak Bank, has joined us. Upasana, this number 3.4 WPI itself, is that something we should worry about? Because this is the one that also starts entering the GDP and the current prices of GDP.
Yeah, Lata, you would see that, as you mentioned, the split is largely led by the food inflation. So we knew that WPI inflation, the base effects that were favoring it are now beginning to be arrested. And now we would be seeing higher and higher numbers irrespective. And to that, we, of course, have is the food-led inflation. So overall, the month-on-month momentum is clearly higher. And this may continue going into the next few months as well, because the lagged impact of the heat waves and all is going to be playing out for maybe 1 or 2 months more before we start seeing the impact of the monsoons really on arrivals. So till we don't see really that, the near-term risks on food remains, and at the same time, the tide is already turning for WPI. So yes, it will start reflecting in the GDP deflator at some point in time. From Q2 onwards, irrespective, the deflation story that in WPI we were seeing is likely to be now in positive and more positive as we go ahead. So overall, we could be seeing closer to 4.5% to 5% readings as we exit the year in WPI as well.
What's your sense about CPI as well? Are you revising any numbers after the higher than expected inflation in June?
Lata, there are two parts to this. At this point, we know that much of the inflation which surprised us on the upside has been led by vegetables. If we do a CPI X vegetables, then it's fairly stable, steady at around 3.5%. Previous reading was also 3.5%, and the previous reading was also close to 3.6%. So last 3-4 readings, rather, most of 2024 has been steady around 3.5%, plus minus a little. So I think immediately we're not really looking to revise our numbers because vegetable prices tend to be very volatile, and we do tend to see a lot of correction in the subsequent months. The important part is that the Kharif sowing is picking up pace. And two important structural factors which we tend to look at in the food category is cereals and pulses. There, the sowing pattern is very, comforting. And that's where hopefully, we will see some easing out on food price pressures eventually as we see the winter months and all. So I think through the course of the year, we will see some normalization. So at this point, 4.5% is what we retain. Of course, at the same time, we have to remember the telecom tariff hikes, like you mentioned before. That is something which will put an upside pressure to headline, but more so to core inflation in the coming 2 to 3 months, depending on how it really pans out. So the core inflation momentum is where we'll have to be much more cautious about, because growth is holding up quite well. So apart from base effects not being favorable for core, tariff hikes being reflected, the core inflation getting a support from demand-led is also what we have to keep in mind. So I would be more cautious on observing the core inflation trajectory rather than food, because food we know is very volatile and it tends to correct also equally well.
Fair point. Fair point. Actually, to your point about core inflation in the current index as well, the manufacturing index has gone up 1.4 year on year, but month on month also there is a 1%, there is a 0.1% increase month on month. So at least the fall is over of core, because the month on month number is slightly higher. Just a final point, Upasana, what do you make of now rate cuts? The governor's interview was very emphatic. He said premature even when I asked him stance. But regardless, globally there is, the US bonds have now fallen to even below 4.2. ECB has already cut, and probably the Fed cut is now a given in September. Given all this, where would you place the first RBI cut?
Lata, like you said, global conditions are turning fairly benign. So let's keep that aside. Domestically, we will have to be cautious on inflation, and governor has, very adequately cautioned us against acting prematurely. So we have been of the opinion that earliest rate cut can happen is in December, and that too, we'll have to be very watchful on that. Talking about the stance, if you see, the financial conditions have already eased. Conditions on liquidity is very ample, and as a result, the overnight rates are below repo rate for most of the time. Lately. So I think, just the phrase withdrawal of accommodation is something which doesn't have too much of meaning till RBI doesn't really act on that. But I would say that the markets have already settled to this easy liquidity for now because government is spending. This is a time when currency leakage is minimal. And we do expect that this whole quarter is going to be ample in terms of liquidity, which means money market rates remain fairly comfortably low. As a matter of fact, if you look at the T-bill issuances in H1, overall, it's a net issuance, which is negative. So all in all, conditions on the lower segment of the yield curve, let's say, the lower end of the curve is looking very comfortable. So the financial conditions are already benign. And I don't see too much emphasis on the need to shift their stance right away. Okay. Earlier as well, they have mentioned that they could very well, possibly indicated that they could change the stance when they do the rate cut as well. So, you know, it could be a December change in stance, or it could be February, whenever they do choose to do the rate cut. And I don't see a rate cut possibility before December. Let's put it like that.
Okay. Some of your peers have also put it to next year. No cut in December, no cut in 24 at all. At least you're holding out a hope in December. Upasana, thank you very much indeed for joining us with your thoughts on the bond markets, on the possible Reserve Bank policy, and on the inflation trajectory. So the news from the inflation numbers is it is slightly higher than expected. As far as CPI is concerned, WPI is mostly on expected lines. 3.5 was expected. But the big point is food inflation is higher and manufacturing inflation has bottomed out. So inflation is not coming down in a hurry, but that is not a very big bother. Because of global conditions, bond yields have remained under control, and the very big trigger that we are expecting for bond markets and for the cost of money, for interest rates, is not really from the Reserve Bank, but from the government, from the budget. And there, the government is now in a happy position of higher than expected revenues, both tax and non-tax. So there is a very big expectation that the fiscal deficit will be lower, and there might be, with a good chance, even market borrowing by the government falling. So bonds in a happy spot, but let's see what July 23 holds for us.
Okay, all right, Lata. Thanks very much for that. So that's the update coming in on the WPI data. 4.5 to 5% is what we could probably expect in terms of WPI by the year end, and the core inflation trajectory is something that we should probably be a little cautious about. We'll take a short break. On the other side, we'll bring you snippets from our exclusive conversation with the RBI Governor Shaktikanta Das. Stay tuned. ENT issues are far more common than you think, yet they often go undiagnosed and untreated. In India, some of the most common ENT problems are persistent ear infections to sinusitis and acid reflux. But there's more at stake. ENT conditions can deeply impact our quality of life. Take hearing loss. For example, it affects 5% of the global population, cutting across all age groups, from children born with it to musicians exposed to loud noises, and even those who suffer multiple or severe viral infections.
If you are the one who tries to sort of boost up your music and you're hearing it all the time, I told you 80 decibels and above for a prolonged period is going to cause damage. Earbuds in the ear. That's a no-no.
To celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated.
Back here watching us here on Halftime Report. The Nifty is sitting with a 100-point gain, 24,601. That's a fresh record high for that index. In fact, as we speak, it's the auto stocks which are doing extremely well. So we have Bajaj Auto, which has moved to the high point of trade. Reliance, a stock which was underperforming for most part of the day, has now moved off the lows, a good 0.75% off lows. And that's what's explaining the kind of up move that we're seeing on the Nifty as a result of that. So Reliance was in the red for most of today's trading session and now has moved mildly into the green, and that's taken the Nifty to above 24,600 as well. But let's get you an exclusive conversation that our colleague Lata Venkatesh had with the RBI Governor Shaktikanta Das. Spoke about interest rates, the stance, and a lot more. Here are a few excerpts from that conversation. Come back, we focus on the markets once again.
Now, when you talk of interest rate cut, now, of course, everybody always, at any point of time, everybody talks about interest rate cut. There is another whole lot of people who are the depositors, the silent depositors, who are, who would be affected in a different direction. Now, that is one aspect. Now, when the inflation is at 4, our inflation, the last print was 4.7%. And the June inflation is expected to be, out tomorrow. That is also expected to be, as per the surveys done by various wire services, that is likely to be close to 5%. So when we are at 5 and our target is 4, I would feel it is too premature to talk about interest rate cuts. Now, some central banks do some kind of advance guidance saying that, it is not far away, or, we are getting close, something like that.
That was my ask.
Yeah, but the issue is the overall economic environment globally, not just in India, globally and in India, it is so uncertain to talk in terms of interest rate cut that I will do it, 1 quarter away or 2 quarters away. You say something and then you have to sort of take back whatever you have said today. So basically it is the uncertainty which is the one aspect. Second thing is the CPI headline inflation continues to be close to 5%. In fact, as I said, according to the surveys done, it's likely to be again expected to be close to 5%. So therefore, from that context, I think it is too early to talk about interest rate cuts. And I would rather not give, any kind of forward guidance, which may, I said it, I think, somewhere else. I would not like to give any kind of forward guidance which would lead the market players and the stakeholders and others to board the wrong train.
Okay. The stance has remained unchanged for a goodish bit. What do you think, and what will make you change it?
You see, the stance has been, we have called it withdrawal of accommodation, yes. And there is a reason for that. Target is 4%. We are nowhere near 4%. We are still around 5%. But the expectation is that it is moderating, and it is indeed moderating.
Yes.
But the pace of moderation is very, very slow. It was 5.1, then I think it became 4.9, then 4.7. So it is moving very slowly. Now, one idiosyncratic development of some monsoon, flooding or some weather-related event can upset things. The vegetable prices can go up. So therefore, and the point is, even today we are still around 5%. So if we want a faster alignment of our inflation with 4% target, the monetary policy should be much tighter.
Okay.
It should be much tighter. It should be much more restrictive. But we have not done it because we do a balancing between growth and inflation. So therefore we have not done it. We have chosen a calibrated path to aligning the inflation with the target. So therefore we are still quite a distance away from 4% target. Given the distance that we have, which is currently 70 basis points, which may go to 80 basis points, given this much of gap, I think it is, it will be too early to talk in terms of change of stance. Okay. Unless you are somewhere close to 4%. You see, unless you are somewhere there, the question of changing of stance, I think, will be very premature. Okay. It is quite possible. Like, the second quarter inflation number is expected to be lower. But then again, it is expected to go up. Annual average, we have said 4.5%. So when we move towards 4%, on a kind of a sustained, durable basis, only at that point, we may get a confidence to have a relook. Okay. I'm saying to have a relook, not more than that.
Okay. Okay, that's the RBI governor. We need to take a short break, but up next we'll be discussing technical. Sudeep Shah of SBI Securities will join in with some trading calls.
From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. Yes. And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now as per the recommendations of the Bimal Jalan Committee. We have an economic capital framework. Yes. It is principle based, it is formula based. Yes. There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan Committee, we follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the, let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the Central Board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
The retail participation has been something that everyone's been appreciating, and personally as well, most of your money goes into SIPs, which we believe that over a longer span of time, well, it'll hold well. The only fear is retail getting into a bit of a trap? And that's the fear, but that's been the case as well. If you look at the SIP numbers, well, beautiful looking numbers. In the last 6-7 years or so, that retail number, the SIP number that you're seeing, has moved up from around 3,500 crores all the way to around 21,000 crores, which is very, very encouraging, up close to around 6 times.
Welcome back. Close to a record high on the Nifty, and that's exactly what we're looking at when it comes to all the setup coming in from the F&O space itself. So you look at the Nifty, it's closer to the record high. We have, the key indices today, which are in focus. We have the Nifty IT index, which has been doing well for the last couple of trading sessions. Today as well, holding up in the green by about almost 0.5%. The Nifty Bank 2, which was actually underperforming, saw a bit of an improvement, and from there itself, it saw a bit of a selling. So the Nifty Bank is the problem pocket. But despite the Nifty Bank moving off highs and mildly into the red as we speak, what's kept the Nifty afloat is actually Reliance. So important to track Reliance from here on as well. If you just look at the intraday chart, you would see, the stock which was mildly in the red had moved mildly into the green and has moved off low. So to that extent, it will be very important to see how both the Nifty Bank as well as the Reliance stocks perform for the Nifty to have a significant move on either side. But the fact that we broke out on Friday and continue to hold on to higher levels today tells you that the base for the market has moved higher, and that's what put writers are hoping for as well. 24,500 put has seen a fair amount of writing, as is the 24,600 put, telling you that the earlier congestion zone of 24,450 to 24,500 will now be an important support. So 24,500 is a mark that one is looking at the lower level itself. But on the way up, 24,650, 24,700 will continue to be a bit of a resistance. That's what call writers at 24,600 are hoping for as well. And there are signs for congestion at the top as well. What are those signs? One, the India VIX has moved higher by about 3% at a time when the market's continuously moving higher. The Nifty put-call ratio itself has moved near 1.3, and we have nearly 11 stocks in F&O ban, and this is just the second or third week of the July series. So those are important levels to watch out for. India VIX will continue to move higher as we move towards the budget itself. A couple of stocks that I'm watching out for. Ekta has been telling us about all the pharmaceutical updates coming in. A lot of long positions added on both Aurobindo Pharma as well as Alchem Labs. And then you have names like Mahanagar Gas, India Mart and Colgate, all of them seeing some bit of long positions as well.
Okay, all right, Mangalam, thanks very much for that. Well, Sudeep Shah of SBI Securities joins in to discuss the technicals now. Sudeep, hi, welcome to the show. Well, it is a good session for the mid-caps at least. Can you give us a sense in terms of what you're tracking today and what would your call be on the markets?
Good afternoon, Ekta and Mangalam. Yeah, so see, while Nifty is in an overall uptrend, we are seeing specific pockets such as IT, FMCG, oil and gas space showing signs of bullishness even at higher levels. So this is helping Nifty sustain at higher levels, and therefore we feel that buying on dips would be advisable for the next few sessions. We feel overall 24,300, 24,350 zone, which is the 20-day exponential moving average, will act as a strong support. Until the time this zone is guarded, overall upside up to 24,780, 24,900 could be on the cards. And this is also supportive by the put writing data, where put writers are now shifting to 24,400 and 24,500 strikes. So we feel overall, all in all, with the kind of sectoral rotation we are witnessing, it is going to be bullishness, and buy on dips would be advisable for Nifty. From a Bank Nifty standpoint, Bank Nifty is in a tight range in the last few sessions. We feel a move above 52,450, 52,500 is required for the Bank Nifty to break out of this congestion zone, and then Bank Nifty would be on course towards 53,100 kind of level. So 52,500 would be the most important level that we are watching out for in terms of Bank Nifty.
All right, and individual stocks, Sudeep, what do you have on your list right now? What are the stocks that are making for compelling buys or sells at this hour?
Mangalam, we have a couple of buys now, one from the cement space and one from the power space. So from the cement space, we have Ultratech Cement, wherein post a big move in the month of June from 10,800 to 12,000, the stock had been consolidating in the last few sessions. It has taken support at this 20-day exponential moving average since the last 5 sessions, and now the stock is on its way up once again. So we feel that from the current levels, with all the time frame, with all the charts on different time frames looking positive, the stock is headed up to 12,300, 12,500 in the next couple of weeks, and this could be bought with a stop loss at 11,600 on the downside. The second stock is from the power space, that is NTPC. So this stock also in the last 2.5 to 3 months has been consolidating between 350 and 370, 375 on the upside. And in the last few days, we are seeing signs of accumulation at lower levels, and this is holding above all its key moving averages also. And today we are seeing good price action here. So we feel that there could be a breakout soon in this counter. And this could be bought with 375 as a stop loss on the downside and 400, 415 as a target on the upside.
All right, take that point. Thank you, Sudeep, for joining in with your views. Take a short break, come back. We'll get you more on the stock-specific action on the other side of this edition of Halftime Report.
As a proportion of the total free float, Motilal Oswal, they have put out this note, which they have titled the Retail Rhapsody. And they have highlighted that, as a proportion of the total free float of Indian market capitalization, the DIs and the retail, well, their holding has gone up substantially from around 55% all the way to around 63%. Not just their holding, but even their participation has gone up, quite a bit. So in the last 10 years or so, the non-institutional participation has gone up from around 38% to around 52% or thereabouts. Some on the street would say, well, that's a little bit scary, but those are the data points that's put out by Motilal Oswal. You know, you have the FI flows, they've been quite volatile, and that's been the case. You know, if you look at the monthly flows, the FI flows, well, they've been all over the place. But the encouraging part is the DI flows. And in the first half of this calendar year so far, you just take a look at it, well, the DI flows at the half-year mark are more than what we saw in the entire of last year. So the DI flows have been the key reason that have been driving this market higher. Since we have the retail support, the domestic flows as well, that's led to a relative outperformance. And that's why, you know, the weightage on the MSCI index has moved up from the mid-single digits all the way to around 19%, because when the markets move up, higher market capitalization, that's resulting in a higher weightage. The problem is, the question that people are putting out is, are retailers getting into a bit of a trap? At least as of now, that narrative that India's retailers, well, they buy at the top and they sell at the bottom, well, that's not yet happened. So,
Welcome back. You're watching us here on Halftime Report. A bunch of stocks which are doing well, among which the one that stands out is Godfrey Phillips, and the other one is actually Parag Milk. So just take a look at the intraday chart of Parag Milk. Volumes picking up. Remember, the stock has seen a bit of a decline from its 52-week high, almost 35%. The question was whether the milk cycle is now turning for the obverse, with all these companies seeing a gross margin reduction. We'll keep an eye out on that one. And the other one is Godfrey Phillips. And today's results of Hatson Agro will be extremely crucial to watch out for as a commentary on the dairy industry itself. Godfrey Phillips, on the other hand, up 17% today. This year, it's up 125%. The earlier part of this month wasn't a big mover, but today's up move, it's actually moved higher for the entire month itself. And over the last 12 months, the stock has nearly tripled, almost 190%. Over the last 6-7 quarters, their volume growth has been higher than that of ITC and VST Industries, telling you that they have been gaining market share. And they're also looking to leverage on their distribution by selling newer products apart from, the tobacco that they sell under Philip Morris brands itself. So those are a couple of things that we'll keep an eye out on. The budget will be a big imponderable for all these tobacco-related names. Zomato is the other one that we're talking about. Why is that? The stock has hit a fresh record high today. They've increased their platform fees from 5 rupees to 6 rupees. Now, this 1 rupee charge or increase in their platform fee may not be as noticeable a difference when you're booking on your Zomato app, but for the company, it's a big operational performance enhancer. How much is that? Well, as per Morgan Stanley, the blended take rate / contribution margin could increase by about 20 basis points, assuming that the company does around 85 to 90 crore orders in this financial year itself. 1 rupee increase is, a higher addition to their EBITDA by about 85 to 90 crores, which implies that it could be around a 5 to 6% jump in their adjusted food delivery EBITDA itself. But remember, you have to keep in mind a couple of things. One, this hike is only in their key markets, which are that of Mumbai, Delhi, Bangalore, etc. Secondly, this net impact on financials should also be seen in context of discounted prices for gold membership renewals. Remember, there were a couple of discounts that the company had given for renewals of their gold membership itself. So the offsetting of that could be done via this platform fee increase. There's a dynamic number in nature. The company increases this platform fee on important surge days, etc. So let's see how that improves their overall performance. But the short point is that the food delivery business is doing extremely well, status quo in terms of growth rates and further improvement in their operational optionality. And then you have an increase of operational performance and growth in their Blinkit business, which again adds to the overall SOTP of Zomato. So brokerages are positive. Elara, for instance, has a rating of 280 rupees on the stock, a target price, whereas Morgan Stanley, that we spoke about earlier, has a target price of close to around 230 itself, very close to where the stock is currently trading at. That's about Zomato, but let's talk about the tech space. After TCS's strong show, HCL Tech 2 reported decline less than what the street was anticipating, thus making these numbers slightly better than expectations, and the company held on to their revenue and margin guidance for this financial year as well. The stock is doing well, was among the top gainers on the Nifty in the morning, but then remember, it has already seen a 10.5% rally ahead of numbers, so as a result of which, some bit of cool off from the highs of this morning. We spoke with the management this morning to talk about the quarterly numbers, the outlook going forward, so hear them out. We'll come back and discuss more.
This guidance of 3 to 5% is something which we gave in the beginning of the year. And we did factor in the first quarter softness, which is quite similar to the previous years. And of course, Q2 is going to be a growth quarter, and Q3 is where we usually deliver peak performance. And at this point, we feel confident of the overall guidance for the year. In the last 7 quarters or 8 quarters, there has been kind of differing kind of signals that we've been getting, and sometimes the ramp-ups are very short cycle and things like that. So that's why I've not called out any pickup in demand. The demand situation remains pretty much the same as what we had talked to you 3 months ago when we gave the annual guidance.
If you see even our last 2 years, the quarter-to-quarter trajectory has been, the first quarter is the weakest, around this 17% in both the previous years as well. And then it's the second quarter where we pick up to, let's say, somewhere around 18%. And then the third quarter is the peak, driven by the software seasonality, which is our most profitable segment, as you know. And then the fourth quarter is kind of near the annual average, again, just like Q2. So that's the trajectory, and we seem to be following that. The wage hikes, last year itself was a delayed cycle, delayed by a quarter for everybody practically. So we'll have to see what we do this year. We haven't still made the decision, as we discussed on Friday as well.
I think our overall bookings came in quite in line with our last few quarter trends. We have been clocking about $2 billion of net new TCV for the last several quarters, with the exception being the Q2 of last financial year, where we had a big spike in the deal wins. This quarter, we expected it to be a little more, maybe 2.3, 2.4, and a couple of deals got moved to the next quarter. It is really nothing to do with anything to do with the macro or anything like that. It is just that the logistics of getting an agreement signed got delayed, and we expect that to happen in this quarter. Pipeline remains pretty much at the same levels as what we had in the beginning of April. We are expecting growth in all verticals. We also expect to grow in all geographies. However, 2 things to call out. Financial services would decline because of the divestment that we had announced. And for the software business as well, it is a little bit weaker in the July, August, September quarter.
All right, the other stock that we're talking about today is Aurobindo Pharma. We spoke about how there are a lot of long positions being added in the F&O space, but it's not without any fundamental reason. It's a 6% up move because the company will consider a buyback, Ekta?
Well, yes, Aurobindo is in focus because there will be a board meet on July 18, 3 days from now, to consider a proposal for a buyback. The gross cash on books is around 6,500 odd crores. The net cash is around 150 odd crores. Now, to specifically put it from the Q4 transcript, their gross debt was around $758 million, net cash around $18 million. And the business had a net cash inflow of around $12 million before the Pen-G capex in Q4. So now, according to analysts, the Pen-G capex is pretty much behind Aurobindo, and that is one of the reasons why they would be considering a buyback. And the quantum, however, is unlikely to be significant, according to analysts. It could be to the tune of around 1,000 to 1,500 odd crores. It would be Aurobindo's maiden buyback that they would be doing. But according to analysts, they are a little skeptical in terms of what the quantum would be.
All right, I take that point. Thank you so much for that, Ekta. But let's talk about Ireda. That's the other one, which is up almost 4%. But over the last 1 week or so, it's been an even bigger mover. So it went into numbers with a big move, and post numbers as well. The stock is up 4%. Were the numbers as good? Abhishek joins in to tell us more. Abhishek.
Well, strong business momentum has aided the results this time around, although operationally, if you take a look, the operating profits have declined on a sequential basis. So take a look at the AUM growth. It's at about 33.9% YOY and close to 5.5% sequentially. Quarter on quarter, asset quality has improved. So gross NPA ratio has come down. Net NPA ratio has also come down by 4 to 5 basis points sequentially. Net interest margin has expanded both YOY and quarter on quarter. So net interest margin has come in at 3.29% versus 2.85% in the previous quarter. And our growth is at 37.5% YOY and about 5.5% sequentially. Now, operating profits have declined by 8.9% quarter on quarter. That's largely due to the fact that other income has declined on a sequential basis. There is a provision write back of 30 crore versus expense of 9.5 crore in the previous quarter, and that's aided the PAT this time around. PAT is up more than 30% YOY and about 13.7% on a sequential basis. Back to you.
Okay, all right. Thanks very much for that. Well, let's move on. But before that, we have some flashes on the screen where sources have indicated to CNBC-TV18 that GST Council's fitment panel has not yet considered a proposal of ATF and natural gas and ATF under GST. Remember that the GST Council can consider the request only on recommendation of the fitment committee. And oil ministry officials met with financial ministry officials. There's no commitment which is given on referring the matter to the fitment panel, and the FinMin has in fact expressed concerns over past disagreement with states on inclusion of natural gas as well as ATF under GST. So that's the update which is coming in at this point in time. So
very
there
interesting to see how the stocks react to this, because there was a big rally all the way up to the GST Council meet where the street was hoping for some announcement of both ATF and natural gas coming into the fold of the GST. But now there is important clarification, and we'll probably get in Timsy to speak about that as well. The GST Council, the Fitment Committee has not made a recommendation yet, or this is not being considered as of now as per the news that is there. The Fitment panel is not yet considered the proposal of ATF and natural gas and ATF under GST itself. So as a result of which, could be a sentiment negative.
Yes, absolutely. Yeah, it could be a sentiment negative. In fact, the oil ministry officials met with the finance ministry officials, and they said there's no commitment which is given on referring the matter to the fitment panel as well. So we don't even have a timeline in terms of when there could be any kind of movement on this. So there's no commitment which is given on referring the matter at all. The finance ministry, in fact, expressed concerns over the past disagreement with states on inclusion of natural gas and ATF under the GST.
All right. So let's move on from this, and we'll get Timsy to speak about this in detail once we'll get some more details on this as well. But Varun Beverages is the other stock. When we were talking, earlier, the WPI had come by. Varun Beverages, the stock has moved higher to the high point of trade as it has gone ahead and informed the exchanges that they've entered into an agreement with PepsiCo to manufacture, distribute and sell Simba Munchies, the snacks, in Zimbabwe and Zambia. This agreement would entail an investment of up to 60 crores for the company, and this agreement would be effective from October 2025 for Zimbabwe and April 2026 for Zambia. This will give, this will be given a strong push by PepsiCo itself in certain fast-moving stock-keeping units through price initiatives as well. So all of this would work for the company. Remember, the snack food industry size in Zimbabwe and Zambia are close to around $150 to $170 million individually as of 2024. And the company, that's Varun Beverages, has already entered into an agreement with PepsiCo for manufacture and sale of Cheetos in Morocco. So why is this a positive development for Varun Beverages, even though on the surface it seems seemingly small with a 60 crore investment? One, it increases their engagement with PepsiCo. Remember, 59% of PepsiCo's revenue comes in from snacks. So increased engagement with PepsiCo and increasing share of revenue coming in from snacks would aid the company's business going forward. And secondly, it also leverages their own distribution ecosystem. So I'm already selling PepsiCo via the supply chain that I have. So, me selling snacks gives me additional revenue from the same ecosystem that I have. And that's a positive. And with all of this, can they do the same in India? If they were to do that, then it increases their market size by a lot more.
Okay, all right, Mangalam. Well, that's on Varun Beverages. That stock is up around 1.5%. HDFC Life is in focus because it will be reporting its Q1 FY25 earnings. Yash joins in to tell us what the street is anticipating. Yash? Okay, well, maybe we'll just get back to Yash in just a bit. He's probably, his audio is, our audio is probably not reaching him. But nonetheless, on that note, we'll take a short break. On the other side, we'll focus on tire stocks, which are surging in trade due to price hikes. Stay tuned.
That saying is actually reversed, and this time around they could possibly get it right. The only problem is two factors. We've been talking about PEs and other data points. Just want to highlight India's market cap to GDP. As of now, it is at a relatively higher level if you compare with what we have seen on average of around 85%. So that's one data point. And the other one is the outperformance of the broader markets. Whether you look at the mid cap, you look at the small cap space, well, that's been where the big money is. And that's over a 5-year horizon that I put out these numbers. Well, in the shorter duration, that's in the last 1 year or so, well, it's been even more startling.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important because a lot of times the density decreases. It's like a...
Welcome back. You're watching us here on Halftime Report. Important news at the bottom of your screen with regards to the inclusion of natural gas under GST. But this is our special segment, which is Value Plus. We focus on the tire stocks, which have been the driving force in today's trading session when it comes to a sectoral move on the back of price hikes that have come in. Let's focus on a lot of individual stocks which are buzzing around on account of this price hike, and then we talk about the commodity itself. Sonia joins in with the price hike update, the latest one being MRF.
Absolutely. Thanks a lot for that. So, if you look at it, there has been a price hike across the board for most of these tire companies. And the one that we're looking at this afternoon is MRF. MRF has announced a price increase effective 18 July. Truck tires have been hiked by approximately 2%. Passenger car and radial tires prices have been hiked by in the range of 3 to 7%. So far, there's been no hike in two-wheeler tire prices, but the blended price increase works out to be about 2%. Now, this is the first price increase that MRF has taken in order to pass on the higher raw material costs to consumers, specifically rubber and crude that is used in the manufacturing of tires. Now, if you look at it, the other players like Apollo, SIAT, JK Tires have already taken approximately 3% price increases, and the price increases still lag the cost increases that have been seen in the last 3 to 4 months. So, despite the prices being passed on to consumers, there could still be some margin pressure that the companies face because of higher rubber and crude oil prices. So, overall, yes, it's a positive for MRF, the fact that demand is strong enough that they were able to pass on the price increases to customers. Back to you.
All right, that explains the up move on these stocks. And like Sonia pointed out, one of the key reasons for this price hike is the increase in rubber prices itself. And if you're watching this show on a regular basis, you would not be surprised by that, largely because Manisha has been telling us about the increase in rubber prices and the fundamental reasons for the same as well. Manisha joins us to apprise us once again of the happenings in the rubber industry. Manisha.
Well, thank you for that, Mangalam. Yes, if you look at the rubber prices, this is after a very long time that we have seen prices run up above 200 rupees a kg. This is the highest in 13 years. And that is because in the previous season itself, we've had heat waves. So the production has been lower. Productivity has been a concern as well. And then you clearly have to look at the global markets as well, where the rubber study group says that for the year 2024, while the consumption will increase by 3.1%. The production will increase only by 1.1%. So globally as well, we are looking at very bullish trends when it comes to rubber. For the Indian markets also, while the production and consumption mismatch continues, remember, India does depend on the international market for anywhere between 4 to 5 million tons of rubber that we do import here. And the demand has been quite strong from the tire sector, as Sonia was pointing out, and from the non-tire sector as well. The rubber product exports have been on the stronger side as well. The only concern that the industry really sees is the 25% import duty on rubber. But apart from that, the kind of demand growth that we are seeing in case of rubber on a quarter-on-quarter basis, year-on-year basis has been much on the higher side. So that tells you that the rubber prices are here to stay above 200 and can even see further gains from here on.
All right, Manisha, thanks a lot for that. So that's about the rubber prices. In fact, like we said, last week we had this conversation. Manisha was speaking with Rajiv Budhraja, who's the General Director at Automotive Tire Manufacturers Association, or ATMA as we know it, when he spoke about companies which are concerned about their rubber availability, even as elevated prices, at elevated prices, domestic rubber is just not available. So not only are the prices higher, there is not enough supply at even elevated prices. So what's the outlook for this industry, this commodity itself? Let's hear out those comments coming in from the Director General of ATMA.
Rubber prices today are at a 13-year record high, having crossed 200 and now, hovering around 205 and 6 mark. That by itself is, from the consumer perspective, a point of concern. But I think more than that, it's availability, that is become a major concern for the tire companies. Even at these prices, domestic rubber is not available. And there is hardly any visibility seen, going forward also. For multiple reasons. So at this point of time, both price and its domestic availability are the two major concerns for the tire industry.
All right, so the tire industry in focus. Tire stocks are higher because the companies have gone ahead and taken price hikes. Important to see whether these price hikes will actually aid their margin or just mitigate the increase in their cost itself. And would there be an impact on demand on account of these price hikes? In any case, the current quarter that we're in, the monsoon quarter, does not see elevated demand for tires. How that pans out in terms of an up move for their EBITDA and EPS is something we'll watch out for. But that's about the tire space, value plus segment. Take a short break, come back on the other side. Manisha still with us, speaking about all things commodities, and she has with her Kunal Shah of Nirmal Bang.
Without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, their bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the examination, internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has, testing and an ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth.
Welcome back, and joining us now is Kunal Shah of Nirmal Bang. Kunal, hi, welcome. And this is a data-heavy week. I mean, we've started on Monday morning with various numbers coming in from China, but that hasn't had a very major impact on many of these industrial commodities because the markets believe that the China plenum meeting perhaps wouldn't really focus on real estate, but rather on manufacturing and other areas. How are you looking at those numbers, and what's your sense?
I believe that China has to focus on real estate. They cannot ignore real estate because 25% of their GDP comes from the real estate sector, and that has been reeling. So in the month of February, March, we've seen a good rally in the prices of base metals, and eventually in April, May, June, it fizzled out. So I believe that in this 5-year planning meeting, which is going to go for next 3 days, we believe that there is going to be a significant announcement on how to revive the real estate market, and that is going to be very bullish for metals. So right now they are subdued. The economic data from China has come disappointing, but I believe that something is in the store. In this meeting, you are going to see China may come up with some announcement about how they are going to stimulate their real estate market, the property sector, and that will lead to a spike in metals, and major short covering is expected. So I recommend to remain long in base metal complex, at least for this week. And I'm expecting in next 2-3 days, announcement from China about how they are going to revive their real estate sector. It is difficult, but they will be taking some of the other measures in order to revive this critical sector, which is leading a major drag on their economy. So I'm bullish on base metals.
All right. So bullish on base metals, at least for the current week, if not more. But Kunal, within the space as well, where do you see buying opportunities?
So if you see right now, the inventory of copper on LME is increasing, inventory of zinc is increasing, and that is basically leading to correction. So whichever metal is fundamentally bullish. So there are two metals which I like fundamentally. One is copper, another is aluminum. So these are the two metals where I recommend to go long going forward. And copper around current levels, 860 to 855, good levels to go long. You can expect copper to shoot up to levels of 905, 910. As far as aluminum is concerned, 225, good levels to go long. 235, 238. These are the kind of levels which you can expect to see in aluminum going forward. So copper and aluminum remains our top bet.
Fair point. Also talk to us about precious metal prices, because the Powell testimony yet again today. We've heard two speeches in the previous week, another one coming in today. Are you looking at support from this one as well for gold and silver? Because most of the economic data that we've seen come out from US are supportive of a rate cut now in September.
I think it's a no-brainer. We are going to see a rate cut. The reversal of rate cut cycle is going to start from the month of September. And in all this testimony, Mr. Powell is trying to reassure, that look, we have no option but to cut the rates. Inflation is coming down, job market is weak, the housing prices have started to go down. So all the reasons for them to, do the reversal of rate hike cycle. They cannot afford to keep 5.5% interest rate for a longer period of time. So I think there will be an indication coming from Powell to cut the rates in the month of September, because in the month of August, we don't have the Fed meeting. So September will be the month we are going to see the first rate cut from the US, and that will be overall sentimentally positive for all the commodities.
Fair point. That's something to watch out for. And well, yes, the CME Fed Tool Watch does show that there is a 93% probability now of a rate cut coming in for the month of September. That perhaps would be supportive. Kunal, as always, thank you so much for joining us and making sense of what really is working with metal prices right now. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.
You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
I think it is not euphoria, it is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody is talking about stock market only, that they want to trade, they want to make quick money, and they want to break their FD, and they want to. Somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again join stock market and all. So I think that this situation is not. Personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. Now the pricing power is coming with all these telecom service providers like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is for sure. Earlier we used to talk about in India.
Stocks drift lower after a strong start today with advances and declines evenly balanced. Energy and healthcare stocks are prominent gainers even as financials and capital goods are the soft spots.
Well, after TCS, it's a strong showing. HCL Tech reported growth ahead of estimates with inline margins. The company also holds on to its FY25 revenue and margin guidance.
MRF announces a hike in tyre prices for commercial and passenger vehicles from July 18th. The move coming on the back of rising costs boosts sentiment for the tyre stocks today.
And Aurobindo Pharma gains on weighing its maiden buyback. Strong asset growth lifts IRDA, and Tanla Platforms gets a fillip from a global tech majors contract, but Suven Pharma sulks on getting 2 US FDA observations for its unit.
Hello and welcome. You've tuned into Business Lunch on this Monday afternoon. I'm Nisha, and with me as always is Sonia. So Sonia, at the present moment, markets have recovered from the low point of the trading session and they are looking healthy and buoyant. Let's take stock of markets at lunch hour currently, and Nifty 50 just shy of 20 points from the trading day high level. And if you look at the across the board market momentum, about 160 odd points gained by Sensex. Bank Nifty is the one which is trading on the flat line but with a positive bias. But the real action is coming in from the larger universe, the mid-cap universe, which is outperforming the key indices and is up by 0.67% at the moment. Advanced decline ratio is completely neck and neck at this particular point in time. And on my screen, PSU company ONGC, and remember, PSU momentum had built up last week as well. So ONGC is the top gainer in terms of percentage gainers. SBI Life, Bajaj Auto are the others. A lot happening in the auto sector. And on the flip side, it's Asian Paints, Grasim, Tata Steel, some of the counters which are down in terms of percentage gain, in percentage drag, they are at the lowest level. Sonia.
Absolutely. I mean, there's no complaints at all in this market, right? It's a buyer's paradise. I mean, if you look at it, the way the market has moved in the last many days and weeks, today as well, it's really doing well, especially the broader market. The health of the market is very strong and so many points working in its favor, whether it's all-time highs for the US market, large buying coming in from foreign investors, good earnings coming in from the likes of technology names, all of that. And of course, we're heading into a budget which is expected to be market friendly. So all of that is leading to a big move in the market right now. But let's start the show with some stocks that are buzzing. HCL Tech surges as its first quarter numbers slightly beat street estimates. Constant currency revenue declines 1.6% sequentially versus an estimate of a 2% fall. Rima is here with more on that. Rima, over to you.
Thanks so much for that. So HCL Tech continuing with the positive momentum from Friday. On Friday, remember, the entire IT pack was on fire after TCS's performance. So for HCL Tech, as you rightly pointed out, Q1 was slightly ahead of street expectation, both on the revenue and on the margin. But hopes now have been rekindled, or there is further confidence about maybe there is an IT recovery, even though the managements right now are not calling it out. Because after TCS, HCL Tech becomes the second IT company where the numbers are slightly ahead. In fact, earlier today, the Nifty IT index hit its all-time high level. Motilal Oswal today is valuing HCL Tech at a 10% premium to Infosys. So they've upgraded the valuation multiple to 27 times. They say HCL Tech is likely to outperform Infosys for the third year in a row. Its free cash flow ratios are now comparable, have improved and now comparable to Infi and TCS. So HCL Tech remains Motilal Oswal's top IT pick. Their target price is at 1850, but not all are believers, because CLSA today has downgraded HCL Tech to a hold with a target price at 1556.
All right, Rima, thanks so much for giving us a quick review on HCL Tech. And let's now also listen into what the management had to say about the quarterly numbers as well as the outlook going forward. Take a listen.
This guidance of 3 to 5% is something which we gave in the beginning of the year. And we did factor in the first quarter softness, which is quite similar to the previous years. And of course, Q2 is going to be a growth quarter, and Q3 is where we usually deliver peak performance. And at this point, we feel confident of the overall guidance for the year. In the last 7 quarters or 8 quarters, there has been kind of differing kind of signals that we've been getting, and sometimes the ramp-ups are very short cycle and things like that. So that's why I've not called out any pickup in demand. The demand situation remains pretty much the same as what we had talked to you 3 months ago when we gave the annual guidance. I think our overall bookings came in quite in line with our last few quarter trends. We have been clocking about $2 billion of net new TCV for the last several quarters. With the exception being the Q2 of last financial year, where we had a big spike in the deal wins. This quarter, we expected it to be a little more, maybe 2.3, 2.4, and a couple of deals got moved to the next quarter. It is really nothing to do with anything to do with the macro or anything like that. It is just that the logistics of getting an agreement signed got delayed, and we expect that to happen in this quarter. Pipeline remains pretty much at the same levels as what we had in the beginning of April. We are expecting growth in all verticals. We also expect to grow in all geographies. However, 2 things to call out: financial services would decline because of the divestment that we had announced. And for the software business as well, it is a little bit weaker in the July, August, September quarter.
Okay, well, next up, Zomato is in focus after it hiked its platform fee from 5 rupees per order to 6 rupees per order in selective markets like Bengaluru and Delhi. Mangalam joins in for more details on that. Mangalam, over to you.
Well, Zomato's increased its platform fees in select markets by about 1 rupee per order. 5 rupees has been increased to about 6 rupees. What's interesting about this is that while this noticeable 1 rupee change may go unnoticed by those who order regularly, when you put all these orders together, it does make a difference to their EBITDA. So for instance, the company is expected to do anywhere between 85 to 90 crore orders this year. So a 1 rupee increase in some of its key markets could actually increase their EBITDA by about 40 to 50 odd crores, or 1 or 2% as per analysts. If you look at what Morgan Stanley has estimated, they say that every 1 rupee increase in the platform fee helps the blended take rate or contribution margins by about 20 basis points, or an adjusted EBITDA for their food delivery business by about 5 to 6% as well. But what's important this time around is to note two things. One, this hike is not across the portfolio or across their geographies. And secondly, you have to adjust this to the net impact of financial costs in context of discounted prices for gold memberships which are offered during renewals itself. So, you increase the platform fee and reduce the discount that has been offered and make that net, it is still a positive and a step in the right direction, because the overall thesis of Zomato is improving operating performance of the food business with moderate growth and strong growth coming in for Blinkit, along with decent operating performance improvement out there as well. And that would mean that the stock continues to move higher, and today as well has hit a fresh record high.
That's right, Mangalam. The very fact that they are able to increase the platform fee, even in select markets, that's really a positive aspect that the market is really looking at. Zomato up over 2%. Now let's focus on another stock which is buzzing in trade. Irida is up more than 3.5% after having reported its Q1 FY25 numbers. In fact, our colleague Abhishek Kothari is right here to tell us more about the numbers. Abhishek.
Well, strong business momentum has aided the results this time around, although operationally, if you take a look, the operating profits have declined on a sequential basis. So take a look at the AUM growth. It's at about 33.9% YOY and close to 5.5% sequentially. Quarter-on-quarter asset quality has improved, so gross NPA ratio has come down. Net NPA ratio has also come down by 4 to 5 basis points sequentially. Net interest margin has expanded both YOY and quarter-on-quarter, so net interest margin has come in at 3.29% versus 2.85% in the previous quarter. NII growth is at 37.5% YOY and about 5.5% sequentially. Now, operating profits have declined by 8.9% quarter-on-quarter. That's largely due to the fact that other income has declined on a sequential basis. There is a provision write back of 30 crore versus expense of 9.5 crore in the previous quarter, and that's aided the PAT this time around. PAT is up more than 30% YOY and about 13.7% on a sequential basis. Back to you.
Okay, thanks a lot, Abhishek, for that. Well, let's slip into a quick break. On the other side, former US President Donald Trump was shot at during a rally in an assassination attempt. We'll get you more on this after a break. Stay tuned.
So now this is roti, kapda, makan or mobile. As I always say that when my driver keeps two mobile, I keep only one mobile, but my driver keeps two mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
Welcome back. You're watching Business Lunch on CNBC TV18. Now, a big talking point from the United States is the assassination attempt that took place over the weekend on former President Donald Trump. While Trump was left with an injury on his ear, another attendee was killed and 2 others were critically injured. Several world leaders condemned the attack. CNBC's Steve Sedgwick has the latest on the attack and the shooter's identity.
The former U.S. president and presumptive Republican nominee Donald Trump has landed in Milwaukee for the Republican National Convention. This as America looks to see what the implications are of that assassination attempt that left him injured and a rally attendee dead, and what that could have in terms of implications on the country's political landscape. Mr. Trump says he was shot in the ear in Saturday's shooting. Trump says he has rewritten his convention speech to focus on unity, telling the Washington Examiner that the event is a chance to bring the country together. The address is expected Thursday. Well, our colleague Joe Kernan spoke to Mr. Trump on Sunday evening, saying the former president is, quote, doing great and is gratified by all the encouragement and support from both sides of the aisle. Meanwhile, the FBI says it's investigating the attack as a possible act of domestic terrorism after a number of suspicious devices were found in the home and car of the shooter, Thomas Matthew Crooks. The Secret Service is coming under increasing scrutiny after Saturday's attack. Sources familiar with the agency's operations have told NBC News the rooftop Crooks shot from was identified as a security vulnerability before the rally took place. The House and Senate Homeland Security Committees say they will investigate Saturday's assassination attempt.
All right, quite a shocking incident there and a violent one for U.S. elections. Now, the U.S. President Joe Biden also condemned the attack and gave an Oval Office address on Sunday, calling all the Americans to lower the temperature on political rhetoric, and also has asked for unity amongst the citizens. Listen in.
Disagreement is inevitable in American democracy. It's part of human nature. But politics must never be a literal battlefield, or God forbid, a killing field. I believe politics ought to be an arena for peaceful debate, to pursue justice, to make decisions guided by the Declaration of Independence and our Constitution. We stand for an America, not of extremism and fury, but of decency and grace. All of us now face a time of testing as the election approaches. And the higher the stakes, the more fervent the passions become. This places an added burden on each of us to ensure that no matter how strong our convictions, we must never descend into violence. The Republican convention will start tomorrow. I have no doubt they'll criticize my record and offer their own vision for this country. I'll be traveling this week making the case for our record and the vision, my vision of the country, our vision. I'll continue to speak out strongly for our democracy, stand up for our Constitution and the rule of law, call for action at the ballot box. No violence on our streets. That's how democracy should work.
Okay, that's an evolving story there. Let's take a quick break. When we return, we'll get you more news and updates on the other side. Stay with us.
ENT issues are far more common than you think, yet they often go undiagnosed and untreated. In India, some of the most common ENT problems are persistent ear infections to sinusitis and acid reflux. But there's more at stake. ENT conditions can deeply impact our quality of life. Take hearing loss. For example, it affects 5% of the global population, cutting across all age groups, from children born with it to musicians exposed to loud noises, and even those who suffer multiple or severe viral infections.
If you are the one who tries to sort of boost up your music and you're hearing it all the time, I told you 80 decibels and above for a prolonged period is going to cause damage. Earbuds in the ear. That's a no-no.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs.
If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significant stake.
Welcome back. You're watching Business Lunch, and great momentum in the market suddenly in the last 10 minutes of trade, propelled by the banking stocks. In fact, take a look at Bank Nifty with a sharp recovery seen, and all the companies, all the large companies like Kotak Mahindra Bank as well as ICICI Bank, Axis Bank, SBI, all of them are really participating in a sudden rise and recovery in the banking counters, and that's also impacting the overall Nifty gains as well. So keep an eye out on the market. But moving on to some news developments, well, sources tell CNBC-TV18 that the GST Council nominated Fitment Committee has not yet really considered Oil Ministry's proposal to include natural gas and ATF under GST. In fact, our colleague Timsi Jaipuria joins in with all the details on this. Tell us, Timsi.
Well, if you talk about whether the road has been cleared or not for ATF and natural gas to be included under GST, well, the answer is no. Sources have told CNBC-TV18 that the Council-nominated Fitment Committee has not yet considered the Oil Ministry's proposal to include natural gas and ATF under GST. Just to remind our viewers how it happens in the GST Council. First, the proposal is being sent by the Line Ministry. Then the Council-nominated Fitment Committee assesses the proposal, makes a recommendation to the Council, and only then Council starts discussing the proposal in the meeting. So right now, when we talk about whether the proposal has been made to the Fitment Committee, has the Fitment Committee considered the proposal? The answer is no. What we hear from sources is just that the Petroleum Ministry officials have met that is the Finance Ministry officials, which is a routine process. They keep on meeting, and there has been no commitment that has been given by the Finance Ministry on the matter referring to whether this proposal has been sent to the Fitment Committee or not. Also, Finance Ministry has expressed concerns rather over the past disagreement with states on this particular proposal to include natural gas and ATF under GST. Just to remind again, GST Council in the 45th meeting, as recent as 45th meeting, said that petroleum products are under GST. It is for the Council to decide the rates as and when it feels appropriate, and by thus meaning that as and when states feel appropriate. So let's see whether this proposal will again get back into shape or not. Well, as of now, as I said, sources say no commitment has been given. The proposal has not even reached Fitment Committee's table. Whether it will be considered or not, in the past, previous to this 45th meeting, the matter has been deferred time and again. So it becomes a very difficult call right now whether this proposal will actually see some light anytime soon or not.
Okay, Timsi, thanks a lot for that. Let's take a short break. But up next, Alcaraz defended his Wimbledon singles title and Spain won a record 4th Euro Cup title. More on that in a bit.
Much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
our own 25th year, with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're watching Business Lunch on CNBC TV18. Well, for the market, it's looking very good right now, so don't lose sight of that. The Nifty is now up 126 points. It's really going like a rocket. The mid-cap index is up 400 points right now, and there's no stopping the Sensex. It's almost at that 81,000 mark. Now, if you look at the stocks, right, there are many stocks that are hitting fresh highs today. So whether it's Zomato, we just spoke about that a while back, 2.5% higher. Something like an IRDA is at a fresh high as well. A lot of these PSU names, NHPC, IRFC, ONGC, GAIL, all at fresh 52-week highs. So the PSU bunch has been really, really strong at this point in time. But on to some weather updates now. Heavy rainfall predicted in parts of Gujarat and Maharashtra due to a cyclonic circulation formed around North Gujarat. The financial capital Mumbai is also on the radar for heavy rainfall. The heavy rains over the weekend has led to significant waterlogging and traffic disruptions. More precautions have been put in place ahead of more rains expected over the week. IMD predicts light to moderate rainfalls with the thunderstorms and lightning across the Konkan coast, Goa, Kerala, Karnataka, while scattered rainfall can be expected in coastal Andhra Pradesh and Telangana.
All right, so monsoons in full swing, but this is the best part of the show. It has been quite a crazy sporting weekend that we have seen. Let's get you some highlights and bringing you some updates from that. In the Wimbledon men's singles finals on Sunday, Carlos Alcaraz defeated Novak Djokovic in straight set to successfully defend his Wimbledon men's singles crown. Now, the outcome is a rerun of the 2023 tournament in which Alcaraz defeated Djokovic in 5 sets. Alcaraz now has 4 Grand Slam trophies with a perfect record in major finals. After his 2 Wimbledon triumphs in 2022 and 2024, his defeat denied Djokovic a 25th Grand Slam title to surpass Margaret and caught in the all-time list. So that's a dampener for Djokovic, who's an all-time favorite, but Alcaraz played really well, Sonia.
Absolutely. I mean, it was ruthless, right? Aggressive, ruthless. He had a focus, 1-point agenda to win it, to get it back.
Full and energy over there.
Absolutely, absolutely. No two ways about that. But moving on to some updates from the Euro Cup 2024 finals. Spain is crowned Euro 2024 winner after a thrilling 2-1 victory over England. Spain substitute Mikel Oyarzabal slid in for an 86th minute winner to earn his team a 2-1 final victory. Spain won all 7 games they played in the tournament. This marks an unprecedented 4th Euro championship for Spain, with the previous victories in 1964, 2008 and 2012.
All right, so it was a very good day for Spain in terms of the world of sports yesterday. When we talk about Euro, when we talk about Wimbledon, so Spanish guys really doing it well. Let's talk about Argentina's dream run in global football continues. Less than 2 years after lifting the FIFA World Cup, the South American team has emerged as the continental champions. Argentina beat Colombia 1-0, giving the team a record 16th title, and Lautaro Martinez, the tournament's leading scorer, scored in the 112th minute to spark wild celebrations amongst the Argentina fans.
Well, that's all the time we have on Business Lunch. Thanks a lot for watching. Midcap Radar comes up next. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. Yes. And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now. As per the recommendations of the Bimal Jalan committee, we have an economic capital framework. Yes. It is principle based, it is formula based. Yes. There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan committee. We follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the, let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the Central Board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
The retail participation has been something that everyone's been appreciating, and personally as well, most of your money goes into SIPs, which we believe that over a longer span of time, well, it'll hold well. The only fear is retail getting into a bit of a trap, and that's the fear, but that's been the case as well. If you look at the SIP numbers, well, beautiful looking numbers. In the last 6-7 years or so, that retail number, the SIP number that you're seeing has moved up from around 3.5.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Record highs for mid-caps, Nifty, Bank Nifty, all at the day's high. And even that dip on Bank Nifty, it was bought into. The mid-caps are doing well. So markets in its own zone right now. But yes, turning out to be a good Monday for the bulls.
Good Monday for the bulls. Market doing quite well, as you can see on the top of your screen. A slight dip in the Bank Nifty, like you mentioned, but it's recovered quite sharply, especially in the last hour, which has been led by the PSU banks doing quite well, especially in the last hour. Quite a lot lined up on the show today. Let's start off with the top headlines. Gains continue on Dalal Street. The Sensex and the Nifty well in the green, led by PSU banks, pharma and auto stocks. Mid-caps relatively outperformed.
MRF announces a hike in tyre prices for commercial and passenger vehicles from July 18th. The move coming on the back of rising costs. Other stocks like Apollo Tyres, JK Tyre and SIAT gain anywhere between 4 to 8%.
Antony Waste gains over 6% on the back of its Q1 FY25 business update. Core revenue up 11% on a year-on-year basis. Municipal solid waste handle jumps to a 4-quarter high.
IREDA is up nearly 4% after reporting its Q1 numbers. Assets under management rise 34% on a YY basis, while profit after tax is up 14% on a sequential basis. Okay, all right, those are the top headlines. By the way, Bank of Maharashtra's numbers flashing for you at the bottom of your screen. The stock is locked in upper circuit. I think it's up 4.5%, yes, right now. Net profit up 46% on a YY basis. The NII number, that also looked good. It was up 20% on a YY basis. Of course, we'll have to look at the asset quality as well. What has the movement been for gross NPA and net NPA? But so far, going by these numbers, looks like it is a good set, and the stock is surging as well. So earnings, that is something we are tracking very closely. That will decide the mood of the markets. For now, it's buoyant. We have seen both the Bank Nifty and Nifty at the day's high. As Vivek mentioned earlier, PSU Banking Index doing really well. There you go. And gross NPA has improved on a sequential basis. A mild improvement, but something that the street likes for sure. And it's the PSU banking space which is doing really well today. So up 2.5% there. In fact, more than that, it's closer to that 3% mark. It's looking good so far.
Especially, if you could pull up the intraday charts of SBI and Bank of Baroda. We just saw Bank of Maharashtra's results, especially those two is where you've seen some significant buying happening, especially in the last hour of the trading session. But this is mid-cap movers, and we have Hormas at the wall to take us through all of the mid-caps that are moving around in the session today.
You come, you make a new record high and you go back. That's become the trend these days in the market, and the broader markets are also continuing to do well for themselves. So we'll start off with some of the movers that are doing the talking here in today's trading session, and Godfrey Phillips is one of them, seeing some very healthy gains today, 16% higher now at the highest point of the day. 4,700 now is Godfrey Phillips. There was HPL Electric that was doing well last week, and now HBL Power is doing well in today's session, 11% higher there. Tanla Platforms, after it signed that commercial agreement, is now up 9%, and Macrotech is having a very good day today, 7% higher now, almost at 1,500 is the stock. Some other movers that are doing well today, and that come from the PSU banking space. As you guys were just highlighting, the index is up 3%. Bank of Maharashtra is now up 5% after the results. The other constituents as well, 8.5% higher for Indian Overseas Bank, 5.5% for UCO Bank. The entire index doing well, all constituents trading with gains. Tire stocks have been in focus as well. They have been in firm grip ever since the start of the trading session after the price hike by MRF. JK Tyre, CEAT, Apollo, all of them seeing gains of anywhere between 4 to 7%. Volumes, the stocks that are doing well on the back of very heavy volumes today. Vardhaman Textiles continues to do well, 6% higher there. Zensar is doing well, as is Crisil, and IndiaMart has sprung up today, 4% higher on very strong volumes. And lastly, some stocks that are witnessing some profit booking from higher levels. Sundaram Finance is one of them, the top loser on the Nifty 500 today, 4.5% lower. And then, of course, the high-flying shipbuilders, Mazagon Dock, Garden Reach, Cochin Shipyard, all of them seeing gains, losses of anywhere between 2.5 to 3%. Back to you.
Okay, all right. So those are some movers in the broader markets. Let's now welcome Ashish Kyal. Thank you, Hormas, by the way, for joining us. But it's time to welcome Ashish Kyal from Wave Strategy Advisors for a technical check on the markets. Ashish, good afternoon. Thank you so much for joining us. Well, if you can quickly tell us, what are the next levels you're watching out for in the Nifty? Is there some more upside left to these levels, and any individual names?
Hi, afternoon to you and all the viewers. If you look at Nifty, it has been touching the lifetime highs every other day, and so I'll not try to catch a top here. Rather, any kind of a dip in this kind of a market should be used as a buying opportunity. With respect to the level, I think Nifty can be headed towards 24,728, 24,730 levels, which is the GAN level, and I'm expecting it to be reaching there quite fast. On the downside, the support for the index is going to be around 24,500, where we can clearly see a lot of put buildup has happened, and there are call sellers at 24,500 which are yet to cover. So I am expecting more short covering over near term, and we can expect Nifty to touch that level of 24,730. So the overall tone remains bullish as long as the prices are trading above that 24,500 levels. With respect to individual stocks, we can clearly see MCX has shown a very smart reversal from the lower levels. We can expect it to be touching the highs of around 4175. That can be the target for MCX. It is also forming an inverted head and shoulder pattern, and we can expect a breakout soon. The stop loss for the stock can be maintained at 3765 on the downside. And with respect to the other stock, MGL, we can clearly see Mahanagar Gas has shown a spectacular run up from the 1200 mark towards that 1740, and now it has consolidated for some time and ready to give another breakout. Volumes are picking up. The stock is managing to find its support around the 10 days average. So looks like we can have another run up in MGL for the targets of 1870, and on the downside, stop loss can be maintained at 1680 levels.
Thank you so much, Ashish, for that. So your top picks is MCX as well as MGL. Let's now slip into a short break. On the other side, we will be putting focus on fractional ownership in real estate assets with Chintan Patel from KPMG India and Boman Irani from CredEye as they discuss the report on the small and medium REITs. Stay tuned.
To around 21,000 crores, which is very, very encouraging, up close to around 6 times odd in 7 years. As a proportion of the total free float, Motilal Oswal, they have put out this note, which they have titled the Retail Rhapsody. And they have highlighted that, as a proportion of the total free float of Indian market capitalization, the DIs and the retail, well, their holding has gone up substantially from around 55% all the way to around 63%. Not just their holding, but even their participation has gone up, quite a bit. So in the last 10 years or so, the non-institutional participation has gone up from around 38% to around 52% or thereabouts. Some on the street would say, well, that's a little bit scary, but those are the data points that's put out by Motilal Oswal. You have the FII flows, they've been quite volatile, and that's been the case. If you look at the monthly flows, the FII flows, well, they've been all over the place. But the encouraging part is the DII flows. And in the first half of this calendar year so far, you just take a look at it, well, the DII flows at the half-year mark are more than what we saw in the entire of last year. So the DII flows have been the key reason that have been driving this market higher. Since we have the retail support, the domestic flows as well, that's led to a relative outperformance. And that's why, the weightage on the MSCI index has moved up from the mid-single digits all the way to around 19%. Because when the markets move up, higher market capitalization, that's resulting in a higher weightage. The problem is, the question that people are putting out is, are retailers getting into a bit of a trap? At least as of now, that narrative that India's retailers, well, they buy at the top and they sell at the bottom, well, that's not yet happened. So as of now, it appears that that saying is actually reversed. And this time around, they could possibly get it right. The only problem is 2 factors. We've been talking about PEs and other data points. Just want to highlight India's market cap to GDP. As of now, it is at a relatively higher level if you compare with what we have seen on average of around 85%. So that's one data point. And the other one is the outperformance of the broader markets. Whether you look at the mid cap, you look at the small cap space, well, that's been where the big money is. And that's over a 5-year horizon that I put out these numbers. Well, in the shorter duration, that's in the last 1 year or so, well,
Welcome back. SEBI, a few months back, implemented new regulatory structure aimed at enhancing fractional ownership in real estate. This is for small and medium investors. KPMG and CredEye have come up with a report on small and medium REITs explaining what the contours are, and it explores fractional ownership platforms in depth. To discuss more on the report and growth outlook for small and medium-sized REITs, Chintan Patel from KPMG India and Boman R. Irani, President of CredEye, is joining us now. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Patel, let me come to you first up. It's been a while since this particular regulation was announced. Have we seen more interest come by from small and medium investors? What kind of benefits do you see this pool of investors could see by investing in fractional ownership?
Good afternoon. Absolutely. I think this is just at the cusp. So the SEBI guidelines were confirmed in March. So this is a grace period within which a lot of the fractional ownership companies are now starting to look at following the regulation and list as what we call SM REIT now. This will definitely help and give investors a potential ability to invest in a slice of real estate. Historically, mutual funds, equities were all available, but for small and medium-sized investors, real estate was not easily accessible unless you were to own something on your own, largely residential. But now, if there was anyways an intent to own commercial real estate, which is definitely doing well right now, this gives you the ability to do that for small investors.
Good afternoon, Chintan, as well as Boman. Boman, if I could bring you into this particular discussion, give me the sense from both of the views. Number one, how does an investor, a small investor, actually benefit from getting into this particular platform, given the fact that he actually has an option in terms of actually going ahead and investing in a REIT which is listed? And on the other hand, how does a developer actually benefit from raising funds via this particular route? Boman, I think you're on mute. Could you unmute yourself?
I realize. Can you hear me now?
Yes, we can.
Okay, great. So, guys, first of all, thank you for raising this topic. It's so important for our small retail investors to understand that with the Jeffries report, we read that 66% of the Indian population invests in either real estate or gold. That means we are all about hard assets. We are all about real assets. With the advent of the REIT, what we saw was people were very it was decentralized, or it was democratized for you to be able to own real estate without actually having to go and put up a large packet size. With the SM REIT, what has happened is the government has gone ahead and allowed for smaller assets, that is between 50 and 500 crores, to be listed as SM REITs. So this allows for assets within your neighborhood, in your area of knowledge, getting actually listed, and makes it a lot more visual for people to do. I'm sure there are tons of other advantages, and I'll let Chintan touch upon them. But what used to happen earlier was that an investor was allowed to invest 10 to 15,000 bucks per unit. Now he has to invest 10 lakh rupees. So there's a little more skin in the game of the investor. The REIT has got to be run professionally. The REIT has got to be owned 5% by the REIT or 15% by the REIT, depending on the debt on it. Chintan, just clarify that part. I'm not exactly clear whether SM REITs also require you to own 15% if there's a debt. But this makes it a lot more lucrative for developers. And I'll tell you how. Because developers who are developing smaller properties, they can actually put these properties up for REIT, anything that is above 50 crores and up to 500 crores. And this allows for an additional line of funding other than the traditional debt that used to be allowed. So I think this will bring a lot more money in. And like Chintan has already touched upon, you want to be able to kind of invest in commercial property because commercial property is rising. And there's almost been a 3x rise in prices of commercial property over the last 10 years. And this leads to a very attractive investment that, is opened up to the public at large. So I think overall, a great step in the right direction. And then, we can ask more questions.
No, of course. So, Mr. Patel, let me come to you on that because we have been talking about how commercial real estate has been doing well. What kind of returns can small and medium investors see here? Is liquidity a problem? Could that be one of the disadvantages? Or do you think locking in your money for a longer period of time could be beneficial for you as an investor?
Just to kind of first answer, I think the piece that Bowman kind of mentioned, right? The 15% and the 5%. So if your building is not levered, Bowman, you're absolutely right. If your building is not levered, you need to hold 5%. If your building is levered, you need to have at least 15%. So that's the point. So just coming back to your point, does it really make sense? Because here the ability is generally when you own traditional real estate, you have to pay a lot of registration fees, stamp duty, a lot of that. You generally holding period is also longer because it's not easy to keep on flipping assets, unlike what you have in the traditional equity world. So what SM REIT gives you the option as an individual investor with the ability to invest 10 lakhs, and I'll come to a point on why that 10 lakhs is also a critical point, but just sticking to the point. So if you invest 10 lakhs, buy a unit, your ability to then use that capital as and when you need it without having to go through the full-blown process of buying or selling real estate, plus going through the registration, investments and all of that, you can own a piece of real estate by putting in 10 lakhs and then sell it when you need it. And in the period when you're owning the real estate, you can enjoy the returns. In most cases, if it's commercial property, then when you have a tenant in the building, they are paying rent. That rent, after all expenses, is distributed. In the case of SM REIT, unlike the traditional REIT, where only 90% gets distributed, under SM REIT, 100% has to be distributed to the owners. So that becomes an income for the period. And I think it's generally a fairly decent return is what I understand. And we'll see more once these SM REITs are kind of listed, and we'll see what happens on that. But so far, people that have made investments in fractional ownerships generally have seen good returns because the way the markets are also performing right now.
Bowman, if I could bring you in, realistically speaking, after taking into account the cost structure and especially the kind of fees that the investment manager will be charging, along with that, there is also a regulation that requires you to distribute a certain amount of the money that you earn as dividend back to this particular or to the investor. So in that case, post-tax, what is the anticipated return that one can make, one can expect? And secondly, do you think going forward, listing onto the exchanges like a REIT is the next logical step?
First of all, just to add to Chintan's point, you're taking away 6% of the cost of the transaction by just taking away stamp duty, right? So that itself is number one. Two is, if we've seen investors generally want a clean, clear, non-hassle way of owning things, and that's why the equity markets are really growing the way they are. Now, when you take real estate, which is a real asset, and you tell people that there is zero hassle in it, you come, you buy one unit, and you've got it for yourself. Whenever you want liquidity, you can get liquidity on it, and through the period when you're holding it, you can get a return on it, and that 200% of the amount of money is distributed. With the original REITs, I think they were trading at 8.5%, so which was a good return at that point of time. And with the SM REITs, I think more or less you'll have the same. There will be managers who will do it a lot more efficiently and charge maybe a lower fee if they've got a larger portfolio of assets under them. And then there will be managers who will be there for the short term and then will have to exit the business. But that is a business call. I do not have an answer for you how much a SM REIT will get. But the one thing I can assure you is that investors will make a beeline towards this only because they'll have a lot more peace of mind in the investment process and will also save 6% of the value of the investment by only cutting out the stamp duty itself.
We take that point, and with the possibility of an interest rate cut, REITs in general become an attractive asset class to invest in as well. Gentlemen, we would have loved to chat a lot more, but we are having this conversation in the midst of thick earnings season, so we'll continue this some other time. But thank you so much for joining us today with your take. This is an interesting asset class and a regulation as well, so we'll see more progress on this one as well. We'll slip into a short break. We'll get you more on the markets and stock-specific action, a lot of them reacting to earnings as well, so stay tuned for that.
More startling.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has testing and an ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics that are reporting?
Welcome back to Mid-Cap Radar. Markets continue to trend near the day's highest point. But one stock that's doing quite well in the session today is Antony Waste Handling. The stock has surged on the back of a strong Q1 business update. Vamakshi joins in with more details.
Well, absolutely. It's a strong update coming in from Antony Waste. When we look at the core revenue, that saw an uptick of almost 11% on a YOY basis in the first quarter. This is much better as compared to nearly 3.4% growth that the company saw in the fourth quarter. Largely, this growth is being driven by a couple of factors, which includes various escalation in tipping fees and revenues from fixed shifts, trips, as well as household fees. They also benefited from steady contributions from new collection and transportation, that is CNT project at Panvel, power sweeping projects in Nagpur and PCMC. Additionally, revenue from sale of power from waste to energy project also contributed to the growth as far as the core revenue is concerned. When we look at the MSW handle, that is the municipal solid waste handle, that is at a 4-quarter high. It stood at 1.18 million tons, which is an improvement on a sequential basis as well. Apart from that, the waste to energy plant, which is located at Pimpri, reported a plant load factor, that is a PLF, of 89%. This is much better as compared to 71% that we saw in the last quarter. Apart from that, sale of refuse derived fuel, that is RDF, stood at 34,000 tons, which is an uptick of almost 23%. Compost sales were also better. In fact, they doubled over the last year. And in fact, the management has also shared an outlook going forward for the year ahead. And they say that they anticipate achieving significant milestones. They're also looking forward to launch a construction and debris processing project in Mumbai, and they also aim to sustain the operational parameters at all of their other operational sites. Overall, it looks like a good quarterly update from Antony Waste.
Okay, the amount of waste we generate on a daily basis is baffling, but as long as it's getting treated, that's Antony Waste Handling. But Godfrey Phillips is buzzing in trade today, and how? It's up almost 17% the last time I checked. Manglam is joining us now. This is our special segment, Midcap Spotlight. Manglam, what's happening here?
It's smoking hot. That's the one thing that one can say about Godfrey Phillips. You know, it's an up move of almost 17% in today's trading session, backed by a lot of volumes as well. But if you look at this year itself, from the start of this year, the stock is actually up 125%. And if you look at it from a last year basis, the stock has nearly tripled. Almost 190% move is what we've seen from last July to now itself. And there are fundamental reasons backing that as well. If you look at, the cigarette industry volume growth, you would see, on your screen that VST Industries over the last many quarters has reported volume decline. ITC has reported volume increase, but it's better than VST, but it's not as good as Godfrey Phillips. So if you look at the last 5 quarters of Godfrey Phillips, the volume growth in Q3 FY23 was close to 23%, Q4 FY23 was 18%, and even last quarter was 18%. All of last year was up 11%, much higher than all the others in the industry combined, and as a result of which the case is that they've gained market share in that space as well. The key trigger for all these tobacco stocks ahead of the budget is there is pre-buying by dealers ahead of budget. Typically, dealers stock up on cigarette inventory ahead of the budget to benefit from any sort of tax increase that may come by in the budget as well. Last year, there was a 16% increase in the NCCD. So the expectations this time around are low, but even if there is a mild increase, it wouldn't hurt as much if it was beyond 10-12% already. The triggers for Godfrey itself would be Marlboro, gaining market share from some mainstream players, pan-India distribution expansion of Marlboro Compact of 10 rupees, per stick cigarette, and the recent launch that they did of Stellar Shift Duos, which is 12 rupees per stick, has garnered favorable response. But at favorable response, there's high valuation for the stock as well. If you spoke at the start of this year, it was at a steep discount to ITC and at par with VST. But now the stock is trading at 32 times one-year forward earnings as against ITC, which is 26 times, and VST Industries, which is up 20%, which is at 20 times one-year forward price to earnings.
Thank you so much, Manglam, for that, and bringing into depth the entire reason behind the up move for Godfrey Phillips. But the next stock on the radar is Bank of Maharashtra. Just a few minutes ago, you saw the company's results getting flashed on your screen. Abhishek has looked at the P&L in detail. Abhishek, take us through the numbers.
Well, the first cut shows that, it's an impressive set of results X of one-offs. Now, you need to start getting used to the one-offs that are coming in with respect to NPS as and when credit cost starts to normalize going ahead. So, yield has helped the bank with reference to interest income, being strong over there, and that is aiding the NII growth. So, take a look at the interest income. It's up 7.5% quarter-on-quarter versus a loan growth of 2.7% sequentially. So, calculation does show that net interest income has been aided by the yielding factor. So, net interest income is up 19.6% YOY and 8.3% quarter-on-quarter. The overall loan growth is at 19.5% YOY and just 2.7% sequentially. Other income is down 12.5% quarter-on-quarter, and that's to do with the fee income. Fee income is down more than 30% quarter-on-quarter, and that's impacted the overall other income. Cost to income ratio is at 37.9% versus 38.7%. This has been helped by the other expenses, which have declined more than 8% sequentially. NPA provisions, now this is the worry part, that's increased by 28.5% quarter-on-quarter, but annualized slippage ratio is at just 1.1%. So we are starting to see a normalization of credit costs for the entire sector, and hence take it with a pinch of salt, but normalization of credit costs has started to happen. Gross NPA value-wise is up 1% quarter-on-quarter. Net NPA value-wise is up 1.5% quarter-on-quarter. However, asset quality as a ratio, both gross NPA ratio and net NPA ratio have improved on a sequential basis. Back to you.
Okay, all right. Thank you, Abhishek, for joining us with the analysis. So that is Bank of Maharashtra's numbers. The stock up 5%. And with that, we've completely run out of time on this edition of Midcap Radar. Stay tuned. Your stocks when we return.
Indicated that we just don't feel the need to brush more than once a day.
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
I think it is not euphoria. It is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to, break their FD, and they want to, somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again, join stock market and all. So I think that this situation is not, personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market.
Hello and welcome to Your Stocks on CNBC-TV18 in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of traction in the markets. So we have the Nifty, which is up around 0.5%, the mid-cap index, which has picked up pace as well, so up around 0.8% currently for the mid-cap index, and the Bank Nifty, which is doing well as well, so up around 0.6% currently for the Bank Nifty. In terms of the advanced decline ratio, largely even keel, so 1:1 is currently where the advanced decline ratio is at. But on the show today, we have a special conversation lined up to discuss the big run-up in equities, the retail rush that we've seen, SEBI's recent measures in terms of investor protection, as well as the IPO rush, and a lot more topics to cover. We have Dheeraj Relly, who's the MD and CEO at HDFC Securities, joining in for a special conversation. Dheeraj, thank you very much for joining in to our studios. Well, I want to start by discussing the big run-up in equities that we've seen. The statistics are mind-boggling. Nifty's up around 46% from those March 2023 lows and sitting at record highs almost every single day. give us a sense in terms of where the markets would go from here on, and do you think that there's a bit of a valuation stretch?
So, hi, thank you for having me. I think this has been the bone of contention for all market participants and investors as well, whether markets have run ahead of the earnings. I think if you look at last 4 years or so, earnings have compounded almost 18% compounded annual growth rate. So to that extent, I would not say that the valuations are stretched, but you know they are stretched to some extent, but not euphoric for sure.
Okay,
yeah.
So not euphoric for sure, but do you think that this incremental amount of flows that we've seen from, say, DIIs would probably then continue on a continuous basis? And where would the FII stand when it comes to, say, sustained investments into the Indian markets?
So look, first, you know, currently, if we look at the Nifty, it is, if you look at forward EPS of FY25, it is at 23 valuation. So to that extent, valuations are a bit stretched. It's at +2 standard deviation levels. And it is largely on the back of domestic flows. You can't quarrel with the liquidity. We have seen enough and more investors participating in the capital markets through direct equity route or through mutual fund route. All of us are well aware of how we are getting the inflows in the mutual funds. We recently got the data for June month. SIP flows are at 21,262 crores level. We got equity mutual fund flows of 40,000 plus. So to that extent, you know, there have been robust flows from the domestic investors. Even if you see the new additions in the DMAT, almost 43 lakh accounts have added in the last month itself. So from that point of view, we are seeing more and more participation coming in from the retail investors, and I think this trend will continue. I was looking at the SIP data on a year-on-year growth. It is almost 44% growth in 1 year. From 14,000 crore, it moved to the 21,000 crore. So we are seeing more traction from the retail investors, and I don't see this as a short-term trend. This is a structural theme, and this will continue for some more time. And I think I call it equitization of investments. You would have heard about the financialization of savings, and everyone talks about that we are now, investors are now moving more and more money to the financial assets. But within the financial assets also, there is a shift towards the equity as an asset class. And this is on the bedrock of change in the behavior, aptitude and risk appetite of the investors at large. Still, if you look at the equity penetration, this is just about hovering 5-6% versus China at 14% and US at upwards of 61% or so. So to that extent, I think we have a long runway ahead of us in terms of domestic inflows. Coming back to the FPI's inflows, I think we are not seeing any significant change in the trend, either on the positive side or on the negative side. It is all got to do with the liquidity. FPIs do have a liquidity, but they have an alternative options to leverage that liquidity to another emerging markets or to other asset classes. And for them, when you have a market cap to GDP ratio of 145% and most of the other emerging markets are less than 100%, I think they have an option to move the liquidity somewhere else for the time being, whereas domestic liquidity is more married to the Indian domestic markets.
Okay, all right. Well, just talking about the SIP flows, then you expect this number that we've seen, say that 21,000 or a crore number that we saw in the month of June, to probably expand on a month-on-month basis?
In fact, I authored one article on how this SIP flows can improve. So if you look at the 2016 to now, this has been growing at a compounded annual growth rate of almost 2% per month. Okay, and if we use the same 2% per month extrapolation, by January 2028, this should be 50,000 crore, and December 2030, this should be 1 lakh crore. I know it's an extrapolation only, but we are extrapolating on the back of 8 years data and not just about a small period trend.
Okay, but no kind of short-term correction would probably deter the investor, even if it's a significant enough correction which could probably take place?
See, we are also seeing some kind of a closure in the SIPs, and that has also been amply covered in the media, that there are closures in the SIPs and so on. But my take is that, that is part and parcel of it. Some people would have some requirement, some urgency, so they would take out funds, move from one SIP to another SIP because new thematic schemes are coming up, newer sector rotations is happening in the market, so they may want to move from large cap to mid cap to large cap and so on. But structural trends are very much intact, and I'll tell you why it will grow from here onwards also. The average ticket size for SIP is 2,368. I think this is too small an amount. Even if you invest 5,000 rupees a month, it is 60,000 per annum, and 10 years, 6 lakh rupees only. Whatever compounding you may choose, it will go to only 15 odd lakh rupees. So what can you buy 10 year hence from at 15 lakh rupees? Not even a decent sized car, and forget about the home. So my take is that I think there is this concept of staggered investing in the form of SIP has been sold, and people are well entrenched with this as a concept. So my take is that now is the time where not only number of SIP will grow, but also we will see that the value will also increase, ticket sizes will also increase. We've already started having this conversation with our investors. Look, you've tasted the success. It's time to put a sizable amount in the form of SIPs. And in any case, coming back to your question, are these the right levels to invest in the market? By the way, I've been grappling this question for last 20 years. When around 2005, Nifty was at 5,000 level also. Then also everybody questioned, is this a right level to invest in the markets? My take is that the retail investors particularly have cracked this problem because they can't deal with the volatility. They have figured out a solution called SIP, and they're very happy with this solution.
Okay, but what is the near-term risk for the markets? Are you expecting probably any kind of risk which could result in a correction? If so, how much could it be incrementally?
See, when you are having a stretch valuation of mid cap, small cap at 26, 27 P multiple on FY 25 earnings, obviously the margin of error is huge. Any kind of a negative news from the market, any negative earning report can lead to a dramatic correction in the market, and 10 to 15% kind of a corrections can come on the back of FPI's outflows, inflation remaining stubborn, some geopolitical issue in the Middle East, and so on. So there could be many more factors that could derail the momentum, but that correction would be healthy correction, and as I said, that staggered investing is the way to go.
But we're not in that frothy zone when it comes to mid caps and small caps as yet.
Most of the mid caps and small cap stocks at their level are run ahead of the earnings expectations, and there is a froth in the valuation. When you are operating at a 80 to 100 P multiple, you can't say that these are fair valuations, and particularly when the earning trajectory is also on a base looking now onwards tapering off. See, total earnings grew in last 4 years at 20%, but what we are seeing in our universe, the earnings will grow at 12 to 13% only. So if earning growth is not aligned with the valuations, then the corrections can be steeper. So my suggestion is that right now, if investors are looking forward for a new entry in the market, the best way for them to go to about certain sectors where we haven't seen the stretch in the valuations, and that's what we saw in the IT sector last week. I was looking at the top 5 gainers in the Nifty. All 5 stocks were IT stocks only, and they've gained 3.5% to 6%.
Okay. Well, just talking about that, then would you recommend maybe retail investors should probably look at an IT specific fund, or reinvesting, or reallocating their funds towards IT?
I think thematic funds are for more evolved customers. When they have invested in most of the other forms in the equity, then they look at specifically leveraging thematic funds. My take is that large cap or Nifty ETF would be a better bet for them. What we are advising our customers is diversified portfolio and not so much concentrated portfolio. One can look at equal weight Nifty ETFs also. One can look at large cap funds also. We know that there are some leg room for the upside in the BFSI space, particularly in the private sector banks and few large PSUs also, and also the asset management companies and insurance. So to that extent, IT is also one space which will contribute to the growth of these large caps. And also we are seeing some green shoots in the rural demand. So to that extent, that would impact the FMCG and staples and some discretionary stocks as well.
Okay. Well, you know, SEBI has been extremely active when it comes to investor protection. For example, the recent measures with regards to the criteria for entry and exit of F&O stocks, and they're focused on market development, investor protection and risk. From that perspective, do you expect more measures from SEBI, and how important would it be for investor protection?
I think the criteria to include and exclude stocks for the F&O was something changed in last 2017-18. Since then, the volume and the traction has changed in the market. That was something discussed in the at length in Secondary Market Advisory Committee of SEBI, and I am a member of that committee. So to that extent, we had a full calibration, and based on the current need, that criteria has changed. It wasn't intended to reduce the number of stocks. It was just to get the right set of stocks to be in the F&O. SEBI has been taking some slew of measures to ensure that if there is any euphoria in the F&O space, that can be addressed. To that extent, more action is on the anvil. Today also at 5 p.m. we have one meeting, and I can't give you more details on what we will cover in that meeting. But I think in a nutshell, these are steps in the right direction, and this will bring in the sanity in the markets.
Okay, all right, Dheeraj, it's been a pleasure. Thank you very much for joining in and speaking to us about a whole host of topics with regards to the markets. Thanks very much, and we'll surely touch base with you and discuss any kind of incremental SEBI measures which come through as well. We'll take a short break, but more news and updates on the other side. Stay tuned.
Now the pricing power is coming with all these telecom service providers, like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it.
Welcome back. Well, for the mid-cap index doing well, up around 0.8%, we have with us Astha Jain, research analyst at HEM Securities, Ruchit Jain, who is joining in on the technicals to discuss all of your stock queries. But before that, let's get in some views with regards to HDFC Life, where we can see a couple of statistics which are flashing on your screen with regards to HDFC Life. That stock is up around 0.9%, reacting to its numbers. The retail APE has come in at around 2,467 odd crores, which is largely in line with our estimates. And a couple of other stats such as the VNB, which is at around 718 odd crores, which is again a little lower than what we were expecting at around 730 odd crores. The stock is seeing a little bit of pressure, so just about higher by around 0.5%. There's a little bit of a nick which has come in, but we'll get you more details on that. That's HDFC Life for you. But now let's move on to an exclusive. On the sidelines of the India-Singapore Connect event, our colleague Shireen Ban caught up with DBS's global CEO Piyush Gupta, who spoke about the growing economic ties between India and Singapore, the acquisition of Lakshmi Vilas Bank, and much more. Listen in.
In the middle of COVID, we had the opportunity to acquire a distressed bank, Lakshmi Vilas Bank, through a competitive process. And that obviously has changed the complexion of our business manifold. We're now 500 plus branches. We're in 350 cities. And so we have a scale today that we certainly did not even 10 years ago. Now, like many other international players, we paid tuition fees along the way. But I have to say, today, India is our fastest growing business, even though the LBB franchise will still take some time to make it profitable. But in aggregate, it is our fastest growing business.
What about, appetite for putting more money to use in India? You talked about Lakshmi Vilas Bank and how that's playing out for you. I know that the government hasn't moved so far as its bank privatization plan is concerned, but IDBI Bank is still up for grabs and that hasn't moved. Is that a potential area of interest?
If you look at our M&A strategy for the group in the last decade, we like to do bolt-on deals that we can integrate and create value from. So large transformational M&As in banking are very challenging and rarely work. And so that's been our mindset. Do enough, consolidate, and then build your own capabilities at the same time. And so I will say we're always open and on the lookout to do the right kind of deal, but it's got to be a kind of deal that we think we have the management bandwidth to bring some value to.
Well, speaking of value, you've had a very strong Q1, record net profit, total income return on equity, and it's been a great run for banks, not just globally, but here in India as well. As you look at the future, macros continue to be fairly resilient, even though geopolitics is uncertain. What do you see going forward?
What's been obvious, the tailwind banking has had is that interest rates have been high. And so that's helped the net interest margin of most banks. That's obviously quite helpful.
So you're factoring in 1 or 2 cuts this year?
I think probably 2 is my bet, but I don't think you'll see as many cuts next year as a lot of people. In fact, even this year, people speculated 6-7 cuts. I think we'll be lucky to get 2. And I don't think the pace of cuts next year will be as sharp as people think.
Let's talk about India and Singapore. And as I said, natural allies, and there has been momentum building along this partnership. How do you see it from here on? And what do you believe will be the points of partnership where more can be done at this point in time?
So, Shane, for me, this India-Singapore Connect, the corridor we're talking about, there are really 2 important things that we want to try and achieve. One is to celebrate what we already have. And the truth is that in the last few years, a lot of people have lost focus on understanding how important this relationship is and how much attraction it has gained over the last 5-7 years, especially in recent times with the boom of the Middle East.
Yes.
So everybody tells me, Middle East is where it's happening. And I sometimes laugh and tell people, the Middle East might happen in terms of promise in the future.
Singapore's already happened.
Think about Singapore. If you look at any calculation, Singapore's investments in India are well north of $100 billion, probably close to $150 billion. That's massive. It's much larger than any single country in the world, the stock of investment, but also the flow of FDI. You look at the last 5-6 years. Every year, Singapore is the largest FDI into India. And some people tend to believe that this is, round tripping of somebody else's money like Mauritius. Yeah. It's actually Singapore money. It's GIC, it's Temasek, it's DBS, Sembcorp, Singapore Airlines, Singapore Telecom. Yeah. These are Singapore's champions who are heavily invested in sector after sector. We're in the port, we're in infrastructure, we're in energy, we're in telcos, we're in finance. So it's an unappreciated story, and we need to make sure we celebrate that a lot more. The reverse is also true. When I talked about we created Digibank in India and then took it out all over the world, that reflects a couple of really important things. India's ability, the talent base, and the tech capabilities are really exceptional. And so that you can actually take that and engineer and drive a lot of stuff as you go out into the East. We've been able to do that in our own case. And therefore, we need to recognize and appreciate that story. That's the first part. Now, to your specific question, the way forward, I'm just so bullish on the opportunity we have for 2 or 3 reasons. Number one, everybody knows India is the story of the moment and will be the story for the next several years, decades maybe. And a lot of Singapore's capabilities and strengths are well aligned to be able to participate in that India growth story. You asked which sectors. You think about, we talked about AI, machine learning, and technology. Now, India has some strengths, so does Singapore. Energy, it's a big deal for India, 500 gigawatts of renewable energy by 2030. Singapore is a champion today in renewable and green finance. So there's an opportunity for us to co-construct, co-create, including moving down up the value chain, things like hydrogen and so on. If you look at infrastructure, continues to be a big need in India. Singapore, I mean, everybody knows infrastructure. Singapore is great, but it's not just because it's a small city. Singapore has capabilities. Public housing, for example. I think there's a huge opportunity over there. Water, going to be a big crisis in South Asia and India. Singapore has mastered water. So there are fields in infrastructure that Singapore can clearly participate in. And a source of capital. It's a small country, but we have over $1 trillion in reserves, and we are consciously reallocating capital across the spectrum. So that's a big opportunity. The reverse is true. India's always had a look-east policy, now act-east policy. But for the first time, I can see that India is actually focused on both sides of the supply chain and looking at Asia ex Japan ex China quite seriously. One is on the sourcing side. As you think about Viksit Bharat, the best way you get Viksit Bharat is to plug into Asia supply chains.
Yeah.
And that is something that is already beginning to happen. The geopolitics helps, and because of geopolitics, all our clients, for example, the Koreans, the Taiwanese, everybody from Asia, the Western multinationals, are all looking at creating an additional air capacity in India. So that's a huge opportunity for India to be able to attract a lot of this supply chain work. But equally at the tail end of the chain, for the first time, Indians are beginning to think about global brands.
Yeah.
And many of these global brands would play extremely well in Southeast Asia. People don't realize, but you think about Indonesia. Do you know what the word for a three-wheeler auto rickshaw is in Indonesia?
Tuk-tuk.
Bajaj. Do you know why Bajaj is Bajaj?
Yes.
So Indian Godrej, it's got a lot of brands in Malaysia and South. So Indian brands, actually, the price point and the brand positioning is quite good. So there's an opportunity for India on both sides, the sourcing procurement side, but also the distribution and sales side. So I do think because of the alignment of interests, the nature of geopolitics, the massive growth, Singapore doesn't have a natural hinterland. And therefore, the ability to build this connection is actually very, very interesting for both countries.
Okay, time for a short break, but a lot more news and updates on the other side. Stay tuned.
One thing is the for sure. Earlier we used to talk about, in India, roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that when my driver keeps two mobile, I keep only one mobile, but my driver keeps two mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Welcome back. Well, for the markets holding up well, so we have the mid-cap index, which is up around 0.7%. A couple of these stocks which are doing well include ONGC, which is your top gain on the Nifty. It's up around 4.6%. And along with that, a couple of other stocks such as SBI Life as well. But on that note, we need to wrap up on the show. But stay tuned. Closing bell up next.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
The Taiwanese index is down around 0.2%. The Hang Seng is down 0.6%.
Companies reported a revenue decline of 1.6%.
If you look at it, earnings estimates have changed only between 2, 3, 4%. That's it.
The net of this is probably it helps Trump in the polls.
The Nifty is starting at about 24,573. It's a new high, of course.
Clearly, if you look at the markets last 3 months, the quality factor has done well.
The budget comes against the backdrop of an impressive tax revenue.
For the last 30 minutes, have been positive for our markets. We're up close to about 75 points in the Nifty.
Singapore's investments in India are well north of $100 billion, probably close to $150 billion.
It's almost there. 3.4% is the inflation.
Markets, for now, it's buoyant. We have seen both the Bank Nifty and Nifty.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Okay, it's a good-looking screen once again as we begin this new edition of Closing Bell this Monday afternoon. We are coming to you as always from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant, with me my colleagues Reema and Surbhi. Hi, good afternoon.
Hi, afternoon. Well, new records is always a great way to begin the trading week. And the Nifty has just done that. And it's managing to hold on to 24,600. So that's another tick mark, another milestone ticked.
Absolutely. Green is the color, right? And today we can't even nitpick and say that mid caps are not doing well or banks are not doing well. It's pretty well rounded, the screen.
Yeah, absolutely. And, on Friday it was just IT, right? I mean, just IT.
Yeah.
Everything else was down. It's maybe a little more broad-based. Actually, IT, if anything, is down. The IT index is down about 1/3%. And Actually Friday's move was surprising. I mean, at least to me, it was a little surprising. The way stocks all rallied because, very minor upgrades to earnings, etc. But I think there are other factors at play. Top of the list of factors, of course, is trying to find new ideas, trying to find sectors which have not performed with some trigger, and I think the market is latching onto it. Of course, there are there's under ownership and US rates which have come off, which are expected to come off even sharply. So all of that is there, but I think today, of course, the index is down 1/3%, as I said. The sector which is doing the best is the PSU Bank Index. It's up 3%. But as I said, it's a little more broad-based because you've got the oil and gas index, which is up about 1 3/4. You've got the CPSE index, which is up 1.4. Real estate is up 1.4. Pharma is down 1.3. Pharma is up 1.3. Energy is up about 1%. So, I mean, I can sort of count about 5 or 6 indices with over 5% gains, and and one index, the PSU Bank Index, with gains of over 3%. Lots of individual stocks in the broader market which are seeing a lot of action, which we will get to in just a bit. Reema.
Well, let's get to IT. HCL Tech is still holding up in the green, though it's come off from the highs. In the morning, it was up 3.5%, 4%. Now it's just about up 1%. But the rest of the IT pack, so LTI Mindtree is under pressure. In fact, I think LTI Mindtree is the top Nifty loser today, and that's down close to about 2%. But even other names like Wipro, TCS, some of that build-up that we had last week is coming off today. So LTI Mindtree is under pressure, but even the other names are seeing some amount of weakness. But outside of that, you've got PSU banks doing well, led by State Bank of India. The Nifty oil and gas names, so ONGC, GAIL are higher in trade. But as a basket, it's the CPSC. Club it together, and all the PSUs today are higher in trade.
PSUs are doing well, but even non-PSUs in the broader market, mid-caps, small caps, there are big moves out there. Look at a stock like Godfrey Phillips, surging almost 16% now as we speak. There are other names. There's an ITD Cementations, a Tanla platform, 6 to 7% higher. Big moves coming in HPL Power Systems, 10 to 11% higher. So it's a very vibrant screen. And within the PSU basket, IOB really catches your attention right now, about 8% up on that stock. So looking good, plenty of names, Nucleus Software, plenty of names on the upside of the screen as we see things. So the question is, how do you position yourself in this last 1 hour? Which are the bets that perhaps you could be looking at? We've got Mitesh joining in with some ideas. Mitesh, good afternoon. Good to have you on. So what bets? What would you go with now for the last hour?
So good afternoon, Surabhi. One, the directional bias remains on the long side. I think there's no doubt with that. The Bank Nifty, which was slightly underperforming, has started to participate as well. And therefore, I think it's not a bad market to trade on the long side. And the Nifty IT is cooled off slightly, but I think the overall bias is on the positive side. So one trade on the long side. Two, I think, on the stock side, I think SBI and About India are on my list. About India, I think, is showing a good candlestick pattern as well as indicator setup. So would recommend to buy here with a stop below 28,300 and target of 29,200. And SBI, with the banks doing well, SBI is leading from the front. That's a buy with a stop at 867 for targets of 910.
Okay, those are some trading ideas. Nigel is also with us, joining us from the newsroom. Nigel, what catches your attention?
Well, that's right. ITC, that's clearly the one that's come back, and it's been a big underperformer. After the recent 10% move that we have seen just in a matter of around 2 weeks or so, ITC is the stock that's really come back. And if you just pull up a 1 month chart, actually you'll see that move from around 420 all the way to around 465. But if you pull up the last 1 year chart, well, the stock is actually unmoved, while its peer set has rallied 10 to around 20%. So what the street is factoring in right now is that no rate change or no kind of tax tweaks that we'll see on cigarettes in the upcoming budget. And if that's the case, then they're already factoring in a bit of a catch-up. Valuation-wise, it's always in their favor and ITC's favor. So that could be some of the reason. That's really the stock that's come back and supported the Nifty. But let's focus on another theme that's been in focus today. Your tire companies, they have announced, price increases. Sonia joins us to fill us in with a quick analysis on that. Sonia?
If you look at it, there has been a price hike across the board for most of these tyre companies. And the one that we're looking at this afternoon is MRF. MRF has announced a price increase effective 18 July. Truck tyres have been hiked by approximately 2%. Passenger car and radial tyres prices have been hiked by in the range of 3 to 7%. So far, there's been no hike in two-wheeler tyre prices, but the blended price increase works out to be about 2%. Now, this is the first price increase that MRF has taken in order to pass on the higher raw material costs to consumers, specifically rubber and crude that is used in the manufacturing of tyres. Now, if you look at it, the other players like Apollo, SEAT, JK Tyres have already taken approximately 3% price increases, and the price increases still lag the cost increases that have been seen in the last 3 to 4 months. So, despite the prices being passed on to consumers, there could still be some margin pressure that the companies face because of higher rubber and crude oil prices. So overall, yes, it's a positive for MRF, the fact that demand is strong enough that they were able to pass on the price increases to customers. Back to you.
Well, big rally going out there in tyre stocks today. Sonia, thank you very much for that. HDFC Life has been gaining. The company has reported 15% jump in its net profit year on year. We've got Yash with the details. Yash.
Well, Surabhi, if I have to summarize the numbers for HDFC Life, it's a strong top-line growth with the new business premium and annualized premium equivalent. But margins have sort of come down more than what the street was anticipating. So I'll start with the top line itself. New business premium, there's a slight miss when it comes to our poll. We were anticipating a number of 6540 crore rupees. What has come for us is 6400 crore rupees on the new business premium, though it's a 9% increase on a year-on-year when it comes to that particular parameter. Total annualized premium equivalent, it's ahead of our estimates by about 100 basis points, coming at about 2866 crore rupees. Our poll was 2846 crore rupees. It's a 23% jump on total AP on a year-on-year basis. Retail AP also is ahead of our estimates by about 50 basis points, coming in at about 2467 crore rupees. Our poll was 2453 crore rupees, and there it's a 31% increase when it comes to a year-on-year comparison. Value of new business is the point where we see some weakness starting from. So it's down 2% from our estimates, but a growth of 18% still on a year-on-year number. And finally, the margins seems like the growth in the ULIP portfolio was larger than what the street was anticipating, and hence the margins have come down a bit. So they missed our estimates or the street estimates by about 64 basis points. The margins have come in at about 25%. The street was anticipating a number of about 25.64%, and on a year-on-year basis there's a further erosion down about 120 basis points at 25% versus 26.2% on a year-on-year basis. Margin was one thing which the street was looking at very closely. If they would have been upwards of 26%, the stock would have taken off in a very strong way, because the valuations are very supportive for the stock at this moment. But margins have come down a slight bit, and hence the stock hasn't moved from where it was before the results were announced.
Okay, thank you very much for that. Hemang Jani is now with us. Hemang, first come in on the tyre stocks, big up move. So as Sonia pointed out, it's still playing catch up to the kind of raw material price increase we've already seen. So it's not that it's going to reflect in the margins with a big, bump up in terms of a margin increase. What have you made of the kind of, price rise in all these stocks?
So surely, the market was expecting some price increase because of the way the raw material prices have increased in the last about 3 months or so. But surely, this news has come as a bit of a positive development for the sector. And when you look at the companies, Apollo Tyre, SEAT, these two companies have a slightly better correlation with the product mix that they have in terms of the passenger vehicle and the CV segment. So I think they are relatively better placed. And apart from that, Balkrishna Industries, the news is that the actual price increase that they have taken is slightly on a higher side, about 5 to 6%. So these are the three companies that we prefer, not just because of the price increase, but because there is going to be a certain degree of growth in terms of EBITDA and EBITDA margins both in this quarterly numbers. So considering both these things, the quarterly numbers and the price increase with correlation to their product, I think these three companies are better placed.
Okay, all right, Hemang, hold on to that thought. Let's focus on Zomato because if you're ordering in, well, there could be a bit of a hike in your platform fee. Well, Mangalam joins us to explain all of that to us, explains why the stock is making a fresh 52-week high today. Mangalam.
A mild hike in your platform fee would amount to just about ₹1 increase in your overall bill, but it would mean a lot more for the company's EBITDA, and that's exactly what the company is playing for. And the stock is reacting to that. So the food delivery platforms have actually increased their platform fee, which is Zomato, in their key markets, key metros, from ₹5 to about ₹6. This was introduced way back in 2023, and from there, it has been increased, and it's also dynamic in nature, where on important days like New Year's, etc., it's gone all the way up to ₹9 to ₹11 as well. But what this basically does is this ₹1 increase in platform fee. If you're assuming they would do around 85 to 90 crore orders this entire year, then maybe it would increase their EBITDA by about 85 to 90 crore rupees, which is about 5 to 6% increase in their overall food delivery EBITDA. Morgan Stanley believes that it could aid their contribution margins by about 20 basis points as well. But this also needs to be looked at in connection with the cuts that they've taken or the discounts that they've given on Zomato Gold memberships. So those are a couple of factors that we'll have to watch out for. They have an overweight rating with a target price of 230 on the stock. As per Elara is concerned, they're saying that, maybe there's a 5 to 6% jump in the EBITDA, but the geographies that these companies have actually gone ahead and increased, the platform fee in would not account for more than 1 to 2% of their overall EBITDA increase. So as a result of which, it is a step in the right direction, not to the tune of 5 to 6%, but a positive step nevertheless. But importantly, the other optionality of Zomato, which is the high growth that we're seeing in Blinkit, along with the possibility of that turning EBITDA positive very soon as well, is something that the street is excited by. And that's why we're seeing that big move on the stock. From the lows, it's rallied to a record high that we're seeing today.
Thank you very much for that. We were chatting with, Karan Tarani, and he pointed out how quickly the platform fees have increased. So last time they were introduced for the first time in August last year. In April, it was, it started with 0 to 2, then 2 became 4. In April, it became 4 to 5, and now we've seen a price increase to 6. And he's like, you won't be surprised even if it goes up further to 8 or 10 rupees. But they're doing it in a very phased, gradual manner, without it pinching any consumer's wallet. So even in the past instances when we have seen a platform fee hike, it's not that demand has been impacted. And his target is that by the end of this year, fiscal year, adjusted EBITDA margins for Zomato should hit 3.7%, and the following year we could get to 4.5%. That's FY26, which is within the company's guided band of 4 to 5%. Hemang, comment on Zomato?
Clearly, when you look at the increase in the fees to the extent of 20%, the sensitivity to their operating profit is almost about 6.5 to 7%. Also, if you adjust for the discount that they are offering, the eventual growth would be in excess of about 7.5% when it comes to operating profit. Also, the Blinkit side, the company is doing exceptionally well. So of all the platform companies that you have, there are very few where you can have that kind of a conviction where you will see a decent amount of growth, in terms of transaction value, in terms of operating profit. So surely this is a stock that, is one of our top picks within the platform, company as a theme.
Okay, got that, Hemang. Hemang, just earlier we were discussing this price hike in tires. Sonia was telling us about the details, and it's got tire stocks fairly excited. What's your sense? I mean, is this just a bit of an excitement or because of this price hike, or do you see some value here? And which ones do you like?
What we feel is that the price increase has been taken on the CVs and passenger vehicle. The two-wheelers are left out. And when you look at the companies, the Apollo Tyres and CN, these two have a slightly better product mix, which will have a better sensitivity to the operating profit growth. So these are the two names that we like, and Balkrishna also we prefer at this point of time. And though in the news this is not featuring, but the actual price increase that they have taken is slightly in excess of 5%. So these are the three companies that we like, not only because they have taken a price hike, but also from a quarterly results perspective.
Okay, all right, Hemang, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here. and I really appreciate your time on CNBC TV 18. We'll take a quick commercial break here. We'll come back in just a bit from now. I just want to quickly sort of put out a programming note for you. This is for this Wednesday, which is the middle of the week and also a market holiday. We're getting you a special offering. A big CNBC TV 18 exclusive just ahead of the budget. One of the world's top market strategists is going to be in our studios. Chris Wood of Jefferies will make his bull case for India. Don't miss out on an exclusive chat between Chris Wood and D Street stalwarts like Ramesh Damani and Utpal Seth this Wednesday at 9 a.m. only on CNBC TV 18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com.
Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government.
Yes.
And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now as per the recommendations of the Bimal Jalan Committee. We have an economic capital framework. It is principle based, it is formula based. There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan Committee, we follow that and do the calculation, and whatever is the surplus.
Welcome back. 93 points higher. We're at 24,600. I mean, give or take. So looking very, very solid start of the week. Sandeep Tandon is now joining us, founder and chief investment officer at Quant Mutual Fund. Sandeep, great to have you back in the program. Thank you very much for your time. Prashant this side. Now, of course, unless someone has been living under a rock, I think everyone knows what has happened over the last 1 month or so, right? I mean, there has been, you guys, of course, have been doing fantastically well in terms of returns to investors, AUM almost nearing 1 lakh crores. But in late June, there was a SEBI sort of search and seizure operation at your offices, and they've asked you for data, documents, etc., which you've told your investors and in other communication that you have provided. So I have to start by asking you, because I think your journey has been propelled by retail investors more than anything else, right? And I think they have the right to know what is happening with this SEBI sort of investigation, what this is about, and where is it at?
Prashant, when it comes to regulatory aspect, there's a policy and we generally don't like to comment on that. Whatever communication was required, we have already communicated. Since this matter is still investigated, so we would like to any comment on that part. As and when any development happens, we're happy to share that for the time.
But Sandeep, just to sort of press on that point a little further, I think the concerns emanated from reports that were indicating that, among other things that are being investigated, there could be a possibility of front-running that the regulator was also looking into. Can you just share the gist of the FAQ? I know there's an FAQ that you folks put out in public domain, but what is your official stance on this right now?
Official stand has been communicated. As I communicated, will not like to comment beyond that because as a matter of investigation and regulator is looking into it, we are cooperating with the data. And beyond that, we will not like to really comment. And whatever comment was required, we have already given in the public domain.
Is there a regular back and forth in terms of demand for data? I mean, the first...
Prashant, I was very candid with you. We will not drill too much on this subject because it's a regulatory matter and we don't like to. Let's focus on our businesses as usual. Let's focus on what you called me for market perspective rather than getting into other tangent.
Okay. So let me ask you, just one last, before we tie this off and move on to markets, has all of this made any impact on your assets under management, or what? Give us a sense of how that has moved since
Not
this came
really,
through.
Yes, obviously, it obviously any such noise will have a psychological impact. Answer is yes, but beyond that, not much. Life is as usual because we are putting our effort, whatever we are known for, generating alpha for our retail investors, and we have been practicing a very dynamic style of money management last many years. And last 5 years, you have seen that we have been one of the biggest outlier in the industry. Okay, and this is something which is possible. The new thought process, new analytical skill set which we brought, and we're talking about how instead of looking at just the stock specific data, how we as a house we are a student of adaptive asset allocation, how from very deep macro we come to micro level. And we have demonstrated in generating superior risk-adjusted return when you look at 1 year return, 3 year return, 5 year returns. And the outperformance is obviously very good. But what gives us satisfaction is the risk-adjusted return. A lot of people perceive the quant is a high-risk house. Actually, it's not. Because our risk-adjusted return is one of the best in the industry, which means we have taken less risk and generated more alpha out of it. That is something which we are very proud of. And this is something which we educate people, This business is all about risk management. We say very proudly, we are in the business of risk management, returns are byproduct. If you manage your risk, whether it's known risk, unknown risk, perceived risk, or any type of risk when you talk about, if your handle on the risk is good, you will able to come out of any event which plays out. Let's say unknown risk played out last year. If you recollect, unknown risk was there and we were affected party. But look at from the last quartile to effectively number one position, we came back in 3 quarters. So that is a very important how you manage a risk. You will face risk, but managing risk is a very important aspect. That is something.
Got it. And AUMs are now about north of 94,000 crores, right? One of the things you said risk so many times. One of the risks which, and I'm sure you've heard this many times as well, so it's nothing new that I'm telling you, is that, it's seen as a one-man operation. It's Sandeep Tandon. So there's that, in that sense, there's a key man risk, right? And it's very important. I mean, if people invest on the back of who's the fund manager, and of course who's running the house. So just a quick sense. I mean, are you expanding the team? Are you broad basing it a little bit? What's going on?
So I'll answer this thing in a slightly different manner. First of all, yes, if you have to understand, it's not one man show out here. It has been institution framework, and you have to also understand it has been a startup type journey. The only difference, we have been now proven as a successful startup in this space, and we have able to create an asset light model with limited people, with no branches and limited manpower. We are able to scale up this business purely on the background of performance and system. That's very important to understand. There's a process behind that, what we have built. If you really look at in last 6-8 months, we have added so many people on the operations side. Head operations come, group CFO has come, whole-time director is joining us. We are adding people on the board also. So we are expanding team. You look at the biggest challenge as a house which we have faced, in that we have grown much faster than the organization. Okay, so we never felt that we will grow like this manner, which has actually happened. But in last 6-8 months, we have put in efforts in substantially adding our offices, or we are looking at new team members. Senior people have been getting hired. So that's the way the journey is all about. We have built. But now let's look at the global perspective. When it comes to money management, it's about individuals. Okay, money managers globally, individuals are more successful than the institutions. Okay, because this is a very individualistic trait. It's a very individualistic art. So what we are trying to create very uniquely at Quant is all about a analytical framework. How from a traditional style of money management, we are bringing an analytical perspective, which at least I have been doing for a while, and my team is doing with me for a long period of time. For nearly Quant Global Research exists from 2007-8. So if you really look at a reasonably long journey, and I'm myself in the market for 33 years, we are doing this sort of behavioral research or quantitative research or qualitative aspect research. So we spend very sizable money on in terms of data analytics, and that has paid off. You know, a lot of people don't understand what we do. A lot of people perceive a risky house and they run some black box. No, we are very high-end process-driven house. Otherwise, this sort of outperformance is not possible across all the schemes, all the categories which we operate. We are actually #1 quartile fund house in most of the categories, only possible when you have processes around that. You have system built around that. So it's not very fair to assess that's the one-man show. The processes, who built process? Not me alone. My team has been working for a while on this thing. For over years, we have built something. It's not something which is built in last 2 years. We have put in efforts for last 15 years in building Quant, what you see in today's form.
Analytical framework. Can you tell us what it throws up in terms of the next big, bold bet for Quant Mutual Fund? You were early investors in railway, infrastructure, even the consumption fund that you launched well before market recognized it as a potential theme. So what are the big bets now that you're making, and what is the call over the next 6 to 12 months?
So, as you rightly said, being a part of predictive analytics means we are able to identify these inflection points much earlier than the market. Okay. Now, even look at, I will only highlight that last 1 year, we are hearing about big market voices talking about quite bearish about India. Even most of the FIs was quite negative, but look at the market is keeps on making new high and high. Okay. With that background, I just want to highlight two important observations. If I have to look at from a global perspective first, and then coming to globally, I'm seeing some sides of complacency coming, particularly the US market is becoming slightly more complacent. If I have to look at the complacent indicator, is actually has spiked a lot, which is some amount of worry sign for the US market. I'm not saying they have made a top. What we are trying to say, the complacency has set in. Whenever this scenario comes in, we turn slightly cautious. So we are talking about that partial risk off phase for the developed market, and risk on rally continues for the emerging market and India in particular. So with that background, if I look at the, if I have to bring the second dimension aspect on the liquidity aspect, if I have to talk about the global liquidity towards money flow analytics, if I have to work on the global equity is actually rising quarter on quarter, month on month, on year basis. So which is a very healthy trend, and something similar which we have seen in not only India, it's a global phenomena which has played out quite well. So that's the liquidity background is very constructive. Yes, valuations are partially stretched, and that's the reason we always say sector rotation, stock rotation, what we call it money flow analytics. That is something which we specialize that really help us in managing a risk better instead of exiting from the market.
All right. Hi, Sandeep. Good afternoon and good to see you. And, when this entire fiasco that broke out, you had, two sides of investors that were looking at it. One was already invested. They were wondering what to do next, who were already part of Quant Mutual Fund. And the other part was they were saying, hey, there's some bit of uncertainty. It's a good time to get in. So that's the kind of feedback that I personally got as well with regard to this entire fiasco. But let's talk about the cash levels. Now, I was looking at Quant Mutual Fund and the cash levels all the way from January. It seems you'll have raised some cash, ahead of the big event, maybe. I think it was at around, it's currently at around 5%. You could correct me on that number. But your view on current valuations, we're getting into a big event, which is the budget. Have you all raised some cash levels, and are you all comfortable currently?
No, Nigel, the way we look at not only now, we have changed our strategy from January 2024 onwards, when I have been very vocal on multiple channels. And we have been educating investors that easy phase of bull run is over in India also. Okay, again, don't misinterpret. When I'm saying the bull run is over, it's an easy phase. We are in decisive bull run, and within decisive bull run, we are in difficult phase of bull run. So your strategy, when you're talking about a difficult phase of bull run versus easy phase of one, has to be different. So last 6 months, we have actually moved out from an illiquid stock to liquid stock in our portfolio. And this is something, because we have seen how the impact cost in the market has risen in last many months. Whenever we see this sort of phenomena, it is very important to have your portfolio to be very liquid. That's the reason it's not about particular budget events, which is now knocking our doors, or the election related aspect. It was more of a data driven approach, which forces us to take certain steps. So purely on an analytic basis, we were trying to play this game, but we have not raised very large cash. See, when you manage money in a very dynamic manner, depending on the situation, we do increase our cash level and we do deploy also. So as of now, also our cash level is actually on the lower side. Okay. But when we say cash and cash equivalent is on a higher side, because majority of our portfolio is towards large cap. That's a one big change which we have seen in last 6 months, that our portfolio, overall portfolio, anyway, quant scheme has hardly 15 days exit load, which is insignificant. So when we design our portfolio from a longer term or medium term perspective also, we do give a lot of weightage on the liquidity analytics. And if you have seen our VLRT framework, liquidity analytics plays a very big role. So we do understand the impact of the liquidity and the prevailing high impact cost. Based on that, a mild risk-off environment which played out in the developed market, we have rebalanced and reconstructed our portfolio in a dynamic manner.
All right, Sandeep, thanks for clarifying on that. But we're still in a decisive bull market. That's the takeaway that I got from that as well. Now, I have to ask you about the PSUs, because you all were in very, very early. And you all, played the theme perfectly, whether it was the metal PSUs or the other PSUs as well. Yeah. How are you all placed currently? And if you could tell us, if you all have sold anything from what you all have in the PSU basket, because some of them are already up 3-4 times.
So, Nigel, the way we manage our money is a very sector rotation, stock rotation is part of our philosophy. That's the way we manage our overall money management skill set is there. So whenever we see some sector or stocks are moving towards a euphoric phase, we tend to prune down the exposure. And when we say they're in the neglected and beaten down or the most hated zone, we all in. That's the way we do it. But if you ask me, given the bull run which we have seen in the last 3 years, there is no sector or space where we can say except media, which is in the completely neglected phase. Okay, so it's very difficult to pinpoint extreme hated zone right now. But we do get such opportunity, not at the extreme neglected side thing, but when you do get into a partial neglected. So again, it's a relative term. You don't look at everything on absolute basis because relative is equally important. When the market overall has risen a meaningful manner, then you will not get extreme neglected territory. You will get even partial neglected territory. Those are the areas we do capture. And that's the reason when you talk about metals, we are very early. Consumption theme, we were very early. Pharma last year, we were very early. This year, with the consumption is a big play. We still believe that consumption as a thesis has more legs to go and is grossly underowned stocks. This is an area where a lot of people got stuck in the past. And we have seen a capitulative move in last few months. And that is the ideal scenario where we increase our exposure. So that's the reason across the board, if you look at our portfolio, right from November, December, we have been adding consumption names in a big way.
Sandeep, just to take off on that, when I was coming to exactly this, the core of your stock selection philosophy, I was looking at the latest fact sheet, for instance, and 3 stocks, which is HDFC Bank, Reliance, and even a Jio Financial Services, they make a large chunk of a lot of the different funds. They're the top holdings in the small cap fund. They're the top holdings in the flexi cap, and even in the small cap or some of the other funds as well. So. And I also track personal finance, so we did a show on the fundamental behind the quantitative method. Now, each fund house that has quant funds, they follow their own algorithms, right? And they could be based on different factors, whether it's momentum or some people combine quality with momentum or value with momentum, etc. So you just said that you like to own the unloved side of the market. So for your investors and for viewers who are interested in quants funds, could you just summarize what forms the core of that algorithm that you are following in terms of factors, top investing styles, or the methodology itself as it stands right now?
So let me just clarify, we don't run any algorithms out here. We are not just a quant house and we don't follow any factor-based thesis because we are actually quite critical of factor-based thesis. That's a very static style of money management. This much growth, this much momentum, this is much value. That's not the way. When we talk about ourselves, we are unconstrained fund house. We are style agnostic, market cap agnostic, thesis agnostic. We are pure opportunist. So when we talk about pure opportunity and wherever we see get superior risk-adjusted opportunity, we play that thing. Our strength comes from the background that we combine qualitative, quantitative, and behavior aspect. And that is the strength. So 1/3 weightage is given to each segment. So if you look at our VLRT framework, 1/3 weightage to the valuation analytics, 1/3 weightage to the risk appetite analytics, 1/3 weightage to the sentiments data, okay, or the risk appetite, valuation analytics, and the liquidity aspect. And T is the timing as an analytical tool, not the timing. So timing is the analytical function of all three. So when you see skewness on one side, we do take very aggressive bets. Let's say example, I'll explain in the morning also. Like if you've seen last year, we have very high level of ITC in our portfolio. It's a public domain, the way you've seen that was currently like Reliance or HDFC is there. But few months back, we offloaded and we shifted towards Reliance. And that played out very well. Reliance is up 50-60%. ITC is down 30-35%, from the peak. Okay, this rallied recently. That's a different issue. But we got the benefit of that. And something similar a few months back when we saw there were some challenges in HDFC Bank and some negative development was there. We were the first to exit. And when we spotted that HDFC hit the neglected territory, the hated zone sort of thing, partial hated zone, because we are in bull run right now, we are as an opportunist, do capture that opportunity. As I explain always, we don't have any affinity, hated sort of relation, love and hate sort of relationship with any sector stocks. We are pure opportunists. Whenever data point changes, when I say data points, whenever we see inflection points, so we as a house is more known for as inflection point strategies rather than a lot of people consider as a momentum thing. When we see extreme inflection points in either way, we are as an opportunity try to either build or exit those positions.
Got it, Sandeep. And right now you're saying we're in the difficult phase of bull run, so there's no real big hated sector, right? Which market hates. So
except media. Except media is still one of the sector which is massive.
So anything you bought there, Z or something? Or anything?
No, if you really look at our portfolio, you will get the last fact sheet, the Sun portfolio, Sun TV portfolio. That's the one stock, is there in the fact sheet. Generally you don't comment on the stock, but if you look at our fact sheet, you will get that answer. That's the exposure we have built across some of the schemes.
So for your investors who may be watching as well, if you are in a difficult phase of bull run, should they also moderate return expectations a little bit? Would you guide them to it, or you think it's yeah?
So, Prashant, since we are not looking for marketing perspective, I'm a very candid and vocal person. I think it's a India opportunity. So I think we always say this decade belongs to India, maybe half century belongs to India. Every forum we go out on saying don't exit the Indian market. One of the lifetime opportunity you are getting. Okay, so best way to play through some of the mutual fund which we manage in a very dynamic manner, sector rotation, stock rotation. That's the way to play this game. One should not exit. And if you've seen that last 1 year where we have seen this narrative market peaking out, something absurd happening, all those commentary or the people who have made comments, actually they have suffered. Okay, in last 1 year, they exit. And now you are not able to participate. It's a psychological game. You are not able to get entry again because market has rallied 40-50% after that also. So that background, we will not advise anybody. Yes, one should assess your risk appetite on continuous basis. One should assess your investment horizon and accordingly shift the sectors or the schemes or the money managers or asset classes depending on the outlook if you can analyze on your own.
Got it. I mean, exit, of course not. My only question was about return expectations because it's been extraordinary last couple of years, and maybe it will be extraordinary in the next many decades as well, as you point out. But
so again, if you have 5-year horizon, then returns will be extraordinary. Even in small cap, returns will be extraordinary. If somebody has only 5 months horizon, that is the area where I always say you go and back and check your risk appetite and investment horizon. Then your scheme has to be different if you have very short-term horizon.
Short-term. Got it. Sandeep, we'll leave it there. Thank you very much. Great speaking with you. Appreciate you joining in, and all the best to you and your team at Quantum Mutual from all of us here. Thank you. We'll take a break. We are back. We'll get you a quick check on what's happening in dealing rooms. D Street Chatter with Nimish coming up in just a bit.
That automatically flows to the let me complete. So that automatically flows to the government, and so we have it's not a matter of my discretion or the discretion of the central board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
The retail participation has been something that everyone's been appreciating, and personally as well, most of your money goes into SIPs, which we believe that over a longer span of time, well, it'll hold well. The only fear is retail getting into a bit of a trap, and that's the fear, but that's been the case as well. If you look at the SIP numbers, well, beautiful looking numbers. In the last 6-7 years or so, that retail number, the SIP number that you're seeing has moved up from around 3,500 crores all the way to around 21,000 crores, which is very, very encouraging, up close to around 6 times odd in 7 years. As a proportion of the total free float, Motilal Oswal, they have put out this note, which they have titled the Retail Rhapsody. And they have highlighted that, as a proportion of the total free float of Indian market capitalization, the DIs and the retail, well, their holding has gone up substantially from around 55% all the way to around 60%. Welcome back. You're tuned into Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets are holding with gains, but from the top, the Nifty has slipped close to around 50 points or thereabouts. Still up 75 points, but at the high of the day, we were up 130 points, which is a good time to get in Nimesh, who helps us out with D-Street Chatter. Nimesh, it's still a good session. Yeah. Breadth of the market is still positive, though those lines have narrowed a little bit. But how are you reading this?
But Nigel, today's day is purely for the broader market stocks. Like the mid-cap indexes are up almost 1%. So after 1.5 weeks of consolidation in the broader market, today there is a bit of interest back in that space. So it looks like the start of the week is largely on the mid-cap and small-cap. Having said that, the flows are quite muted. So the larger flow seems to be in the large-cap names in the last many days. But today seems to be a muted day. There is lack of participation, is what I understand. The only space which has seen some bit of buying interest, especially from domestic mutual fund, is IT for the second day running. We saw a big rally on Friday after TCS numbers and Infosys numbers, but at least that momentum in buying into IT stocks continues from the domestic side. The other sectors which have done well, relatively well today, tires have done well. I'd spoken about a possible hike from MRF, and that's had a rub-off on the entire tire space, so to speak. Pharma has done selectively well. There were some news-based reactions as well, and also some select PSUs is back in action. So that space has done well, but not much from the larger institutions overall. From a trigger point of view, I think earnings is going to be a big trigger. That's going to have an impact on individual names. But now everybody is watching out for budget. So it looks like the lack of participation is because of the budget down the corner. There's a bit of caution, and they just want to get out of that way, and then probably they'll come with more. But the momentum in the broader market seems to be, at least that looks like for real, at least in the short term.
Okay, all right, Nimesh. But let's get to individual stocks then, since the broader markets are in focus. What are the news bits you're picking up on individual stocks?
Well, the first is the large cap name ONGC. That's been a big mover. In fact, it's seen a bit of a technical breakout as well. And I understand some larger HNIs are quite active in the last minute days, and hence a big move in that stock. So that's the first name. The second stock is Pearl Global. This is going to be interesting. 730 odd stock. There is a large block as well, 2.5% equity. And after that, you've seen a sharp recovery as well in that stock. I understand some domestic mutual funds were buyers in today's block deal. And additionally, the company is likely to raise funds via QIP very soon. So that's the reason why you've seen some bit of action in Pearl Global today. The third stock is Macrotech Developers. Again, a big move in that stock. The volumes on the higher side. Large part of today's pullback is largely because I understand the selling pressure from a leading FI fund is largely over, and some domestics have started buying again. So that's the reason why you've seen a big move there. And the last one is Onward Technologies. That's not something which you talked too much about, but it's a decently institution-owned stock. It looks like some bit of interest is back from larger HNIs, and that's the reason why even that stock is buzzing in today's market.
Okay, all right, got it. Nimesh, thank you very much for that. So those are a lot of the stocks that are on Nimesh's radar today. With that, let's get back to some trading calls. We've got Mitesh Thakkar with us. Mitesh, what are the additional stocks you're looking at?
I'll go with the BTSC and Bajaj Auto. I think that's had a good reversal and is consolidating near the day's high. So keep a stop at 96.40, look for a target of 97, 30, 35 to begin with, maybe even higher levels, but that's the initial target. And that apart, I think, BTST on Bajaj Finance, which is reversing after a correction actually. So we'll take a very tight stop at about 70, 40 and look for a target of 70.95.
Okay, all right, got that. Mitesh, thanks very much for that. We'll connect with you tomorrow. Thank you so much for all the trading calls today. Well, with that, let's move on now. We are bringing you the latest in terms of Hyundai India's IPO plans. Sources suggest the company could make its D-Street debut in October this year. Parikshit is joining in with more details. Parikshit, this is going to be a big bang IPO, right? What's the latest you're picking up?
Well, yes, Hyundai is looking to pick up at least 25,000 crore or $3 billion from the India market via the OFS of 142.2 million shares. So Hyundai Global is divesting about a 17% stake in the Indian entity. Now, we believe that the preparation is on at a high pace. SEBI has made some observations about their DRHP, especially around the risk issues. There were about 80 risk issues that Hyundai had put in its DRHP, and the company is likely to clarify via its bankers very soon. They're looking at an IPO and hoping that they can go with the public with it in the first 15 days of October 2024. Having said that, they're also strengthening their senior management here in India, and we believe that a few key C-suite CEO level officials are likely to be hired in the company, and this could happen before the public listing. The company is also facing some trouble from workers. In fact, the Workers' Union in India has sent a notice to the company asking them to respond in 10 days as to what benefits and compensation they are going to get from the IPO. They're actually taking a cue, in a way, from what's happened in South Korea, where the workers of the company were negotiating a wage hike, and they had threatened to go on a strike. And finally, the company there in Korea has managed to come to a deal which has led to the company giving the workers the highest wage increase in the company's history. So Hyundai's workers are currently protesting, we get to know, peacefully. No disruptions in production as yet, but they want some benefits out of the IPO, even though the IPO and the DRHP does not mention worker benefits in any way. But looking at what happened in South Korea at the headquarters, the company will have to accommodate their interest. They're trying to hold negotiations with them, and the company's chief manufacturing officer is also speaking to them. Hyundai did not respond to our queries on this, but we are told that the preparations for the IPO are going on well, but the company has to somehow accommodate the workers to prevent any kind of disruption in production in the coming weeks.
Thank you very much for that, Parikshit. Midcaps continue to inch up. It's now a near 500-point rally on the midcap index. Jio Financial Services is inching up ahead of its numbers later today. And buying is emerging in NLC India, Oil India, GAIL, Castrol. So some of these stocks are seeing big 6-7% gains. Get into a break. We'll come back with more market talk.
Not just their holding, but even their participation has gone up, quite a bit. So in the last 10 years or so, the non-institutional participation has gone up from around 38% to around 52% or thereabouts. Some on the street would say, well, that's a little bit scary, but those are the data points that's put out by Motilal Oswal. You know, you have the FII flows, they've been quite volatile, and that's been the case. If you look at the monthly flows, the FII flows, well, they've been all over the place. But the encouraging part is the DII flows. And in the first half of this calendar year so far, you just take a look at it, well, the DII flows at the half-year mark are more than what we saw in the entire of last year. So the DII flows have been the key reason that have been driving this market higher. Since we have the retail support, the domestic flows as well, that's led to a relative outperformance. And that's why, the weightage on the MSCI index has moved up from the mid-single digits all the way to around 19%. Because when the markets move up, higher market capitalization, that's resulting in a higher weightage. The problem is, the question that people are putting out is, are retailers getting into a bit of a trap? At least as of now, that narrative that India's retailers, well, they buy at the top and they sell at the bottom, well, that's not yet happened. So as of now, it appears that that saying has actually reversed, and this time around, they could possibly get it right. The only problem is two factors. We've been talking about PEs and other data points. Just want to highlight India's market cap to GDP. As of now, it is at a relatively higher level if you compare with what we have seen on an average of around 85%. So that's one data point. And the other one is the outperformance of the broader markets. Whether you look at the mid cap, you look at the small cap space, well, that's been where the big money is. And that's over a 5-year horizon that I put out these numbers. Well, in the shorter duration, that's in the last 1 year or so, well, it's been even more startling.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, like with the whole body checkup, a lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the
Welcome back. Just 8 minutes till the final bell, and stocks are doing a thing of their own. V-Mart retail was down actually. That stock has recovered close to around 4%, and all of that just in this hour itself. That's in the last 25 minutes or so. So big move is out there. And Sunteck Realty, one of those relative underperformers. You had a large investor, Mr. Pabrai, had a large stake in there. It appears most of that got absorbed in the market, and in fact that quarterly update was quite good as well. Mayuresh Joshi of William O'Neill joins us on the show. Hi Mayuresh, good afternoon. Good to see you in. What's your view on this name? Sunteck Realty didn't do much in 2023 odd when most of the real estate stocks did well. And it was underperforming. But in the last 2 months, it's come back and it's moved in style from 400 to around 600 rupees. Your take?
Afternoon, Nigel. I think, that's been a very smart move by Sunteck as well. The recent update that has come through, not really gone through the numbers, but I think the increase in pre-sales and collections have been quite robust on a year-on-year basis. Again, I think the entire construct, when you're probably looking at the real estate market, and we're probably looking at the Mumbai metropolitan region market, the MMR region as we are calling it, it has got a very strong foothold out here. So right from aspirational luxury to Uber luxury, as they call it, they've got projects all around. They've also probably done the right amount of allocations in terms of whatever they need to acquire. And therefore, I think from a balance sheet construct with net debt, and a very strong operational performance till date. I think it's in excess of 18 or 19%. They're also doing a little bit of their annuity income portfolio expansion as well, which probably means that the rental incomes should probably also aid their overall balance sheet growth. So yeah, I think the numbers are probably stacking up in this entire real estate cycle for Sunteck Realty as well.
Big move, Mayuresh, today in Godfrey Phillips, 17% up, large volumes. Its year-to-date gain now stands at 125%. Anything you've picked up?
Afternoon, no, not really. But I think the expectation is that every time we near or head towards a budget, what probably happens in terms of the sin tax. I think a large part of that has already got gestated by the market. So I think that the market is not really expecting any kind of additional burden to probably come through. For companies like Godfrey Phillips as an example. But just as a cautionary note, probably you just need to look into the contingent liabilities of the balance sheet of Godfrey Phillips. They still have some payouts to be done if something does not go their way.
What about IT? Any change in your assessment about IT for the next 6 months based on what TCS, HCL Tech? Does it have a different weightage in your portfolio now? Any EPS changes?
No, not really. So I think it's still equal weight as we see it. I think we continue holding in our global portfolio a couple of these mid-cap IT stocks, Persistent, KPIT, but a clear disclaimer, these stocks are something that we have probably got at much lower levels. But looking at the commentaries, you probably expected to see, as you rightly pointed out, I think a couple of more quarters in terms of some genuine recovery starting to take place, specifically in key sectors like BFSI, retail, manufacturing, whether that coincides with the rate cut cycle in the US and globally as well. I think that will lay impetus in terms of a base case scenario in terms of the earnings recovery for the sector as a whole. Obviously, pricing in terms of how deals are expected to take place, consumer discretionary spending specifically for large million or billion dollar deals, which will impact IT companies and specifically large cap IT companies from an earnings perspective, should start taking shape. But our own take is that for a large part of this financial year, there is much of an earnings change that we are probably expecting for large cap IT. Mid cap might still continue outperforming the large caps.
Telecom has taken a bit of a break after those tariff hikes finally came through. Mayuresh, good afternoon. Idea is up about 3.5–4% today for a change. Otherwise, it's sort of fallen from the highs. What do you like in this space?
Afternoon, Prashant. So I think a large part of the move has happened with the telecom operators. I think the news has now got gestated in. And the price action already was a testimony a few weeks before the price hikes happened. So now it will go through a phase of consolidation. But yes, I think these tariff hikes will mean better operating leverage, better cash flows, and therefore better deleveraging, at least for companies like an Airtel. So I think we continue our hold rating onto stocks like an Airtel. What we probably are expected to see is something like an Indus-Star, right? Because if the action is expected to continue, you've already seen some aggressive plans happen in terms of BSNL's price cuts as well, in terms of how they are probably viewing the entire space. Our take is that Indus-Star is an example where the tenancy ratio should continue very, very strongly. Vodafone Idea's existence itself will mean that the business from Vodafone will continue. The deleveraging on the balance sheet should happen over the next few quarters as their cash flows improve. So I think one actionable that we see in terms of our EPS RS rating parameters is Indus-Star's. RT is something that we can continue.
Away from sectors, any individual other stocks on your radar which is making it to you, I mean, the portfolio on the long side?
Yeah, so I think we added Pennar Industries, Prashant, a few weeks back. Our own take is that the segments that they operate out of, the engineered products segment, which caters to railways, infrastructure, manufacturing, should continue doing well. Their pre-engineering business segment also should continue well. They've just commissioned a recent plant in the last week itself, but their order book is decent as far as India is concerned. Their US business asset should have a very decent growth in the next few quarters and years as well. And therefore, the management is very, very hopeful in terms of the overall consolidated EBIT margins actually moving from that 5% to 7.5% in the next 12 to 18 months. If that probably takes place as what the management is guiding for, there can be a huge scope in terms of earnings expansion that can continue over the next few years, which provides a base case scenario in terms of earnings and return ratios improving quite significantly. So Pennar is something that we're liking as a long-term focus item.
Got that. Mayuresh, thank you very much for joining in. Just counting down to the close of today's trading session, ending in the green, but just shy of 24,600. Though in the morning, the markets did go on to hit new record highs. Nifty ending 80 points up, Sensex up 122 points. Private sector financials were on the back foot. So you had a cut of nearly 1% on Axis Bank, ICICI Bank, HDFC Bank ending in the red. Though PSU banks led by State Bank of India had an up day. But the sector which catches your attention are oil and gas names. So ONGC is the top Nifty gainer, a 5% rally on that. But even the others like GAIL, Oil India rally pretty hard, and PSUs on the whole. So whether it's an NTPC, NHPC, SJVN, across the board, the Nifty CPSE index will also come up for you on your screen. So the top sectoral gainers are the Nifty PSU banks, the oil and gas, and the Nifty CPSE index. And outside of that, pharma has done well. So it's led by, I think, Apollo Hospitals is up, Dr. Reddy's, Divi's Laboratory, all closing up quite smartly.
Okay. I mean, lots of other names as well. Some of the non-PSU names, I mean, Tanla, Godfrey, HBL Power. HBL was, of course, a big mover today. I think tire stocks Rima did mention, JK Apollo, MRF C8. Castrol was a big mover, 7% today. I think it's at a new 52-week high, maybe a high for the last few years. Hathway did well, Sequent Scientific, Exicom continues to do very well. Parag Milk, Greenply, BL Kashyap, and I mean, I could go on with many more of these names, but a big volume-led activity in many of these names. On the downside, these actually right from the word go, some of these shipping companies, shipbuilders, they all were down. Garden Reach, Mazgaon, Cochin, etc. And I think that continued by close as well. Shipping Corporation was lower as well. But apart from that, you also had some cuts in names like Sundaram Finance, which is a large NBFC. Sonata Software was down, and HPL Electric ended the day lower as well. So, a good day for the Nifty with about an 80-85 point move higher. Broader markets doing better. About 1450 stocks up and about 1200 stocks lower. That's the picture by this Monday afternoon. It's a wrap on the session. of Closing Bell. We'll take your leave. Thanks for watching. But Nigel and Surabhi will take forward markets forward. That's essentially preparing you for tomorrow. Stay with us.
Density is very important because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, their bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has, testing and an ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
I think it is not.
There's no stopping the bulls. The market closes at a record high. The Nifty surpasses the 24,600 mark for the first time to hit new highs. Buying in mid-caps continues. The index outperforms in trade.
Short in the arm for Aurobindo Pharma, gains over 4% after the board will be considering its maiden buyback. Tire stocks soar on price hikes. MRF announces price hikes effective July 18.
Strong asset growth lifts IRDA in Q1. The stock gains close around 3%. HDFC Life jumps after its profits jumped 15% in Q1 on a yearly basis, while Bank of Maharashtra rallies close to 5% on a strong showing in Q1. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points that took place today and also gear you up for tomorrow's trading session. I'm Nigel D'Souza, and joining me as always, my colleague Surbhi Upadhyay. Hey Surbhi, another good session for the bulls.
Absolutely, and very well rounded. I mean, this was not just one sector, but the mid-cap market was also doing well. So plenty of movers and shakers, lots to talk about. And we will have you sort of go over it over the next 20 minutes. All the big news, the key developments on the Lal Street today, the top corporate voices and the events to track ahead. But let's start off by recapping what was a good day, Nigel.
Well, it was a good day for the bulls, a good start to the week, and it's a truncated one because we have a holiday on Wednesday itself. But the IT space, that was the one that was expected to fire even today. But I'll tell you what, the street had preempted this beat from HCL Tech post TCS, And that's why actually some of these tech names came in for some profit taking. Keep in mind, the index itself was up 4 to 5% in Friday's trading session. And in the last 45 days or so, it's up more than 12 to 13%. So that did come in for some profit taking. But there were stocks that did do well, stocks with some valuation comfort, stocks like ONGC, where the street believes Oil India did see a bit of a re-rating. ONGC as well could do well, and that was one of the biggest gainers. And you look at the top 3 gainers on the Nifty, well, all of them came from different sectors. So ONGC from the oil and gas space, from the financial space, Shriram Finance, that stock post its addition into the Nifty has given you a quick fire 20% itself. And Bajaj Auto as well was up closer to 2.7% ahead of its numbers. On the flip side, we did see some profit taking. Stocks like Cummins did come in for some profit taking. So that underperformed in trade today. Maybe the valuation headwind is weighing on that stock. So that was down close to 100%. And VMart Retail, at one point of time, well, if you pull up an intraday chart of VMart Retail, the stock was up close to around 3-4% odd. It ended more or less flattish. And, intraday, if you just look at that chart, it even dipped into the red, and from there, in the final hour of trade, it did see a bit of a recovery. But otherwise, that stock was a little bit weakish. It's had a good run, came in for some profit taking. And the advanced decline ratio, yes, we had more number of stocks that are advancing than declining. But towards the end of trade, those lines got a little bit closer to each other. Just take a look at that. Close to around 1,300 stocks advancing, but those lines pretty close by the time we wound up, Surbhi.
Absolutely. And even on the IT side of the screen, which is where we had a little bit of profit taking, it wasn't too much. I mean, it wasn't a major slide or anything, but it's just that after Friday's massive surge, there was a bit of a cool off on the IT side. So the IT index finally dipped into the red as we were closing out for the day. But otherwise, a very, very good session with the mid-cap index flying and really taking the cake in terms of the top gainers tally, and that's the Nifty, up about 0.4%. Well, let's tell you about the lineup today and what we have for you. We'll start off with all the key movers and shakers. Vivek will give us the lowdown on that. In terms of stocks in focus, Aurobindo Pharma is in the spotlight. The board is going to be considering a buyback proposal. Tire stocks are up and about on the back of price hikes. Also, a whole bunch of earnings coming in, so we'll tell you more about those stocks as well. And of course, then we will dive into all the key events to watch out for tomorrow's trading session. But first, the movers and shakers. Let's go over to Vivek.
Well, thank you so much for that. Another day, another record as far as the street was concerned. A whole host of stocks that did well today. First up, we are focusing on one particular pack today that did especially well. Have a look at the PSU banks, especially the mid and small cap names over there. A lot of these stocks today did very well. Even a name like IRB up over 7%, Canara Bank up 4%, even Indian Bank ended over 3% higher. The second set of stocks that did well and that joined the rally was the entire NBFC pack. You did allude to Shriram Fin, but even other names too, especially in the last hour of the trading session, did quite well. Have a look at names like Chola Financial, M&M Financial, L&T Finance. All of these stocks continued the rally that they've seen in recent times. You alluded to the fact that ONGC was one of the top gainers as far as Nifty was concerned. Not only ONGC, the entire oil and gas pack today was in focus. A lot of news flow coming in there, but all of the stocks did quite well. In fact, a name like GAIL up over 3.5%. Now, coming to the broader end of the markets, if you look at the NSE 500 index, have a look at Godfrey Phillips. The stock up on very, very strong volumes as well. And today, ended as the top gainer as far as the NSE 500 was concerned. Tanla Platforms, another stock, some positive news flow coming in terms of the company saying they signed a commercial agreement with the global tech major to go ahead and print stamps. This particular stock too, today up on very good volumes. Aurobindo Pharma, the buyback cheer coming in, stock ended high by 4%. Very few laggards today, but a few names. Sundaram Finance, even though the entire market did quite well, Sundaram Finance down almost 5% in the session today. Rail and defense stocks, if you look at the kind of moves that they've seen, they are due for a bit of profit booking, and today a lot of them saw profit booking. RailTel down 3.5%, G Shipping down 3%. The shipbuilding names, Garden Reach, Cochin Mazwa, all of them down between 2.5% to 4%. And when you're talking about Tata Steel, the last stock on the radar, some negative news flow there in terms of an outlook downgrade coming in. Stock ended lower by 1% today.
Okay, all right, Vivek. Thanks a lot for joining us and giving us that neat list out there. Well, let's go to our experts who join us on the show. We have Mayuresh Joshi of William O'Neill, who will help us out with some fundamental analysis, and Shilpa Raut of Prabhudas Lilladher, who joins us on the show. Hi, lady and gentlemen. Thanks a lot for joining in. Shilpa, you go first. I mean, this buy on dips, participate on the upside is the way to go by it, right? I mean, people thought that maybe we'll pause at 24,000. Then we had a bit of a headwind at around 24,450, but we've got past that, and now all eyes on the 25,000 odd mark. So a couple of questions. If you're long, where does your stop loss come in at, and what are the highs you see on the Nifty?
Definitely, Nigel, if you are long and you have been trailing your stop loss, for now, the trailing stop loss should be placed at 24,250. I believe that is a very strong support zones now. In the past 1 week, we have seen that we have tested those zones, a couple of times, and again, a strong bounce back has come in. So 24,250 is a good support for a positional long for 25,000 to 25,300 targets. Likewise, Bank Nifty also, as long as we are holding 51,500, 51,800 mark, this is a very strong support zone for the index. And from here, like we've been discussing, 53,500 to 54,000 definitely is on cards.
Okay, all right. Got that. Let's straight away get to some of the stocks that have been in focus today. Aurobindo Pharma surged over 4% after the board said that it would be considering a proposal for a buyback. Ekta is here with more details. Ekta.
Well, yes, Aurobindo was in focus in today's trading session. There will be a board meet on the 18th of July to consider a proposal for a buyback. It would be the maiden buyback by the company. Now, the gross cash is around 6,500 crores on their books and a net cash of around 150 odd crores. Now, to be more specific, they had a gross debt as per their Q4 call transcript of $758 million, net cash of $18 million, and the business had a net cash inflow of around $12 million before the PEN-G capex in which they incurred in Q4. Now, analysts say that one of the reasons why they are considering a buyback is because the PEN-G capex, or the capex that they had, has now been completed. But according to some analysts, the quantum is something to watch out for, because the quantum may not be that significant. In fact, some are estimating that it could be around 1,000 to 1,500 crores in terms of a buyback. But nonetheless, the stock was excited on the back of a proposal to consider the company's maiden buyback.
All right, got that, Ekta. Thank you very much. Well, let's ask Mayuresh about this. Mayuresh, Aurobindo Pharma, any interest?
Afternoon, Surbi. So as a clear disclaimer, we continue holding this stock in our global portfolios. So outside what Ekta just mentioned, I think two things that might act in support of the earnings momentum. Obviously, you've seen a lot happen in terms of the Revlimid sales. But I think the pipeline that Aurobindo has, specifically in terms of its oncology and its immunology biosimilars, a lot of those drugs are in phase 2, phase 3 trials. And there were 54 ANDAs in approval for the specialty portfolio would mean that if these approvals come through over the next few quarters, you've got both pricing in your favor as well as margins in your favor. And therefore, the consolidated margins that they posted in FY24 of 20%, 22% for Q4, might actually show an uptick and support both the US revenues as well as its global revenues as well. The last aspect, again, is the quantum of buyback. And I completely agree with Ekta. I think it should not be a substantial one. That probably not the street expected at this juncture. But I think overall earnings should probably still continue faring well for Aurobindo. So yeah, I think we continue holding the stock in our global portfolios.
Okay, all right, got that on Auro Pharma. Then time for the sector of the day. Tire stocks, well, they have been driving higher on the back of the price hikes. Sonia joins us to fill us in with more details on that. Sonia, take it away.
If you look at it, there has been a price hike across the board for most of these tire companies. And the one that we're looking at this afternoon is MRF. MRF has announced a price increase effective 18 July. Truck tires have been hiked by approximately 2%. Passenger car and radial tires prices have been hiked by in the range of 3 to 7%. So far, there's been no hike in two-wheeler tire prices, but the blended price increase works out to be about 2%. Now, this is the first price increase that MRF has taken in order to pass on the higher raw material costs to consumers, specifically rubber and crude that is used in the manufacturing of tires. Now, if you look at it, the other players like Apollo, SIAT, JK Tires have already taken approximately 3% price increases, and the price increases still lag the cost increases that have been seen in the last 3 to 4 months. So, despite the prices being passed on to consumers, there could still be some margin pressure that the companies face because of higher rubber and crude oil prices. So overall, yes, it's a positive for MRF, the fact that demand is strong enough that they were able to pass on the price increases to customers. Back to you.
Thanks a lot for that, Sonia. Well, Mayuresh, what are you making of this? A little bit difficult if you have, a tire that's ripped, if the prices are going up. But for the time being, if you have the stock, you're quite happy today. What's your preference among these tire names?
Absolutely. In fact, I was about to change my tires and I'll have to in the next few days. So I think my cost is going to go up. Having said that, I think if you probably have a construct done, Nigel, in terms of JK, Apollo and CEAT, JK and Apollo largely mirror each other in terms of their product mix. A large part of their business is catering to the MHCV part of the business. Around 50 to 55 odd percent, 25-30% comes in from the PV side of the business. Around 60% comes in from the replacement market, and 25% for OEMs, and the rest is catered by exports. So to that extent, I think the expectations in terms of a strong recovery in the second half for the MHCV segment might actually boost the volume numbers for both Apollo and JK tires. Obviously, they've done a lot of innovations as far as green tires are concerned, specifically in JK's case. And more innovations in terms of puncture-free tires as far as the PV radial tires are concerned as well. So to that extent, I think debt equity not too elevated for both these players would keep them in a good mix. When it comes to CEAT, as an example, I think a more mix in favor of the PV market or PV players will probably mean if there is some element of slowdown, as we are probably expected to understand on what has probably happened with price cuts happening with M&M and Tata Motors, there might be some elements of issues happening there. So I think JK Tires Apollo is something that we'll continue to prefer in terms of our EPS-RS ratings and how we look at it at Tata.
Okay, all right. So that's about the tire names. Shilpa, I want to ask you though about Bajaj Auto. That comes out with its set of numbers, but today that stock, was up and about one of the top gainers on the Nifty. How are the charts looking?
Nigel, Bajaj Auto, if you see the option chain and the chart, 9,500 zones hold, very strong. This is a very strong support, and we have been recommending this time and again with that stop loss, for targets of 9,800 to probably 10,000 also zones positionally. So this move today towards 9,700 definitely, sparks that, it has more potential and more steam left to see 9,850 to 9,900. So tomorrow also, if you see that stock opening, on the higher side, then rushing for a new trade, I wouldn't recommend, but, buying on dips with support at around 9,500 zone is a very nice strategy to stay long and look for targets of 10,000 and maybe more for the stock.
Okay, all right. That's a word on Bajaj Auto. Shilpa, just a word on tires as well. We're just discussing it purely on charts, just looking at the momentum. Anything that you like in tires?
Yes, Apollo tire, if you look, certainly that today it has gained, very nicely, very massive upside we have seen. The stock trading at around 540 right now, I believe it has much potential to test 580 to 600 zones. So again, on declines towards 520, a buying strategy is recommended. I believe from his stock will definitely move towards 555, 580, 600.
Okay, all right, got that. Stay on. Some more questions in just a bit. Let's move to the earnings corner. Bank of Maharashtra was up almost 6% after it delivered in the first quarter. Strong asset growth lifted IRDA as well. So those were the two important earnings we were looking at from the financial universe. Abhishek is here with the wrap.
Well, to begin with Bank of Maharashtra, it looks like the yield aided the net interest margin or the net interest income this time around. So if you take a look, interest income is up almost 7.5% quarter-on-quarter, which compares to a loan growth of just 2.7% sequentially, clearly showing that the yield has been pretty strong for the bank. So NII was up 19.6% YOY and about 8.3% sequentially. Sequentially, the loan growth was just 2.7% quarter-on-quarter. Other income was down 12.5% quarter-on-quarter, and that was on the fact that fee income declined by more than 30% quarter-on-quarter. So weak fee income did impact the other income. Cost to income ratio has improved 37.9% versus 38.7% in the previous quarter, and this was on account of the other expenses which declined by more than 8% on a sequential basis. Now NPA provisions that spiked up by 28.3% quarter-on-quarter, largely to do with seasonal in nature, and now that asset quality or provisioning for asset quality is now normalizing, so that will help, that will actually lead to a rise in credit costs, which is on an annualized basis, it's at 1.1% only. Gross NPA and net NPA both have increased by 1% in absolute value. However, as a ratio, gross NPA ratio and net NPA ratio both have declined on a sequential basis. Coming on to IRDA, strong AUM growth, they have had about 34% YOY and 6% quarter-on-quarter with respect to AUM growth. Sequentially, if you see, gross NPA ratio and net NPA ratio have declined on a quarter-on-quarter basis. Net interest margin has improved to 3.29%. This compares to 3.23% in the same quarter last year and about 2.85% in the previous quarter. So the NII growth is at 37.6% YOY and about 5.4% sequentially. The operating profits have increased more than 30% YOY and they have declined by more than 8% sequentially, given the fact that there was weakness in other income. However, PAT was up 30.25% YOY and about 13.7% sequentially. Back to you.
Okay, all right, Abhishek, thanks very much for that. So those are the earnings with respect to those two companies. Now, HDFC Life gained after it reported a 15% jump in net profits on a year-on-year basis in the first quarter. Yash is here with the earnings fine print. Yash.
Well, Surabhi, to summarize the numbers for HDFC Life in the first quarter, it was, better than estimates on the top line part, which is the annualized premium equivalent, as well as the new business margin. But margins came in lower when it comes to, the company in the first quarter. I'll start with the top line itself, new business premium. That was a slight miss to our estimates, just about 2%, came in at 6,400 crore rupees versus 6,540 crore rupees, but it was a 9% jump on a year-on-year basis. Total annualized premium equivalent, that was ahead of CNBC-TV18 poll by about 100 basis points, came in at about 2866 crore rupees versus a poll of 2846 crore rupees. And importantly, it was a jump of about 23% on a year-on-year basis. Retail APE was also ahead of CNBC-TV18 poll by about 500 basis points, came in at about 2467 crore rupees versus a poll of 2453 crore rupees. Importantly, a jump of 31% on a year-on-year basis. Now, the numbers started becoming a little weak from the value of new business level. So that was 2% lower than CNBC-TV18 poll, but 18% growth on a year-on-year basis. And as I said, the ULIP portfolio for the company grew at a very strong pace in the first quarter, because of which margins came in 64 basis points lower than our CNBC-TV18 poll and about 120 basis points lower on a year-on-year basis.
Okay, all right. Thanks a lot for that, Yash. Mayuresh, what are you making of this one? HDFC Life, it gives you spurts of hope and then some news comes out of somewhere. That's actually been a big underperformer in the last few years. But do you think it's set to do well from here on and participate?
It has, yes, it has underperformed, Nigel. And to that extent, I think the product tweaks that are expected to be undertaken right now, specifically after the budget changes last year, will pay dividends in the next few quarters. They will also ensure that as more penetration start taking place, the upfront expenses and commission costs, which will be elevated, will start coming lower. But we'll have to really wait and see in terms of how the outperformance in terms of numbers takes place. If you ask me in terms of the stack up, as far as insurance players are concerned on the life side, SBI Life still seems to be better placed on most of these parameters. Their overall expense ratios are in single digits. They're expected to see significant growth because their product mix is far better than the rest of the players. And their embedded ratios, both embedded value and return on embedded value as well, should probably see improvements because of the sheer volumes that they will do because of their bank assurance with SBI.
Okay, all right, got it. Thank you, Shilpa and Mayuresh, very much for being with us. Good having this conversation with you. And we look forward to the next one. Take a break on that note. We'll come back to we'll come back with a lot more on the other side.
Stampede in the market, even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business wise, career wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to break their FD, and they want to, somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again join stock market and all. So I think that this situation is not. Personally, I may be wrong because I have been proven wrong many times in the past. But I think this will.
Welcome back to Markets Forward. Then let's get you some of the top corporate voices that we had all through the day here on CNBC TV18. First up, HCL Tech reported a mild beat on revenue as well as margins in the first quarter. The management said that they were comfortable with their annual revenue guidance of around 3 to around 5% and margin band of around 18 to around 19%. The management said that they had factored in a soft quarter and expect quarter 2 to aid growth, with all geographies and verticals doing pretty well, except the financial services. The management also added that they had expected higher deal wins of around $2.5 to around $2.3 to $2.4 billion this quarter, but some of these deals got pushed to the next quarter. We also spoke to the management of Gateway Distriparks. Well, the company said that the Red Sea conflict, higher freight rates, and container shortage impacted volumes in the first quarter. He added that the first quarter has seen a degrowth of close to around 9 to around 10%. The company also clarified that they are not in talks with JSW Infra for sale of the CFS business, but they believe that the CFS business could be valued at approximately 1,000 crore rupees.
Okay, and with that, it's time to move to our last element on the show, which is the events that we need to watch out for tomorrow. Sonal has the list.
Thank you for that. Well, it's a long list. We have a lot of earnings tomorrow, so watch out for those. Bajaj Auto, Aditya Birla Money, Century Textiles, CRISIL, DV Corp, Himadri Specialty Chemicals, then there's Just Dial, Jubilant Ingrevia, and TV18 Broadcast as well. A long list of stocks which will go ex-dividend tomorrow as well, so watch out for that adjustment. Lupin, Kirloskar, there's IDFC Limited, Sundaram Brake Linings, CDSL, Nestle India, Thirumalai Chemicals, Dr. Reddy's, M&M Finance, TTK Healthcare, Shriram Pistons and Rings. Tomorrow is when Zee Entertainment will consider a board meet for fundraise as well, so watch out for that. And the Department of Telecommunications first meeting of Stakeholder Advisory Committee will be with the telecom services provider, will include all the big telcos in the country. So that will be an important event. And lastly, in global events, we have some macro data, US retail sales and trade data for the month of June.
Thanks, Sonal, for that. We'll keep an eye out on all those data points. For the time being, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. Now the pricing power is coming with all these telecom service providers, like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is the for sure. Now, earlier we used to talk about, in India, roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that even my driver keeps 2 mobile. I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16%.
And welcome to Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The Sensex and the Nifty end at a record high. Even as the gains are capped, the Nifty crosses 24,600 for the first time. All sectoral indices end in the green, barring the IT index. Former U.S. President Donald Trump arrives in Milwaukee for the Republican convention after surviving an assassination attempt. President Biden, along with several world leaders, condemned the attack. The U.S. Secret Service face flak after a gunman fires at Trump from just 140 meters at a rally. Volatility across global markets following the assassination attempt on Donald Trump. The U.S. dollar gathers strength in trade, leading to a drop in crude oil prices. India is among our fastest growing businesses, says the global CEO of DBS. Piyush Gupta adds the India story is the story of the moment and of several decades, underlines the significance of India's ties with Singapore. Hyundai India aims to hit Dalal Street in the first half of October. Sources say the company's bankers will respond to some risk-related observations made by SEBI. That's an exclusive. Direct tax collections surge over 23% in the first 4 months of this financial year. A CNBC-TV18 analysis shows the government is likely to have a revenue cushion of at least 1 lakh crore rupees ahead of the budget to balance fiscal consolidation with growth measures. The GST Council's Fitment Committee has not yet considered the Oil Ministry's proposal to include natural gas and aviation turbine fuel under the indirect tax. Sources say the Finance Ministry has raised concerns over past disagreements with states on including natural gas and ATF under the GST ambit. Vodafone Idea knocks on the door of the Supreme Court for an early hearing of the curative petition against the AGR verdict, which has been pending since 2023. The Apex Court's 2019 judgment had ordered telecom companies to pay their dues to the government over a 10-year period. Well, as always, let's start the day with the market action. The Sensex gained over 140 points and the Nifty was up 80 points, ending the day at record closing highs. So that was the start of the week. A strong showing on Monday, 145 points higher, 80,664 for the Sensex, 84 points higher for the Nifty. The Nifty mid-cap index adding about 500 points today. Nifty IT, though, taking a bit of a breather, down in the red. So that was the picture there, some profit taking. The only sectoral index to end in the red today, that was the IT index. Well, global markets are volatile after the assassination attempt on the former President Donald Trump. The US dollar gaining strength as treasuries see a rise in demand, and this is having a knock-on impact on emerging market currencies, in particular the rupee hovering near record lows, but the Indian currency is trading in a tight range. Oil prices, meanwhile, have dropped in trade. Another factor moving the market is China's GDP. The growth rate has dropped below 5% in the April to June quarter of this year. In the first quarter, the economy was growing at 5.3%. The growth rate of 4.7% is below the consensus estimate of 5.1%. Retail sales in June also missing estimates. Multiple brokerages have cut their full-year growth forecast for China below 4.5% for 2024. Well, let's talk about that big story, the shocking incident creating waves around the world. Former U.S. President Donald Trump has arrived in Milwaukee now for the Republican National Convention after narrowly surviving an assassination attempt less than 48 hours ago. A 20-year-old gunman fired 3 rounds at Trump while addressing a rally at the crucial swing state of Pennsylvania. Trump was injured after a bullet grazed his ear. Speaking to the Washington Examiner, Trump said, and I quote, "I rarely look away from the crowd. Had I not done that in the moment, well,
we would not be talking today, would we? End of quote. The US Secret Service is facing flack and questions after the attempt on the former president's life. The gunman was positioned on a roof just about 140 meters away from the podium where the former president was delivering his address. The gunman was killed by the Secret Service officials immediately. One person attending the rally has died and 2 others have been injured. Officials have identified the gunman as a 20-year-old Thomas Matthew Crooks. Investigators believe he acted alone and the motive for the shooting remains unclear. Amidst this backdrop, Trump is in battleground Milwaukee, which is a crucial swing state for the first full-scale Republican National Convention in 8 years. This is the event where the Republican Party is expected to confirm Trump's candidacy for the White House. Nikki Haley, the former U.S. ambassador to the UN, is scheduled to speak at the convention today. The 4-day event is set to culminate with an address by Donald Trump on Thursday. Meanwhile, in a rare Oval Office address, President Biden unequivocally condemned the attack on President Trump and said politics should never become a killing field. Steve Sedgwick is here with more details. Steve.
The former US president and presumptive Republican nominee Donald Trump has landed in Milwaukee for the Republican National Convention. This as America looks to see what the implications are of that assassination attempt that left him injured and a rally attendee dead. What that could have in terms of implications on the country's political landscape. Mr. Trump says he was shot in the ear in Saturday's shooting. Trump says he has rewritten his convention speech to focus on unity, telling the Washington Examiner that the event is a chance to bring the country together. The address is expected Thursday. Well, our colleague Joe Kernan spoke to Mr. Trump on Sunday evening, saying the former president is, quote, doing great and is gratified by all the encouragement and support from both sides of the aisle. Meanwhile, the FBI says it's investigating the attack as a possible act of domestic terrorism after a number of suspicious devices were found in the home and car of the shooter, Thomas Matthew Crooks. The Secret Service is coming under increasing scrutiny after Saturday's attack. Sources familiar with the agency's operations have told NBC News the rooftop Crooks shot from was identified as a security vulnerability before the rally took place.
This places an added burden on each of us to ensure that no matter how strong our convictions, we must never descend into violence. The Republican convention will start tomorrow. I have no doubt they'll criticize my record and offer their own vision for this country. I'll be traveling this week making the case for our record and the vision, my vision of the country, our vision. I'll continue to speak out strongly for our democracy.
Well, President Biden, their world leaders have condemned the assassination attempt on the president. Prime Minister Modi posted in social media saying that he's deeply concerned by the attack, calling Trump his friend. The Prime Minister also said that violence has no place in politics and democracies, and wished the former president a speedy recovery. The British Prime Minister Keir Starmer said he was appalled by the shocking scenes and denounced political violence. Canadian Prime Minister Justin Trudeau said he was sickened by the shooting and sent his thoughts to the former president and his fellow Americans. French President Emmanuel Macron said his country shares the indignation of the American people. China's foreign ministry has reacted to the attack, saying President Xi Jinping has expressed his sympathies to the former president. There has been no reaction from Russia so far. Here's how leaders of Ukraine and Australia reacted to the assassination attempt on Donald Trump.
An attempt on the life of Donald Trump, an appalling crime, one that can only be condemned and which shows how serious the global challenges to democracy are right now. Violence in any form and anywhere must never prevail. I am confident that America will rise to the challenge. I wish Mr. Trump a speedy recovery.
Along with all Australians, I was shocked by the terrible scenes at former President Trump's campaign event in Pennsylvania. I'm relieved by the news that the former president is safe and doing fine, and I wish him and his family well. We do so with respect for each other and in the spirit of a shared love of our country. Any act of violence is an affront to that and must be condemned unequivocally.
Well, reactions coming in there to the assassination attempt on former President Donald Trump. All eyes now on the Republican convention where Donald Trump is expected to speak. Now, India is the story of the moment and the story of the next several decades. That's the word coming in from the global CEO of DBS. Speaking to CNBC-TV18, Piyush Gupta said that India is amongst the bank's fastest growing businesses. He also underlined the significance of India's ties with Singapore. Take a look.
In the middle of COVID, we had the opportunity to acquire a distressed bank, Lakshmi Vilas Bank, through a competitive process. And that obviously has changed the complexion of our business manifold. We're now 500 plus branches. We're in 350 cities. And so we have a scale today that we certainly did not even 10 years ago. Now, like many other international players, we paid tuition fees along the way. But I have to say, today, India is our fastest growing business, even though the LBB franchise will still take some time to make it profitable. But in aggregate, it is our fastest growing business.
What about, appetite for putting more money to use in India? You talked about Lakshmi Vilas Bank and how that's playing out for you. I know that the government hasn't moved so far as its bank privatization plan is concerned, but IDBI Bank is still up for grabs and that hasn't moved. Is that a potential area of interest?
You know, if you look at our M&A strategy for the group in the last decade, we like to do bolt-on deals that we can integrate and create value from. So large transformational M&As in banking are very challenging and rarely work. And so that's been our mindset. Do enough, consolidate, and then build your own capabilities at the same time. And so, yeah, we'll see. We're always open and on the lookout to do the right kind of deal. But it's got to be a kind of deal that we think we have the management bandwidth to bring some value to.
Let's talk about India and Singapore. And as I said, natural allies, and there has been momentum building along this partnership. How do you see it from here on? And what do you believe will be the points of partnership where more can be done at this point in time?
Singapore's investments in India are well north of $100 billion, probably close to $150 billion. That's massive. It's much larger than any single country in the world, the stock of investment, but also the flow of FDI. You look at the last 5-6 years. Every year, Singapore is the largest FDI into India. And some people tend to believe that this is, round tripping of somebody else's money like Mauritius. Yeah. It's actually Singapore money. It's GIC, it's Temasek, it's DBS, Sembcorp, Singapore Airlines, Singapore Telecom. Yeah. These are Singapore's champions who are heavily invested in sector after sector. We're in the port, we're in infrastructure, we're in energy, we're in telcos, we're in finance. So it's an unappreciated story, and we need to make sure we celebrate that a lot more. The reverse is also true. When I talked about we created DigiBank in India and then took it out all over the world, that reflects a couple of really important things. India's ability, the talent base, and the tech capabilities are really exceptional. And so that you can actually take that and engineer and drive a lot of stuff as you go out into the East. We've been able to do that in our own case. And therefore, we need to recognize and appreciate that story. That's the first part. Now, to your specific question, the way forward, I'm just so bullish on the opportunity we have for 2 or 3 reasons. Number one, everybody knows India is the story of the moment and will be the story for the next several years, decades maybe. And a lot of Singapore's capabilities and strengths are well aligned to be able to participate in that India growth story. You asked which sectors. You think about, we talked about AI, machine learning, and technology. Now, India has some strengths, so does Singapore. Energy, it's a big deal for India, 500 gigawatts of renewable energy by 2030. Singapore is a champion today in renewable and green finance. So there's an opportunity for us to co-construct, co-create, including moving down up the value chain, things like hydrogen and so on. If you look at infrastructure, continues to be a big need in India. Singapore, everybody knows infrastructure, Singapore is great, but it's not just because it's small cities. Singapore has capabilities. Public housing, for example, I think there's a huge opportunity over there. Water, going to be a big crisis in South Asia and India. Singapore has mastered water. So there are fields and infrastructure that Singapore can clearly participate in.
Well, you can catch that full conversation with Piyush Gupta at 5:30 p.m. and 9:30 p.m. right here on CNBC-TV18. That's coming up for you on the Global Dialogue. Well, here's another CNBC-TV18 exclusive. Global car maker Hyundai is looking to debut on Dalal Street in less than 3 months at a potential valuation of around 25,000 crore rupees. This is likely to be India's biggest IPO yet. Sources tell CNBC-TV18 the company will respond to market regulator SEBI's observations in a few weeks' time. Parikshit is standing by with the details. Parikshit, how is the company's IPO prep going?
Well, the preparation is going on several fronts, and we're told by sources that the company is hoping to go public in the first fortnight of October. Now, in preparation for that, they have received certain questions, certain queries and observations from the market regulator about the risks involved with this IPO and the company's growth over the next few years. There were 82 risk factors that Hyundai had mentioned in its DRHP, and we believe all these observations from SEBI will be responded to by the company's bankers in the next few weeks. Having said that, they are also looking to strengthen their top leadership here in India. There are hirings going on, and we will hear of a few key announcements about the company's leadership for India before October. Having said that, the company is also facing some trouble from its workers. A section of the workers' union is upset about not being taken on board or informed in any way about this IPO process, and they've served a notice on the company to respond in 10 days and explain the workers what will be the benefits to them as a result of this IPO. Now, this could be a difficult one because the DRHP makes no mention about employee compensation or shares for the employees as such. But the workers do want some sort of compensation and benefits out of the IPO proceeds. The chief manufacturing officer of the company has started talks with the workers' union. So far, the protest has been lodged peacefully. There has been no disruption to the production. That's what we are told, but we never know how things proceed. But given what has happened in South Korea, it's quite possible that Hyundai India will have to accommodate its workers, because in South Korea, the company has reached a wage deal, a tentative wage deal with its employees' union, and this is giving them the highest ever wage hike in the company's history. Even the workers there were protesting and were offering to go on a strike, but the company has managed to quell that. Let's see what happens in India now.
All right, Parikshit, many thanks for joining us. We will head into a break, but up next, the GST Council's Fitment Committee has not yet considered the Oil Ministry's proposal to include natural gas and aviation turbine fuel under the indirect tax ambit. That and more when we return.
Global GDP. Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio.
Wholesale inflation touching a 16-month high in June, primarily on the back of rising food prices. Wholesale food inflation stood at a 20-month high of 8.7%. 6 of the 10 major food categories, including vegetables and pulses, have seen double-digit inflation in the month of June. So that's not good news for consumers or for the government. In what comes as a cushion for the government a week ahead of the budget, advanced direct tax collections till the 11th of July have come in at 5.74 lakh crore rupees. This is higher by 20% compared to the same period last fiscal. Sapna joins us now with more. Sapna, how much revenue cushion does the advanced tax mop-up leave the government ahead of the budget?
Well, Q1 has been a pretty good show as far as direct tax numbers are concerned. You have the numbers over there in front of you. Around 25 to 30 odd thousand crores could be the mop up on the higher side if the normal growth rate of around 13 to 14% odd was considered as far as the tax target for this year is, goes into picture. So 21.98 lakh crore is what the government has roughly budgeted in terms of direct taxes, including your securities transaction tax as well. So, almost like over 26% odd of that target has already been met. If you look at the numbers year on year, almost 1 lakh crore additionally in comparison to last year is what the government has been able to mop up. And a big reason for that is personal income tax. That's the growth rate. That's something that is giving them all that cushion. In comparison, if you look at corporate tax growth rate, that's much lower. It's actually lower than the 13 odd percent, 12.47 as of now, as of July 11. Now, it remains to be also seen whether the same pace is maintained in the second and the third quarters. This is the Q1 that we are talking about. Possibly the surge, may kind of taper off in the coming months. But so far, that buffer has already come in, so to speak. Remains to be seen how this pans out in the coming months. But having said that, very quickly, overall, the government's fisc is in good health at the moment. The April-May CGA numbers are a very strong indication of that front. So it remains to be seen that this kind of fiscal cushion that we are talking about, whether some welfareism is also something that the government will adopt in the coming budget, along with, of course, maintaining their fiscal prudence, probably around 5% odd fiscal deficit or even below that.
Okay, Sapna, many thanks for joining us. Now, there is no clarity if aviation turbine fuel will be included in the GST framework. Sources tell CNBC-TV18 the GST Council-nominated Fitment Committee has not yet considered the Oil Ministry's proposal to include natural gas and ATF under GST. Timsy standing by with more. This has been a long-standing demand of industry, Timsy, but is there any further movement on the final inclusion?
Well, whether the road is clear for ATF and natural gas to be included under the GST regime, well, the answer is no. What sources are telling us is the fact that the GST Council-nominated Fitment Committee has not yet considered Oil Ministry's proposal to include natural gas and ATF under the GST regime. Just to remind our viewers how the system works under GST, GST Council can consider any request only on the recommendations of the Fitment Committee. And Fitment Committee is an entire committee where states' view is taken. States are equal members in that committee. They assess the revenue implication and only then the Fitment Committee makes any recommendation to the Council, which is then deliberated in the Council meeting. To be precise, what happened in the meantime? Well, Petroleum Ministry officials did meet Finance Ministry officials, but no commitment has been given by Finance Ministry officials, referring that the matter is yet to be sent to the Fitment Committee. Not just this, Finance Ministry officials also expressed concerns over the past disagreement with states on the inclusion of natural gas and ATF under the GST regime, considering that states will have to give away their share of revenues to the centre, which will be then shared 50-50. Right now, only states are getting the revenues from these petroleum products. So, and as latest as 45th GST Council meeting happened, the petroleum products was discussed in that meeting, and it was said that the petroleum products are very much under the GST. It is for the Council to decide the rate that should be prescribed against each of the categories under the petroleum products, and that decision can be taken as and when the Council feels appropriate. And right now, sources say that states are completely in disagreement on giving away their share of revenues on these particular categories. So let's see what happens finally, whether this proposal actually makes it to the Council or not. That is something that we'll have to wait and watch for.
All right, Timsy, many thanks. Now, shares of Zomato briefly hitting a record high, taking its market capitalization to 2 lakh crore rupees. This after the food delivery company hiked its platform fee to 6 rupees from 5 rupees an order. For now, the hike is effective in selective markets like Delhi, Bengaluru and Mumbai. This is the 5th time that Zomato has raised the convenience fee over the last 1 year. Brokerages say the move could have a mildly positive impact on Zomato's profitability. Tyre stocks accelerating in trade today on the back of price hikes. There are reports that MRF, India's costliest stock, has announced price hikes in the range of 2 to 7% across categories. There has been no hike in the prices of MRF two-wheeler tyres as yet. The price hike was necessitated as natural rubber has become more expensive. Companies like Apollo Tyres, Seat and JK Tyre have already hiked prices. Shares of IREDA rallied in trade today, making an intraday high of 310 rupees a share, which is nearly 10 times the price of its IPO of 32 rupees. IREDA had made its stock market debut on the 29th of November in 2023, which means that the stock has risen nearly 10 times within 8 months of going public. The stock is up for the 4th straight session in today's market. The company's market cap has also crossed 80,000 crore rupees. Now, cash-strapped telecom company Vodafone Idea has sought an urgent hearing on its curative petition against the Supreme Court's 2019 AGR judgment. The court had ordered telecom companies to pay the government over a 10-year period for the pending AGR dues. The telecom companies had filed a plea against the order in September of last year. Ashmit joins us now with more. Ashmit, why is Vodafone Idea seeking an urgent hearing?
Well, it's been since September 2023 that they're awaiting clarity from the Apex Court. No questions coming. In fact, the petition has not even been taken up, and that is something that was flagged by Harish Salve today, appearing for Vodafone Idea. Now, as far as Vodafone Idea is concerned, the total burden that they were slapped with was around 58,000 crore rupees, but that was back in 2019, and of that, the principal component was 14,000 crore rupees. Their application is likely to argue that this burden of 14,000 crore rupees, after accounting for the arithmetic errors, should be much lower, should be around 8,000 crore rupees. Further, Harish Salve also submitted that as far as the penalty clause is concerned, no hearing was given to the company. Also going on to submit that the complexion of the company has changed entirely. Mind you, Vodafone Idea had opted for converting its government dues to in return for equity, which means the government now is the single largest shareholder, north of 32%. But importantly, the one key concern that Harish Salve put across is that they're looking to raise funds to meet these dues, and to that end, they're in conversation with debt funders. But even the debt funders require clarity from the Apex Court on what the final burden is going to be. So with that, making a renewed prayer before the Apex Court for an urgent hearing. The only words, however, that fell from the CGI is that we'll consider your application and pass necessary orders. So that question mark still looms. Vodafone Idea still awaiting clarity.
All right, Ashmit, appreciate you joining us. Apple India's sales up 33% year on year to a record high of nearly $8 billion. For the year ending March 2024. That's a sharp increase from $6 billion the previous year. According to Bloomberg, iPhones accounted for more than half of the sales. The surge in sales underscored Apple's efforts to increase market share in India and the steady progress in diversifying the manufacturing and revenue streams beyond the China market. Google parent Alphabet in late-stage talks to buy cybersecurity startup Wiz for $23 billion, as per a report by Reuters. Now, if the deal goes through, it will be Google's biggest acquisition ever. This comes at a time when US President Joe Biden's administration has heightened antitrust scrutiny of the sector. Wiz was last valued at about $12 billion, and it has been eyeing an IPO. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue here on CNBC TV18. Don't go anywhere. We're back in a moment with plenty more.
Market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself. as India's longest-running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com.
Welcome to the Medicine Box Health Matters, where we delve into the health topics that truly matter to all of us. I'm your host, Ekta Batra. Today, we shine a spotlight on a vital aspect of our well-being, ear, nose and throat, or ENT health. ENT issues are far more common than you think, yet they often go undiagnosed and untreated. In India, some of the most common ENT problems are persistent ear infections to sinusitis and acid reflux. But there's more at stake. ENT conditions can deeply impact our quality of life. Take hearing loss. For example, it affects 5% of the global population, cutting across all age groups, from children born with it to musicians exposed to loud noises, and even those who suffer multiple or severe viral infections. Astonishingly, over 6 crore Indians suffer from significant auditory impairment. India is also home to one of the highest number of children with hearing impairment in the world. Vertigo, another common inner ear issue, affects 15% of the global population, with a staggering 18 crore Indians grappling with balance and dizziness disorders. Meanwhile, sleep apnea has emerged as a public health concern, affecting an estimated 10 crore people in the country. And let's not forget, India has some of the world's most polluted cities, amplifying respiratory problems. Today, we are privileged to welcome a titan in the field of ENT health, the esteemed Dr. Kirtane, a Padma Shri awardee. Dr. Kirtane has performed over 2,000 cochlear implant surgeries, bestowing the gift of hearing upon countless children and adults. Join us for this special conversation on ENT health. Welcome to the show.
One problem which I have noticed, which I would like to mention here, is people coming with sudden deafness. And I remember as residents, we used to see it maybe once in 6 months. Today, I see 2 to 3 patients a week. If you have a chest problem, you can loosen up the secretions, so you can take steam and then you can cough out your secretions out a little better. But I don't think it has any role in preventing. If you are the one who tries to sort of boost up your music and you're hearing it all the time, I told you 80 decibels and above for a prolonged period is going to cause damage. Earbuds in the ear. That's a no-no.
Dr. Kirtane, thank you very much for joining in.
My pleasure.
Well, let's start by you giving us an overview on the most common ENT issues that you see in your practice and you have seen over all these years.
I would then divide this into children and adults because the problems are a little different when they present. Children most often come to us with runny nose, tonsils, adenoids. A lot of parents say that their children keep their mouth open and are snoring at night, restless sleep. This leads to problems in their ears and they get what is called a fluid collection in the ear. So they have deafness problems. Sometimes it starts flowing and a ear discharge starts. So that affects their day-to-day life. They can't go to school so easily or they don't follow what's happening in class. So this is some of the commonest problem that we see in children. Of course, there are some children with respiratory problems as well because they're also exposed to the pollution that you just mentioned. In adults, I think the common problems that I encounter are imbalance and vertigo, hearing loss. We have a lot of senior citizens now coming in, good health, mentally, physically very fit, even in their 80s, but they have hearing loss. We have a lot of professionals who come with problems of voice because of overuse and again pollution, virus infections. And vertigo is also one of the problems. A lot of times patients keep on coming because it's difficult to deal with this. So these are some of the common issues that we face in practice.
But have you seen it increase in the past couple of years, say in the past decade?
Respiratory problems, definitely. I think the pollution levels are high. Also, we have so much of work going on, construction, the metro work, so a lot of dust in the air. So a lot of people with respiratory problems definitely on the rise. One problem which I have noticed, which I would like to mention here, is people coming with sudden deafness. And I remember as residents, we used to see it maybe once in 6 months. Today I see 2 to 3 patients a week. Now, whether this is virus related, whether there are new viruses around which are causing this, we don't know, but there certainly is a rise in this. A lot of people coming with sinus problems, breathing problems, also perhaps related to the pollution. And,
but is the sudden deafness related to the incremental rise?
We feel that when there is no other apparent cause, we feel it is viral. We treat it with steroids, etc., hoping to minimize the inflammation. And maybe the number of viruses which are now around are far more than what it was, say, 50 years back when I was in training. So the definite incidence of sudden hearing loss, the patient goes to sleep normal, wakes up with 1 ear completely gone, is happening rather often.
Okay, well, I'm just going to get to air pollution in a bit, but before that, you mentioned adenoids. That is something which has come up in terms of pediatric care multiple times. What does one do when they have, toddlers or children with inflamed adenoids? Is surgery the right option for all of them? If so, when?
If the adenoids are large enough to produce significant obstruction, which means the child cannot breathe at night, is sort of struggling, snoring. The parents tell you that the child keeps on tossing and turning in sleep, tries to adopt a particular posture to try and breathe. Yes, definitely we would treat it conservatively initially, but if the problem persists, we would advise surgery, even in the age group of 2 to 3 years, 4 years, because it is affecting their general growth as well. There is a definite relationship between poor oxygenation at night and that snoring that happens, because they're also not getting enough oxygen during the night rest period. And it has definite implications as far as growth is concerned. The child's attitude, irritability, capacity to concentrate, all these get affected, and physical growth. Also, it leads to ear problems. So if a child really has large adenoids which is impacting quality of life, we would definitely recommend surgery.
Okay. The other point that, statistics show that globally we've seen the rise of recurrent respiratory infections post-COVID. So how does one treat those recurrent respiratory infections? Is it always treated with just, say, looking at the symptoms, waiting for them to die down? Or do you eventually need to start antibiotics? And if so, how often?
Antibiotics really should be used only when there is definite evidence of a bacterial infection. The patient has fever, is unwell, is producing sputum which is purulent. Not every person who comes with a cough needs antibiotics. And post-COVID, yes, because of certain changes that have occurred in the lungs, they may have persistent cough. Doesn't have to be treated with antibiotics. There are specific indications to say, okay, in this particular case, he's running fever, the counts are high, and then you would go for a treatment of the bacterial infection with antibiotics.
And for children, the same applies?
Same applies, yeah. There is a tendency every time the child gets a sore throat, give antibiotics. No, that's not really on. You monitor the temperature. Everybody has innate, resistance power, can overcome infections. So you have to give that a chance as well. You might give them symptomatic treatment, but antibiotics should be reserved only when clearly indicated. Otherwise, overuse of antibiotics, you would land up with people getting resistant infections and your antibiotics would stop working.
Okay, well, talking about air pollution, Dr. Kirtane, what are the long-term implications of air pollution, considering that India has some of the most polluted cities in the world?
See, the way pollution would affect you, it would produce an inflammation in the lungs because of the pollutants. So when there is inflammation, the normal processes that lead to transport of mucus, which is formed in all the respiratory tract, that gets affected. And whenever that happens, that becomes a ready-made medium for the bacterial infection to set in. So whether it's allergy, which produces inflammation, or pollution that produces the inflammation initially, makes it easier for bacterial infection to set in.
any preventive methods that you would recommend when it comes to protecting yourself from air pollution?
That's a big problem. It can't be just protecting yourself. You will have to have regulations brought in from the government side to see how to minimize the pollution from factories or whatever activities are going on. You'll have to have technological advances which will say how people can reduce their pollution. And then, of course, each individual will have to be aware that these are problems and pitch in from his side whatever he can do. But as an individual, to protect yourself, avoid going into places which are polluted, or if you have to go there, wear a mask, be properly protected.
Would you recommend wearing a mask in any case?
In today's scenario, a lot of people are still wearing masks and nobody gives them a second look. So I think if you are in an area where some digging is going on, construction work is going on, I think it's absolutely sensible to wear a mask and protect yourself.
Okay, and what about using public transport or on an everyday basis?
Yeah, because if you're in a crowded bus and people around you, I think you don't know whether the next guy has got an infection or not. So in a crowded public place, wearing a mask would make a lot of sense, yes.
Okay. Well, you know, one of the statistics for India indicates that sinusitis is in fact more widespread than asthma, diabetes and heart disease in the country. What leads to sinusitis and what is the best way to probably resolve it?
You know, every time you get a cold, technically you will have sinusitis because the nose and the sinus lining is continuous. We talk about sinusitis as a disease when it starts giving symptoms like nasal discharge, postnasal discharge, feeling of fullness in the face or even headaches. That's when it becomes significant, and you have it in two parts. You have acute sinusitis, which can occur over a short period of time, and if it's with purulent discharge, fever, etc., pain, headaches, you would want to give antibiotics. Target the antibiotics according to what you feel is necessary, along with decongestion so that the sinuses are allowed to drain. And then you have chronic sinusitis, where people have an ongoing problem. Usually they have some basis. So a person with strong allergies will more likely have chronic sinusitis. Exposed to pollution, continuously working in a polluted atmosphere, more chances of chronic sinusitis. And what happens in this is that all our sinuses are producing mucus like your nose, and it drains into the nose with tiny holes, ostia, what we call them, channels. And when you have allergy or a virus infection or pollution, there is swelling which blocks these channels. So the sinus cannot drain, and that leads to sinus changes, chronic sinusitis. And if it doesn't settle with medication, then you have to go and operate on them. And now with the endoscope, the surgeries are far more delicate. All that you have to do is to go and widen the opening of the sinus, allow it to drain, and you can take care of sinusitis.
Okay. Allergic rhinitis, when people are sneezing, they have some kind of allergy. How does one treat allergic rhinitis or any kind of allergies, and especially if you can't identify the allergen?
You have to give them symptomatic relief by giving anti-allergic medications, which may be by way of tablets. You can have nasal sprays. But we make it very clear to the patient that there is no anti-allergic tablet, at least in allopathy, which cures your allergy. It just controls it. It's like treating a patient with diabetes or with blood pressure. You don't say you cure his diabetes, you control it. Blood pressure, you keep on taking medication, you control. And a lot of our patients say, well, I took the medication, I was okay, I stopped the medication, it comes back. So the only way to get a cure would be to identify. Today you have people who do skin tests, and I think they have about a 70% success in identifying your allergen. If it's something that you can avoid, something in the food or some cosmetic that you're using, stop using it.
Okay.
But if it's dust, if it's pollen, if it's grass, if it's fungus which is in the air and you can't avoid it, then you have to ask the allergy or allergologist to prepare a vaccine.
Okay.
You're sensitive to that thing, you need to desensitize yourself by gradually increasing the dose of the vaccine. It's a therapy that goes on. Formerly we used to give it injectables. Now you get something that you put under the tongue. So it's called sublingual immunotherapy. And if you have identified it correctly, then you can get cured of your problem.
Okay. So in all of these respiratory issues, a lot of people have asked whether one should, do steam inhalation, and how useful is it? How much should one do it? And is it also preventive?
I don't think steam inhalation is preventive. It makes you feel good. Any part which is hurting, you apply a little heat, feels good. If you have a chest problem, you can loosen up the secretions, so you can take steam and then you can cough out your secretions out a little better. But I don't think it has any role in preventing, except that if you are in a very cold surrounding, and there are people who are sensitive to cold. I get patients who say, I have 1 glass of cold water and my throat really goes. So maybe the temperature of the steam might give you a little assistance over there. But by itself, I don't think steam can really prevent.
And fix?
Not really fix. It's more of a symptomatic relief that you would get with that.
Okay. All right. Well, Dr. Kirtane, we need to take a short break, but we have a lot more questions. Stay tuned.
Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. And the surplus has to be transferred after making all the provisions required. And the surplus has to be transferred now. As per the recommendations of the Bimal Jalan Committee, we have an economic capital framework. It is principle based, it is formula based. There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan Committee. We follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the, let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the Central Board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
The retail participation has been something that everyone's been appreciating, and personally as well, most of your money goes into SIPs, which we believe that over a longer span of time, well, it'll hold well. The only fear is retail getting into a bit of a trap, and that's the fear, but that's been the case as well. If you look at the SIP numbers, well, beautiful looking numbers. In the last 6-7 years or so, that retail number, the SIP number that you're seeing, has moved up from around 3,500 crores all the way to around 21,000 crores, which is very, very encouraging, up close to around 6 times odd in 7 years. As a proportion of the total free float, Motilal Oswal, they have put out this note, which they have titled the Retail Rhapsody. And they have highlighted that, as a proportion of the total free float of Indian market capitalization, the DIs and the retail, well, their holding has gone up substantially from around 55% all the way to around 63%. Not just their holding, but even their participation has gone.
Welcome back. Well, we are still talking to Dr. Kirtane about ENT health and ENT issues. Well, Dr. Kirtane, a lot of people don't know they have acid reflux, which might be in fact resulting in a cough or sinusitis. What's the correlation?
Acid reflux is when the acid from the stomach comes into the esophagus. Normally, after you eat, the food is supposed to pass on forwards. There should be no acid coming up. But there are times when the acid does come up. There are conditions where the esophageal sphincter is maybe incompetent, and that happens. And that acid reflux can come as high as your throat. So you can get changes in your voice box, laryngitis, to the extent that you might even get ulceration. So you can get a pricking pain, change in the voice, cough because the larynx is now irritated. It has been shown even to come up higher into the back of the nose. so producing what we call nasopharyngitis. It can lead to problems in the eustachian tube. It has been shown sometimes in children who have a lot of acid reflux that they can even get ear problems because of the acid reflux. So what the acid reflux does again is produces inflammation.
Okay.
And inflammation then allows infection to come in more easily.
Okay.
So we see a lot of throat complaints which are related to acid reflux.
Okay. Vertigo. You said it is a problem that you see amongst your patients. What causes it, and how does one probably try and avoid it or resolve it?
Yeah. Now, first of all, vertigo is not a disease. A lot of people come to me and say, "Oh God, doctor, I've got vertigo. It's like some terminal illness." No, vertigo only is a symptom. And basically, vertigo means you get a sensation of things moving around you when no such movement is actually taking place. And we would tend to divide this into two major groups. Peripheral vertigo, which comes from the inner ear, which is your organ of balance. And there is central vertigo, because ultimately the balance organ interacts with the brain to control balance. So you could have changes occurring in the brain which can also produce symptoms of vertigo. Not only that, but there are sort of systemic disorders. If your blood sugar is too low, you may get vertigo. If your blood pressure is too low or too high, you may get vertigo. So there are so many systemic conditions. So investigating a patient of vertigo is really a big task. And what we tend to do is to take a very detailed history which points us in a particular direction, and then go along that track to see, is my guess correct? Is it Meniere's disease or not, where there is a swelling in the inner ear? Or is this a viral infection of the ear? Or there is a very common condition called benign positional vertigo, where the patient says every time he lies down and turns on a side, they spin. Now, this can be corrected, but provided you diagnose it correctly. So that's some of the common causes of peripheral vertigo. Central nervous system, degenerative disease in the brain, or lack of blood supply to the brain can produce symptoms of vertigo. And then I said the systemic disorders.
Okay.
So it's a huge problem that you need to deal with.
But most of the times you see it in the elderly, and it is something that
Not
you can...
necessarily. We also get people between their 30s, 40s, 50s coming with Meniere's disease, positional vertigo and things like that. The elderly come, they are more likely to be the central type with poor blood circulation or degenerative diseases. But vertigo can occur even in children.
Okay.
And there is a lot of relationship now being discovered of a relationship between vertigo caused by migraine. So it's a Pandora's box. Yeah.
4,000 cochlear implant surgeries. Can you just explain to us how life-changing are these surgeries?
You know, these surgeries of cochlear implant were meant for adults initially when they came in. People like you and me who could hear normally, speak normally, something happened. Maybe a virus infection, drug reaction, ototoxic drugs. When they said in the 90s that we would do it in children, people felt it won't work. Today in India, all over the country, 90 to 95% are children.
Wow.
And 5% are adults, while in the developed countries, it's 50-50 or 60% adults and 40% children. So let's talk about the children, because we've got 95% of them. And these children who are born deaf, who are profoundly deaf, and they are beyond the range of a hearing aid. Even the hearing aid doesn't help them. So if they don't hear, they can't learn language and speech. So they have to have lip reading, sign language. That does mean limited opportunities for higher education and things like that. So they are brilliant. I have children whom I have operated who are doing medicine, who are doing law, engineering. They're into IT in a big way. There's one girl who's getting married in December. She stood first in the 12th standard exam in a normal college amongst all their peers with only one cochlear implant, and she's working in a bank in Denmark.
Oh, lovely.
You change their life completely. They become absolutely mainstream. But what's more important, you change the life of the whole family. You should download an app on your phone which gives you the decibel level of whatever you are doing. Anything more than 80 decibel prolonged period can give you deafness. If you go to 100 decibels or more, short exposures, which is what music concerts are all about, huge big speakers and they're blasting music. And if you go to 130 decibels, a single exposure can give you deafness. So what happens is the sound vibrations through the eardrum, through the ossicles, go to the inner ear. Those hair cells, which are supposed to convert the sound into electrical energy, are extremely delicate structures. So when they get pounded with this much of sound energy, they can't take it. So they start degenerating, they start going down. And that's why people who are exposed to, that's why you see in airports, they're asked to wear earmuffs. Factories, they're supposed to wear earmuffs. And very often you find the earmuffs around the neck. They don't want to wear them. They're all at risk. So whether it's music industry, aircrafts, factories where there is a lot of noise, the same pathology applies. Too much power going into the ear, destroying the hair cells.
A lot of people use earpods all the time now. Is it harmful to use earpods all the time, as well as maybe earphones?
No, I don't think they are harmful in themselves. It all depends upon the volume at which you're playing them. So if you're hearing them at normal volume, I don't think there is any harm in it. But if you are the one who tries to sort of boost up your music and you're hearing it all the time, I told you 80 decibels and above for a prolonged period is going to cause damage. So if you're using that, be sensible. Keep the volume to tolerable levels.
Okay. And what's the best advice that you can give for ENT health?
We talked about pollution. Protect yourself. So for each of these, for voice, avoid straining. For hearing, avoid noise exposure. One more thing I must say. Earbuds in the ear. That's a no-no.
Never do that.
Earbuds are meant to clean these outside crevices. It's, they're very often bigger than the size of the ear canal, and you try to take out wax, and at least 3 to 4 times a week I get people who have damaged, not the eardrum, but the canal skin with the earbuds. So one warning, therefore cleaning the outside, not the inside of the ear. If you have allergies, try to get to the root cause of the allergy, try to find out what you're allergic.
Okay, all right, Dr. Kirtane, it has been a pleasure. Thank you very much for joining in and speaking to us about a whole host of ENT issues. We've probably just about scratched the surface. We'll probably get you back on to discuss more detailed issues. Thanks very much for joining in.
Thank you very much for having me on the show.
Quite a bit. So in the last 10 years or so, the non-institutional participation has gone up from around 38% to around 52% or thereabouts. Some on the street would say, well, that's a little bit scary, but those are the data points that's put out by Motilal Oswal. You have the FII flows, they've been quite volatile, and that's been the case. If you look at the monthly flows, the FII flows, well, they've been all over the place. But the encouraging part is the DII flows. And in the first half of this calendar year so far, you just take a look at it, well, the DII flows at the half-year mark are more than what we saw in the entire of last year. So the DII flows have been the key reason that have been driving this market higher. Since we have the retail support, the domestic flows as well, that's led to a relative outperformance. And that's why, the weightage on the MSCI index has moved up from the mid-single digits all the way to around 19%, because when the markets move up, higher market capitalization, that's resulting in a higher weightage. The problem is, the question that people are putting out is, are retailers getting into a bit of a trap? At least as of now, that narrative that India's retailers, well, they buy at the top and they sell at the bottom, well, that's not yet happened. So as of now, it appears that that saying is actually reversed, and this time around, they could possibly get it right. The only problem is 2 factors. We've been talking about PEs and other data points. Just want to highlight India's market cap to GDP. As of now, it is at a relatively higher level if you compare with what we have seen on average of around 85%. So that's one data point. And the other one is the outperformance of the broader markets. Whether you look at the mid cap, you look at the small cap space, well, that's been where the big money is. And that's over a 5-year horizon that I put out these numbers. Well, in the shorter duration, that's in the last 1 year or so, well, it's been even more startling.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, like with the whole body checkup, a lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their veins, arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is I'd like.
Hello and welcome to News Center. I'm Pariksha Dutra. A shocking incident is creating ripples around the world. Former US President Donald Trump has arrived in Milwaukee for the Republican National Convention after narrowly surviving an assassination attempt less than 48 hours ago. A 20-year-old gunman fired 3 rounds at Trump while addressing a rally at the crucial swing state of Pennsylvania. Trump was injured after a bullet grazed his ear. Speaking to the Washington Examiner, Trump said, and I quote, "I rarely look away from the crowd. Had I not done that in that moment, well, we would not be talking today, would we?" End of quote. The US Secret Service is facing several questions after the attempt on Trump's life. The gunman was positioned on a roof just about 140 meters from the podium where Trump was delivering his address. The gunman was killed by the Secret Service officials immediately. 1 person attending the rally has died and 2 others injured. Officials have identified the gunman as 20-year-old Thomas Matthew Crooks. Investigators believe he acted alone and the motive for the shooting remains unclear. Amid this backdrop, Trump is in battleground Milwaukee, which is a crucial swing state for the first full-scale Republican National Convention in 8 years. This is the event where the Republican Party is expected to confirm Trump's candidacy for the White House. Nikki Haley, the former U.S. ambassador to the United Nations, is scheduled to speak at the convention today. The 4-day event is set to culminate with an address from Donald Trump on Thursday. In a rare Oval Office address, President Biden unequivocally condemned the attack on Trump and said politics should never become a killing field.
Yesterday's shooting at Donald Trump's rally in Pennsylvania calls on all of us to take a step back, take stock of where we are, how we go forward from here. Thankfully, former Trump is not seriously injured. I spoke with him last night. I'm grateful. He's doing well, and Jill and I keep him and his family in our prayers. There is no place in America for this kind of violence, or for any violence ever.
NBC's Jay Gray joins us now from Butler, Pennsylvania, the scene of the tragic incident. Jay, tell us more about the investigation so far.
This area, the scene of Saturday's rally, is still locked down. Multiple federal investigations focused on what is now a crime scene. The FBI working to learn more about the 20-year-old suspect in this attempted assassination, Thomas Matthew Crooks. Described by classmates in high school as a bit of an outcast, a loner, someone who they say was occasionally bullied. That while Homeland Security and now independent investigators are looking for what may have led to what many in law enforcement are calling a catastrophic breakdown of the former president's Secret Service detail. Former President Trump continuing his schedule in Milwaukee today just ahead of the start of the Republican National Convention there, saying that he won't allow a, quote, shooter or attempted assassin to change his schedule or anything else. President Biden addressing the nation last night, calling for calm, calling for an easing of tensions in what has been a very vitriolic political campaign season as we now move into the conventions over the next couple of weeks. We know that the FBI is continuing to reach out and try and find out anything they can about Crooks. We know that his family is cooperating with this investigation and that his cell phone and other electronic equipment now at the FBI lab in Quantico, where it's being reviewed. The hope is that data can help to provide some information toward understanding a motive here.
So how will this incident impact the U.S. presidential election? To discuss that and more, we're now joined with former diplomats, Ambassador K.C. Singh and Ambassador Meera Shankar. Ambassador Shankar, if I can begin with you, how do you think this will raise questions for the U.S. Secret Service? Now, here you had a shooter who was 150 yards away on a building, on a rooftop, and he fired a shot which could have been fatal for Donald Trump. It pierced his ear. It was a narrow save. What kind of questions does this raise? And according to past precedents, what is the action that could have been taken now against the authorities?
Well, I think we have to wait for the full result of the investigation.